Yes. Welcome everyone to ABG Sundal Collier Investor Day. Today we have 36 companies presenting from 8 o'clock in the morning to 5 in the afternoon. You can follow this all live on Introduce and also watch the clips afterwards. My name is Victor Kruger. I'm an equity analyst at ABG and I am part of the real estate team. I will moderate two presentations today. The first one being Catena Fastigheter. And because of that, I will now welcome them as the first speakers with the CEO, Jörgen Eriksson, and the IR, David Silversjö. Welcome.
Thank you very much.
Thank you.
Welcome to Catena in this presentation. My name is Jörgen Eriksson, the CEO, a new role for me since the 1st of November 2020. And I have been at Catena for about 5 years. And this is my colleague.
Yeah, my name is David Silversjö. I've been in the financial industry for 10 years and 10 years in the real estate industry. I've been with Catena for the past 3 years, working with investor relations and funding issues mostly.
Next slide, please. And here are the contents for today. So very briefly about Catena, the performance and operationals and so on. So we can go to next slide, please. Catena, we want to link the Scandinavia cargo flows. We have the famous logistic triangle in Sweden from Stockholm to Gothenburg and Malmö, and from Malmö up to Stockholm. And then we also are operating in Denmark, and since we last week did some acquisitions of a portfolio in Denmark, so we can see it's an exciting area for the future. We have very long and reliable relationship with our customers, and we have an eternity perspective of our properties. We also deliver very strong and durable cash flows. Next slide, please. Here are some figures from the Q4 report. We have about almost 2 million square meters lettable area. We have a value of our properties around 19 billion SEK, a very large letting ratio of 96.2%. Can also mention that we are a very small and effective organization with only 46 employees. We work very tight with our customers, and we have a very fast-footed when we are to make decisions about new deals and so on. We are listed at the large cap at Nasdaq, and the market cap is around 15 billion SEK. Next slide, please. And next slide again. Here is a history of our profitable growth. We have a compounded annual growth of the profit from the property management. It's an average of 14%. The earnings per share has increased by 41%. And now the dividends this year is proposed from the board to be 7.50 SEK per share, and that means that the annual growth have been 20% the latest 5 years. Next slide, please. There are the operational review from 2020, and the rental income is almost 1.3 billion SEK. It's a 7% growth. The NOI is around 1 billion. It's an 11% increase. And the very important figure of the profit from the property management is also the same, almost the same as the cash flow we can generate, and it has increased by 15% year to year. Next slide, please. As I mentioned before, we deliver a very strong and durable cash flow, and our target is to have more than 50% off from the income will be the result of the profit management. We also have the goal to deliver 50% from the profit of the property management as a dividend, less the standard tax. Next slide, please. Here is some of our customers. We are very proud of our customer portfolio. As you can see here, it's a name like a DHL, a PostNord, very famous and strong customers in the transport section. We also have a lot of customers from the groceries in Sweden, like Inga, Coop, and Axfood. And of course, we have lots of customers related to the e-commerce. Next slide, please. Here are some figures about the letting operations, and we have a positive net rental, as you can see, of 2020. The WALE of the contracts is around 5 years. And we have a lot of contracts that are expiring from 2026 and after that. Next slide, please. And next slide again. I give the word to David.
Thank you again. And once again, morning everybody. Just some short comments about the valuation of our company. We have reported an EPRA NRV per share growth compounded annually of 16% over the last 5 years. So obviously there's been a very good trend in this segment, as well as we have been fortunate enough to be able to use that trend for our benefit. Return on equity on average has been between 17 and 18% over the last 5 years. Yeah, next page, please. And I hope that we can't see the pages in front of us, so I hope you have the page number 14 in front of you guys. Just also some short comments about our property and the yield. In 2020, we reported an EPRA net initial yield of 5.5%. Obviously, we have seen some decompression over the last years, and still going on, I would say. The demand for logistics properties is very high from the investor collective, as well as from the occupier side. And as Jürgen mentioned, our property value is around 19 billion at the moment. Next page, please. Just some words about our debt management and the capital structure. Our loan to value was reported at just over 52% in our from our Q4 report. And over the years, it has developed from around 70% in 2015 to 52% now in 2020. And the cost of debt has also decreased over the years. Capital structure, we reported an equity ratio of 37%, just over 37%. We have a financial policy to maintain at least a level of about 30% to remain safe. Next page, please. On our funding structure, we reported an average debt maturity of 2.2 years with an interest maturity of 3.1 years. And excluding our commercial papers, we reported a hedge ratio of 66%. As you can see from the slide on the left side, we have almost 3.5 billion to refinance over 2021, which is a rather high amount, obviously, but we have already have 2 billion been approved for refinance, and we feel very comfortable going forward. Basically, all of our ongoing discussions with banks is going very well, and we feel there's lots of capital to borrow right now. And next page, please. And we can have next page once again. Just a few words also about our sustainability work. The sustainability is one of our 4 prioritized pillars in the company. So that's one way for us to demonstrate the importance of sustainability going forward, obviously. During 2020, we did a lot of efforts to align with some reporting standards. The EPRA sustainability standard was one of them. We have been doing a few workshops to comply with the TCFD on climate risks, and hopefully we can publish the results from that during spring in 2021. We have also been able to have our goals for GHG emissions to be approved by the Science Based Target Initiative to align with the Paris Agreement. So we're very proud of that, obviously, and that's also obviously important to be part of modern science going forward. Yeah, next page, please. And I hand over to you, Jürgen.
Yeah, thank you, David. And I will take the next page again. Here are some of our development projects in progress, and as you can see, we have some of them are completed around the Q4, and some of them are ongoing and will be completing during 2021. We have also press released about Morgongåva. We will do a new project beside Aktier. It's one very strong e-commercer in Sweden. We also have a new project up north in Luleå, where we will complete it in the Q4 2021. So here is a remaining investments of around 400 million, and it will add 29,000 square meters. Next slide, please. And next slide again. As I mentioned before, we have a lot of customers related to the e-commerce, and as all know, the e-commerce has a very strong growth in Sweden. And so we can see the underlying demand for our type of properties is very strong for the moment. And we also can witness that of our letting ratio that is over 96%. And we can see that here will come more projects in the future, since many of our customers, they really need more spaces due to the strong growth in e-commerce. It's a really strong signal that we can see. Next page. And as I started to mention, that we made an acquisition in Denmark the other week. It is a portfolio of 5 properties in Denmark, and the total investment is around 800 million SEK, and the yield is around 5.5%, with the large tenants of NTG. It's a transport group based in Denmark. And also Daugard AS, that's in the third-party logistic segment. we can see that Denmark will be very interesting for us in the future, since we can see something will happen with the logistics system when the Fehmarn Belt connection is on place in 2029, I think. There has also been more intensive discussions about the new connection between Helsingør and Helsingborg. So we are sure and very convinced that Denmark will be a nice area for more logistic projects in the future. Next page, please. We have focused the latest year on own development projects, since, as I showed on the other page, and a coming project is south of Stockholm, and the position is called Stockholm South. It's an area for us. We own about 450,000 square meters, and we think that we can build around 50% of the area, so around 200,000 square meters. And the planning is on the table right now, and we hope we can start build something and sign some contracts in the late 2021. And this will also be, we hope to do a copycat of our projects that we have had in the south of Sweden the latest year. For example, Sunnanå and Tostarp. Next slide, please. Here are some of the areas that we can have a future development projects. And here is, of course, Stockholm South. We have an interesting area close to the Landvetter Airport in Gothenburg. We have a large land bank in Örebro, which is a very hot logistic area. We have also more land to develop in the south of Sweden, close to Ängelholm, Helsingborg, and in Malmö. And the total land bank is around 5 million square meters. Next slide, please. Yeah, that was all for us, and we look forward to have some questions.
Great, thank you. I was going to ask about Denmark, but you kind of answered that one just in the end here. Is there anything you would like to add there to your expansion? What your plan is with Denmark, and if there is anything additional to say in terms of expanding to that region?
No, I think I said the most, but we see that it's an interesting, of course, the area is very good from the logistic perspective, but also the deal where we can see that maybe the yields are not that low as they are in Sweden for the moment. We think they will decrease and be compressed as they have been here in Sweden. And we also like the finance system in Denmark, Realkredit, which maybe David can tell us a bit more about.
Yeah, no, it's. I mean, it's probably the oldest bond market. It's very transparent, and so it's and there's ample access to that capital market for the sake of our beneficial, and yeah, so obviously that adds to the calculation basically. I also would like to add, which Jörgen didn't mention, you have to look at the greater Copenhagen area as Germany, Belgium, Denmark, and the south of Sweden as one, basically. And there is a lot of things that will happen for the next 10 years. And for one thing, we have, there's talks between Sweden and Denmark to have another connection between Helsingborg and Helsingør, which also will add to this logistics flow in the future. So that's the whole idea, to be present in this location.
That's great. And you mentioned the yields in Denmark versus Sweden. If we look at Sweden, what is your opinion about the yields here right now, and what's your outlook for say 2021?
I think that on the prime logistics, I think that they will can decrease a bit more. Actually, if you compare to Europe, in Germany and in the UK, for example, we have seen yields that are very low. So I mean, with that trend, I think we can see even lower yields at some objects in Sweden as well.
That's clear. Just recently, GLL had their bi-yearly report, and they talked about the strong interest in the logistics market in the Nordics, and in Sweden they talked about international investors coming, or a large interest from international logistics developers. Is that anything you felt in terms of increased competition or even indications of acquisition?
Yeah, I mean, it's, as we are in a real sweet spot, the logistics sector of properties, we can feel the competition for sure. And when there is a prime logistic portfolio for sale, there is a very strong competition. Maybe we are not there right now to buy those portfolios. We rather focus on our own projects and on our own land banks. It's much easier to do the deals. But of course, there is a lot of actors right now to acquire portfolios and also to develop new logistic properties.
And do you yourself also look anything towards acquisition, or is it just, as you say, expanding on your land bank? Just mentioning that Stenhus was acquiring Max Fastigheter or placing a bid last week. It's a market with many actors, and it seems likely that it will consolidate a bit.
Yeah, for sure. But there can also be some delayments in all the processes with the new zoning plans and so on. So if we cannot manage to do some development on our land banks, we have to complete with some acquisitions. For sure, we need to show the market the growth all the time.
How has the Corona situation impacted you here now during the winter, really? So like the latest update on that, would you like to highlight us a bit?
I mean, business related, we are very lucky. Our customers has managed to show even better results overall this year, since they are related so much to the e-commerce and the transport section that are handling all the packages from the e-commerce. But of course, we have some customers that are suffering, but that's just on the margin for us. But on the other hand, it's a challenge for us as an organization to handle all the daily work with some of our employees working at home, and some of our customers who do not want us to have us in the properties for good reason. Yeah,
no, it's a challenging situation. But in regards to tenants, is there anything interesting there? I mean, right now, e-commerce is the largest one. You also mentioned Inga and the bigger food retailers.
Yeah.
Would you like to indicate like any other type of segment that could be interesting, or that is looking interesting, just in broad terms?
I mean, in broad terms, I think we talked about Inga and the groceries. We see that there is a demand of chilled areas, cooling and freezing properties. And in the Europe, we are talking a lot about the new ice age. So the temperated logistic segment is growing a lot, and in Sweden we can see that some of the properties are rather old, so we need new, modern, temperated logistic spaces in the future.
Cool.
Just adding to that, as Jörgen mentioned in one of the slides earlier, when we talked about the e-commerce trend, having a look at the grocery segment specifically, the penetration, for those who doesn't know, is only 2% in that sector, which is fairly low in an international comparison. So there's a rapid growth in that specific segment. The big players, ICA, Coop, as you mentioned, and Axfood as well.
Yeah.
They are all looking into investing heavily in automation and all of the modern facilities you need to be able to offer the modern way of handling groceries in the future, basically.
Great. Thank you for answering my question and presenting with us today. Time is up, and we'll have to move on to the next presentation. Thank you both.
Okay. Thank you very much.
Thank you, guys.
Bye.
Bye.
Hallå, hallå. Kanon, då hör vi båda varandra. Är det Knut och Kristoffer eller vem har vi med oss idag?
Stämmer.
Toppen. Jag har precis haft första presentationen, Catena.
Ja, trevligt. Så de är lite
fastighetsstart på dagen.
Ja.
Vi har ju hela dagen imorgon också med, som ni också ska vara med på. Så det här blir lite uppvärmning för det.
Yes.
Sitter ni på, det ser ut som att ni sitter på Linnégatan. Jag var besökte för 2 veckor sedan, det ser väldigt likt ut.
Ja, det stämmer.
Väldigt fina lokaler.
Ja, jättehärliga. Ja, verkligen.
Lyckas bevara den gamla känslan och så ändå modernt liksom.
Ja, verkligen. De är tuffa.
Hur många
är det som lyssnar, vet man det när det drar igång?
Hur många är det som kommer vara just nu?
Ja.
Jag har inte fått den siffran. Jag vet efterhand så brukar man kunna skicka ut, det varierar lite om det, men det kan vi se till att ni får i efterhand.
Det är inget viktigt, det är bara roligare att låtsas en publik.
Ja. Sen så sparas det online också, så det är en bra kanal efteråt. Jag ser att klockan har slagit, men jag har inte fått något klartecken från videokillarna än, så att jag...
20 minuter. Så att...
Här står det, har vi en klocka där också. Så får man be dem flippa sidor.
Ja, okej.
Bara köra next slide.
Just det.
Och det kan vara att ni inte ser det, men jag hör ju varje gång ni säger det och kommer kunna följa det. På sätt säger man, va? Det är inte någon annan uttal.
Ja, på sätt. Nej. Sen kan ju du hoppa direkt fram då till den här introduction som är nummer 3.
Okej, kanon det. Well, welcome back to our second presentation of today's ABG Introduce Investor Day. We have 36 companies with us today, presenting from 8 o'clock in the morning to 5 in the afternoon. My name is Victor Kruger, and I'm an equity analyst for the real estate team at ABG. Our next presenters is Fastator, and we have the CEO, Knut Posett, and the CFO, Christopher Strömbäck, with us today. So I leave the word over to you guys and bring it on.
Okay, thank you, Victor. We'll start at the slide number 3, introduction. My name is Knut Posett. I'm the CEO since 5 weeks ago at Fastator. I took over after Joachim Kyllenstierna, who is the founder of the company. Fastator is an investment company in real estate, which is the only one in the stock exchange today in Sweden. And we build. Our goal is to build portfolios with a certain niche of segment for real estate. We have 5 portfolios at the moment, and our strength is to find under-rented, underpriced, and under development in each segment to develop and make better. And we have one company, Offentliga Hus, that we can show a little bit later, that have gone through this trip that is typical for what we want to accomplish. We are also, as an investment company, strong on finance when we can build a small portfolio with the finance from Fastator, the mother company. We have also a property management company, Nordic PM, which also helps us with the property management through all the countries, so we can buy properties in whole Sweden. And also the management in Fastator has also a very good network and experience, and can source a lot of deals from off-market deals, and of course also from the market. That was a short introduction, and then we go to the next slide, and that's also showing the portfolio of Fastator. As I said, we have 5 portfolio companies. We had 6 before Christmas. Sold this Offentliga Hus, which was community service properties, and Christopher will tell a little bit more about that deal. Then we have the 5 other portfolio companies, and shortly introducing them is Point, which is buying central properties in the very center of small and medium-sized cities in Sweden, and then develop them. They are today commercial properties with stores, and we will develop them both with that, but also to build residential on the roof. I will tell you more about the companies further on, but shortly introduction. And then Företagsparken, which works with properties as a light industry properties throughout the country. Studentbostäder, which is then student accommodation throughout Sweden. Nordisk PM, which is the property management company. And the last one is one property in Nacka that we have a joint venture with, but it's also a very attractive situation in Nacka where the new subway will come.
As mentioned, we sold our largest portfolio company just before Christmas. And since then we have a very large cash position of approximately 1 billion. And that is almost half of the asset base, as you can see on this slide. The remaining part is 22% point, 12% Företagsparken, 12% Studentbostäder, and then together Nordic PM and Fastater is 7%. Going forward, you should expect that we will use this cash to invest in mainly in our existing portfolio companies, but maybe also in one or two new portfolio companies. We'll see about that. You can take the next slide, please.
Yes, and here we have our board at Fastater, which is a board that is both politicians and also from the business, and interesting mix that actually we have put together for helping us to see in the future and follow trends and be early adapters in new segments in the real estate business, and that helps us a lot. Some of the names you probably recognize. The management team is also have experience from bank and from different companies and also real estate. All the daughter company or portfolio companies has also a professional board and also a management of their own. You can change slide.
So we have followed our strategy since we started in 2011. So we have founded companies, we have made strategic partnerships, we have acquired, invested in both properties and portfolios and in companies. And we have also been quite active on the capital markets since we listed in 2015. We have made bonds and we have made IPOs of portfolio companies. And this has resulted in a strong growth in net asset value, almost 200% over the last 5 years. And we have had a profit or earnings per share of, on average over the last 5 years, of just above 3 krona per share, and over the last 3 years almost 5 krona per share on average, compared to our current share price of 20 krona per share. Next slide, please. And next again. So a short overview of the large transaction we did just before Christmas when we sold our largest portfolio company, Offentliga Hus, to SBB. It was a company we started already in 2011, started it from scratch, built a company, built a brand, built the organization, and of course acquired a lot of properties during the years. And then in October last year, we IPO'd the company. We did that at 13.4 krona. And then just 2 months later, we got an offer on all of our shares from SBB of 15.4 krona per share. And we then sold our entire holding. You can take the next slide.
And this is the management team I mentioned before. I started here 1st of February. It's not so much more to say, but also one part of work that we're doing now is taking the company to the main list on the stock exchange. We're now at First North and are heading for the main list during this summer. You can change slide 2 times. And then the first of 5 portfolio companies is Point with a portfolio of real estate of 1 billion, a little bit more than 1 billion, spread over the country. And this company has their mission to buy city center properties that could develop, and as you see in the picture, in the old times there was a lot of buildings, and then in the 60s, 70s tore them down and built like a bunker in the middle of a store bunker in the middle of the city in medium-sized cities in Sweden. Was a chain called Domus that built these buildings, and they were modern, what they thought, and had also parking on the roof. And now, when we discussed the development of stores and trade and e-trade, we saw that this is a possibility. These buildings are a possibility because e-trade has a problem with returns, that is sending the package back, and also the contacts with the customers. And we see that that's needed in all cities in the future. And what also is good with this building is that there's a possibility to build residential on the top of it, which helps both, of course, it's a value development of building the residential, but also helps the stores and commerce in the building. And then you can see the second picture is on the store as it looks today, or the building as it looks today. And when we start, hopefully this year, to build the residential, which will take 1 year, then the building will look as in the third picture. You can change slide, and here you see a little bit what I talked about, the business model of acquisition, new letting in the store part. We have Systembolaget, which is the liquor store chain in Sweden that has been very impressed of our concept and follow us in several buildings, and they are also very a key tenant that takes also grocery stores with them, which is also an important part of the new tenant mix in these buildings. Zooming plan in these areas has been very easy, actually, because it's the ugliest property, probably the ugliest property in the city. And the city council really want to change this situation and want to have a change. Also that you're scared about the stores and that development that really helps the city center of the city. So it's a very positive process. You can change slide. And here is a picture of the board. As I said, we have a creative board in all the portfolio companies with experience from politics and business, and also from the larger chain of commerce in Sweden. You can change the slide.
Just a short overview of the financials of Point. As mentioned, property value of 1.1 billion. It's funded by a mixture of equity, shareholder loans, and actually bank debt and a bond. Quite moderate debt levels of just about 50%, and we own 100% of this company, and hence the net asset value of approximately 600 million is something that belongs to us. You can change slides.
And again. The second portfolio company is Företagsparken. As you see in the picture, we focus on light industry properties in light industry areas in medium-sized cities in Sweden. We have Nordic PM helping us with the property management, so we are spread all over Sweden, but mainly in the middle and south. And the business model here is that we think that light industry properties in these cities are underpriced and also under-rented, and have also proved through rent discussion and also certain new rents that are quite higher than we bought when we bought the properties. And also here we have, you can change slide, also here we have a board that are from these areas, or are experts in this area from business companies. I would also say we have today 1 billion of property volume, and are expanding probably with 1 billion each year and heading for up to 10 billion. Yes.
You can change slide, and on next slide you can actually see those figures quite small today, but will grow. Also mentioned it's quite low debt level, only just above 30%, which is a bit too low for this kind of properties, but it will grow as we grow the company. You can change slides again to our third holding company, portfolio company, which is Studentbostäder i Sverige, SBS, which is a student housing company. It's a listed company. It's the only listed company in the Nordics which only focuses on student housing. We founded the company in 2018 together with two other real estate companies, Amaston and SBB. And the company has since grown quite substantially. It had 900 million in asset value at that point in time, and now has 3.6 billion. So student apartments throughout Sweden, just above 4,000 apartments as of today. But in addition to that, they have over 2,000 apartments in property development phase. So the company will grow in the future, both through acquisitions and through development of its own development portfolio. You can change slide. The company was listed as late as December last year, and they made it through a reversed takeover of another listed company, and just a few weeks after that made their first share issue of 250 million, of which both existing shareholders, us included, and new investors came in. You can change slide. The company is headed by Rebecca Idenhout. She has headed the company since 2018 when they started, and she has extensive experience from Rixen, among other things. And the board consists of Björn Rosengren, Sven-Jan Svensson, and Karin Krok, with experience from different sectors. On next slide, you can see that we are the largest shareholder with 21% of the shares, followed by SBB 20%, Phoenix 16, and Amasten 12, and the remaining 31% is among the public. Quite straightforward balance sheet, 3.6 billion in properties and equity and bank debt on the equity and liability side. You can change slide again.
And then we have Nordic PM, which is the property management company. Very short, they spread all over Sweden. They have over 2 million square meters that they manage. They have Fastater as a customer and or Point and Företagsparken, but also several external larger companies as customers as well. A company that's growing rather fast. And then we're going to the next slide and the last slide, which is the joint venture that we had in Nacka together with Genova, and is a strategic property that has cash flow today because it's a store in the property today, but will be probably residential for in the future, and it's situated very near to like 100 meters from the new subway in Nacka. That was about it.
That was.
Thank you. You really interesting walkthrough of your various holdings, and my first question, instead of going too specific right away, I just wanted to hear in regards to COVID. Could you summarize the impact on your organization, mostly in terms of holdings?
Yeah, it's probably the only company that has been affected is Point, and Point is also. There is some. We have given some discounts on the rent for some smaller tenants, which together was 1 million, and we had a compensation from the state of 400,000, probably a little bit more coming. So the economic damage is very small. We can also see that the turnover for the stores is down 7% of all that, which is not so much compared to maybe city center in Gothenburg or Stockholm, which also make us, that is sad, but it's also feel us a bit strong that these city centers in middle-sized, small-sized cities really are needed.
And probably even more now when that's the trend during COVID. Do you fear that's when returning more to normal life, that these city centers in the smaller cities will go back a little bit in turnover and in traffic?
The opposite. I think it really shows that it's needed, although you can't visit it. Still, the turnover is really strong, and when you can visit it, you really go there because that's the center of the city. It's really the point where you go. So no, the opposite.
Yeah, great. I just wondered about trends. That's the core of your business to spot new trends. And is there any segment that you don't have in your portfolio right now, or any type, I guess, segment? You don't have to be super specific, but if you just want to touch on a few segments that are interesting, would that be anything you could answer to?
I don't know, but I can say that we, of course, looking at segments that has been affected by the COVID situation, both negative but also positive. and we think that the COVID situation had also made some trends a catalyst for seeing what's happening in the future. Very unspecific political answer.
Still gave something. Knut, for people who don't know you, would you like to highlight something about you, something about your background, about your character, and what you can bring to the table with Infrastator?
Okay, thank you. Yeah, yes, I've been been in a company called Detta for almost 16 years, and through that company we have done a lot of listing and also built portfolios, rather similar to Infrastator but in another way. And we have listed several companies. The first company that we listed was the Carnegie, which is the largest private owning residential company in Sweden, now called Hembla. We founded also Stendörren and listed that company. Agora, which was city centers, actually a little bit like some of the properties from Agora is actually in Point today. And also we were with Ilya in starting SBB. In one of our portfolios went into SBB in the beginning. So I have been in a lot of situations of listing larger companies in the real estate market in Sweden, and I think it's great, and I think developing is very interesting, and also this have an extra like this point development, which is very interesting for society.
Very interesting, and thank you for being with us today. Time is running out, so we'll have to move on to the next presenters and presentation. But thank you.
Okay, Victor, thank you.
Thank you.
Hello, guys. Okay, are you counting us down?
Yep. Start 5, 4, 3, 2, 1.
Hello, this is Laurits Kjærgaard, analyst at the ABG Copenhagen office. It is now my pleasure to welcome MT Højgaard Holding, represented by CEO Morten Hansen and CFO Martin Solberg. We have research on our Introduce platform on the company, which you have free access to, and the company slides should be brought up in front of you. But without further ado, welcome Martin and Morten. You should have the slides in front of you now. You can please begin.
Thank you.
Thank you, Laurits. Just a short agenda on slide 2. We will make a short introduction to MT Højgaard and the changes that we have been undergoing the last 1 year. We will give a small input on the trends and the new orders we are seeing in the market. Then we will take you through financial figures, and finally we will look into outlook. Page 3, please. The first 2 slides, we primarily try to give a little bit of history what has happened the last 1 year. MT Højgaard is coming out of is very much in a turnaround, and we are coming out of a situation where we have been suffering major losses back in 16, 17, 18. And due to that, we introduced a new group strategy from the beginning 2020, a strategy that is running for 3 years. Part of the strategy is that we have separated the company into 6 individual business units with high independency and high ownership, and that is basically to create maximum ownership for the projects in the 6 business units. We have 6 of the 5 units are focused primarily on Denmark, and largely we have MT Højgaard International, where we have consolidated all our international activities in one company called MT Højgaard International. MT Højgaard International is primarily related to Faroe Islands, Greenland, and then we also have small projects in the Maldives and a setup in Portugal. Next slide, please. If you look at slide 4, that is showing the legal structure, and that is important to keep that in mind. If you go 1 year back, MT Højgaard Denmark International and Project Development was one company, and that has been demerged into 3 individual units to reflect our strategy for the group. So we are sitting with a frame strategy in MT Højgaard Holding, and then we are sitting with 6 individual strategies in the 6 business units. When we started the strategy in 2020, we were 7 business units, but part of the focus of the group, we sold Lindbro, which is a technical supplier that was sold during Q1. We have in 2020 and also in the beginning of 2021 have a high focus on in the individual 6 individual strategies and make adjustments, try to optimize the portfolio of companies. And that is including selling part of the business in Ayers Hoist. We have also in Q1 sold the crane activities, both activities fairly heavy on investments, and part of our business where we saw the lowest return on our investments. We have last year during Q2 made a small acquisition in Greenland related to Madu, and we also made a small acquisitions in the Faroe Islands in Q1 related to RTS. Relatively small, but strategic investments to fulfill our supply for a number of key components both in the Faroe Islands and in Greenland. In Q1 we have made a major acquisition, Ravnstrup. Ravnstrup will be anchored and be a subsidiary of Inga Petersen being the most profitable unit in MT Højgaard Holding Group for the last number of years. The acquisition of Ravnstrup will support a further growth of Inga Petersen and will support on the geographic coverage in Denmark, and also add a service unit leg that will create extra focus on projects in the insurance market and in smaller service jobs. It's important to mention that we as MT Højgaard Holding Group are not sitting with a clear M&A strategy. This is not a picture of us sitting with an M&A strategy, but we have a focus in the market that if there are strategic matches in the market and we see a fit with one of our 6 business units, we will be open for smaller acquisitions as we have seen here. Next slide. This is our key slide from Q1 2020 when we implemented our new strategy. We are of course playing a little bit with the word sustainability, both because we're seeing a high focus on sustainable projects in the market, but also the fact that we had to create a group that had a sustainable platform to work on going forward. We have, as I mentioned before, seen major losses from 2018 and further back, and we have to get out of that situation to create a sustainable company. We are working with an aim to deliver 4% EBIT in 2020, and we believing that we are following that path and the trend we have been laying out for the group. It's important to mention that the 4% is mentioned without mentioning anything about turnover, and that is simply to give a clear signal both to the market but also internally in the company that we will go for the 4%, and this is not a top line focus, but this is about setting the company up for the future, and the 4% goes before anything else, also top line. Part of our travel, we have 5 strategic focus areas, and in many ways those 5 strategic areas now are slowly embedded and developing into be a key culture for the company. We are highly focused on sustainability. We are seeing a high number of projects and high number of demand of projects including sustainability. We need as a contractor to work very hard on innovation and processes to optimize. We are in a market with low margins, and we need to be very innovative and have very strong processes both to increase margins but also reduce risk. We have key focus on cooperation. Sounds very simple, but we are coming out of a group where we need to improve and develop and practice developing better and cooperating better in the group, but also with our customers going forward. Both to optimize, but also to reduce risk and basically create a sustainable future. None of those issues we are talking about now are going without our employees. We normally saying that we as a company are good at delivering projects. We do not have any products. We are basically specialized and should be the best to deliver projects for constructions and development. And for that we need the best employees in the market to drive such big projects. Important to say that our strategy is a relative short-term strategy. It's a 3-year strategy, and of course it's 3 years looking at where we're coming from, some relative short-term, because we have to get out of the situation where we were in 17, 18, and 19, and that is our focus for now. Going to slide 6, market trends. We are seeing a fairly strong market for the projects we are delivering in MT Højgaard, and it's important to mention that when we get a lot of questions, what kind of segments are we seeing projects in? MT Højgaard are in that positive situation that we deliver projects both to the public projects. We deliver projects to the private sector. We deliver projects to the big pension funds, which is still seeing all of them are still seeing a relative high investment levels. In the beginning of 2020 or in Q2, Q3, there was a lot of uncertainty on how the investments will flow, especially from the private investors. But we are still seeing all 3 segments being positive in investments towards the end of 2020. Part of the support, of course, from the political support, part of the COVID-19 is that we are seeing an increased focus on renovation jobs for the big public projects, which seem to continue also into 2021 and 2022. As mentioned a couple of times, we are seeing increased interest for projects including sustainability, and that means basically including certificates on DDB, etc. And with our internal resources, our internal engineering, we can support such projects, which is today for us very, very positive. Important to mention that in all major public projects in Denmark, we are seeing an element of sustainability, and we as a supplier have to justify and being part of the journey to deliver more sustainable projects. We are in general seeing projects are increasing. Also, we are seeing projects in size. We are seeing more focus on corporations. If people have been following MT Højgaard the last couple of months, you also see big partnerships with the first one we call Civica, which is projects running over 4 or 5 years. And last week we saw a big partnership project also for Copenhagen, for the region of Copenhagen. So in general, we are seeing projects are increasing in size and complexity, and we are seeing more focus on corporations, and we are seeing more focus on an interest in getting the entrepreneur in earlier to develop the projects together with the customers, and by that trying to reduce risk and make the projects more foreseeable. It's positive for a company like MT Højgaard to see such projects running over 4 or 5 years that are improving our possibility to plan and optimize our resources going forward. So we are very focused on that and support it a lot. Slide 7, please. Just to mention some of the key projects, and I have already mentioned some of them. We mentioned the big partnership for the capital region of Denmark, around 2 billion Danish. We also mentioned the Civica, the big project for which is basically out of Fyn, location out of Fyn. Then we are seeing a major project for DSB, building the new shops, workshops for the new trains, which was booked in Q4. And I have to mention that all those projects, when I'm saying booked, that means that we're not booking the full value. So the 2 billion for the capital region of Denmark, 3 million for Civica, and the 1.6 for DSB is not sitting in our backlog today. We will book those orders as they are coming, and that will be over the next couple of years in phases. We're also seeing a key project for the waterfront of Copenhagen. We call it Papirøen. That's gonna be a flagship project for us over the next couple of years. We have seen major projects for renovation and refurbishment in Bellahøj. And finally, and just before New Year, between Christmas and New Year, we were so lucky that we got the new buildings for the airports in Greenland. It is like that we are today having 3 airports getting built in Greenland. 2 of them are already signed, and the biggest one in Nuuk, we have been the preferred supplier to build the buildings for the Nuuk airport. Next slide, please. Just alone on Q4 figures, we have basically been following the trend, or basically been following the budgets we laid out for 2020. Sounds easy, but for a company like MT Højgaard, it's super important for us to show that we can deliver on our guidance, especially looking at the trend we are coming out of. So we are pretty happy with the situation. Very much supported by strong order intake in Q4. Keep in mind, we were guiding on 5.96 billion in turnover, so we should be sitting on an average order intake of 1.5 per quarter if we should be stable going forward, but with an order intake in Q4 more or less double up compared to our run rate, we are super pleased, and that should be compared with the last 4 or 5 months where we basically been putting in average around 1.5. We are in general seeing a very strong pipeline for the coming month, and also have good expectations for Q1 and Q2 when we're looking at order intake. Obviously, it is very positive for us going into 21 and also looking into 22 with such a strong order intake in Q4. The unfortunate part of it is that the order intake during 2020 has been coming in fairly uneven during the year. So we have seen a big pipe, as you can see here in Q4. Half of that is going to MT Højgaard Denmark. And it's important when people are looking at a company like MTH, from we get a job till we start basically the work on the construction site, typically it takes somewhere between 6 and 9 months. So from an order is signed in December till we are having the full job up and running on the construction site, we are basically into August, September, and that will create a slow start for us in 2021. Next slide, please. Looking at the year, we delivered a revenue of 6 billion, which has to be compared to our guidance of 5.9, and we delivered slightly better than our guidance, 129. The difference you are seeing on between the 129 and the 87 are basically PPA depreciations, purchase price depreciation, and that is purchase price depreciation coming from the merger in 2019. And that is also why you are seeing MT Højgaard for the last year in 2020 reporting both on MT Højgaard Group and MT Højgaard Holding Group. And here I have to mention that MT Højgaard Holding Group will be the future reporting unit and is the unit that is sitting on the stock exchange. Why are we then bringing up the 129 on MT Højgaard Group? And that is where we are coming from our history, and to have comparison figures in 2020 to 2019, we have to look at MT Højgaard Group. In general, we have throughout the year got a lot of questions related to COVID-19 and what is the impact of COVID-19. And you can say the fact that we are first now starting of talking about COVID-19 on slide 9 is probably also indicating that we are not seeing the major impact. Obviously, we had a lot of uncertainty, especially in Q2 during April and May. But we have throughout the group been able to maintain full production on our construction sites in Denmark. We have had some challenges in projects in the Maldives. Obviously, that there has been major setbacks in the beginning of the year on tourism, but we are also during the last quarter and the last couple of months seeing tourists coming back to the Maldives, and the projects are running. Projects for us in the Maldives are probably 50-50 related to the tourism, but also infrastructure, small harbors, small airports, etc. And we are slowly seeing that market picking up again. We have also seen negative impact on COVID-19 in Portugal and the projects from SIT in Africa. But we have seen, again, the last couple of months, all projects in Africa up and running. And we are also slowly, but we are seeing slowly pick up in Portugal. Portugal have been heavily impacted, including construction sites. But more than 90% of all our construction sites in MT Højgaard are sitting in Denmark or Greenland or Faroe Islands, and we have on all those sites, except smaller adjustments, been able to have full production throughout the year, and we are of course very pleased with that. And all indication is that it will continue. Of course, not meaning that we have had some challenges with supplies, but we have been able with our organization and the agility from our employees to move things around and keep the momentum. We hope we will continue with that throughout 2021. No further comments to that. Slide 10, please. Yeah, that is basically the order intake, and of course mentioned from earlier that the 2.9 million. Important to see the backlog is increasing 1.4. That is a major increase over the last 12 months, and that of course is giving us some comfort for the future. That major increase in backlog should also be seen that we have spent a big part of late 2019 and 2020 taking cost out and reduced significantly on our capacity cost. So with the lower cost base and the higher backlog, we are relatively positive on 21 and 22. It also had to be mentioned that we had a strong pipeline, and we also have a relative high, we call it projects, basic projects we've been winning, but not yet contracted of 2.5. Major part of that, of course, is DSB, but that level is also higher than normal. Going into next slide, please. Going into the individual units, I think our primary focus on not on all six due to time, but MT Højgaard, Denmark is obviously where we have our major challenges from the history. That is also where we have seen big losses on projects the last number of years. 2020 is in many ways a turnaround year related to MT Højgaard Denmark. That is also a year where we've been changing the management of MT Højgaard Denmark. We have a new CEO, Carsten Lund, and a new CFO of MT Højgaard Denmark. Both of them started during June, July, and they have been adjusting the organization and the focus of the organization, reflecting the demand and reflecting the need of the market, but also basically because we need a major change in MT Højgaard Denmark. And that is what we especially can see from the last 6 months, where we also have a more conservative approach to the projects. MT Højgaard Denmark will still be in some kind of a transition year in 2021, keeping in mind that 50% of the order intake was alone taken during Q4, and that means that MT Højgaard Denmark will have a slow start on 2021. We have fairly high expectations, and we are probably more confident than ever on MT Højgaard Denmark. We are seeing a management structure starting working. We are seeing the new leadership taking full responsibility, and we are seeing positive feedback from the market on new orders, both in Q4 and we're also seeing it in Q1. And we are seeing a very positive pipeline developing for MT Højgaard Denmark. International are continuing good momentum from the last 6 months. Keep in mind that earlier we had our international activities spread throughout the group. Today we have them all consolidated under one, and they have been on the road for 12 months. And we are slowly seeing a positive development. We are also in Q1 seeing the first new big orders coming in on Greenland, and we are supported by good activities both on Greenland and Faroe Islands. And we also have okay expectations to sit in the Maldives. Project development. We closed the year of 2020 positive. We are seeing a number of key projects for us developing positive here in 2021. We are still having a very high backlog of properties basically sitting on our books of more than 500 million. And it's going to be key both in 21 and in the future to make that start turning as much as possible. But we are seeing a demand for our products, especially when we combine it with sustainable buildings. Next slide. And I'm only focused on Inga Petersen. Inga Petersen have over the last couple of years seen a very positive development. I know that they're saying minus 10% here up on revenue, but that was basically a timing issue on Q1, Q2. We have seen a huge increase in order book throughout the year with close to 50%. And today, Inga Petersen are sitting with a backlog of 3.7 billion, and that is without the partnerships as Civica. Inga Petersen is now also included the Ravnstrup, and we have high expectations to Inga Petersen over the coming years. I will just move on to the final slide 14, due to time, and our guidance for the year. We are increasing our expectation to 2021 to 6.8 billion and an earning of 160 million. The increase from 5.9 to 6.8, 50-50 into buying revenue coming from Ravnstrup, and the other 50% are organic. I'm sure that there will have been people have expecting us delivering a higher EBIT for 2021, keeping in mind that we maintain our strategic guidance on 4% in 2022. But due to the timing and the order coming in late in 2021, we are a little bit conservative on our EBIT figures. Ravnstrup and RTS Faroe Islands will be consolidated from the 1st of March, and Ravnstrup we have received last week the final approval from the competition authorities, and we are still awaiting in the next week's time on RTS. That is basically that's the info from us.
Super. Thank you very much, Martin. Maybe just one question from my side. Obviously, one of the assumptions associated with your 2022 targets is that the old projects and the MGO replacements in MT Højgaard is sort of dealt with appropriately. What is your confidence that you've looked through those contracts and we won't have any more surprises for these, let's say, troubled contracts?
First question related to the MGO. I think we are 2/3 into those projects, and we are fairly confident on that front. And those projects should be closed Q1, Q2 2022. Related to other projects, I believe we have been deeply into all the projects, including with our auditors here at year-end closing. Obviously, there are also projects that are huge and have an element of risk, and 3 of the projects are major projects in the hospital sector and Niels Bohr Institute in Denmark. So there's of course also an element of political risk, but we believe we have a more conservative approach to our projects developed over the last couple of years, and we will continue having a conservative approach to that.
Okay, and obviously for international investors, they know MT Højgaard because it's been around for around 100 years and has been very involved in major infrastructure projects. Are these still interested for you, or are you now trying to turn more towards the, let's say, collaborations that you've been winning here in the past couple of quarters?
I think to be honest, both, and I think it's important to before I mention private pension funds and public projects, I think it's also important to mention that we would like to see a good order intake and a stable backlog of projects, 200 to 300 million. We have also seen now that MT Højgaard can take bigger projects like the bond for DSB. So we are seeing projects above 1 billion. And of course, we would like to see more of the partnerships, as I mentioned, that give us some time for planning when we are seeing those projects for 3-4 years. And typically, if we get those partnerships up and running in the proper way, we're also seeing typically lower risk, both for us and also our customer in such projects. So that is important.
That's super. Thank you very much for your time today, Martin and Morten. Have a great day, and stay ahead. It's wonderful to see the wonderful turnaround process that you're engaging in. So thank you very much.
Thank you.
Thank you.
Right.
Good morning and welcome to this presentation with Nordic Waterproofing. My name is Eric Castle. I'm an analyst here at ABG, and today I have the pleasure of hosting Martin Ellis here with us, CEO of Nordic Waterproofing, and he'll give about 20-minute presentation, and we'll do a short Q&A after. So without further ado, please go ahead, Martin. The floor is yours.
Thank you very much. Morning, everybody. Thanks for listening in. We can move on to page 2. Thank you. Our business case is started with a core business, waterproofing material, bitumen-based or synthetic rubber-based, which we manufacture, and we also install ourselves in several countries. On this basis, we've developed a larger portfolio over the last 4 years, which is very much geared towards sustainability. Our core material, the legacy business of waterproofing, is extremely durable material. We are talking about 50 years plus, so that in itself obviously is a positive in terms of sustainability. But over the last 4 years, we've increased our portfolio in basically 3 directions. The first one is wood-based prefabricated elements, which we manufacture and which obviously are a CO2-friendly solution. Wood actually absorbs CO2 versus cement, which produces a lot of CO2. So a very favorable solution in terms of climate change. The second diversification we've made is green infrastructure, basically green surfaces on buildings, on roofs, but also on public areas. We've entered that business almost 3 years ago and expanding it. Basically right now mainly in Sweden, but we have a focus on all the Nordic countries. And the third avenue we've started in Finland last year is solar panels, which we install, obviously, a clean energy solution. Next page, please. So this gives you just a quick image of where our products and solutions go on a typical flat roof building. That's the biggest part of our market. And you can see that we are involved in pretty much everything on the outside of the building. Bitumen membranes, synthetic rubber membranes, insulation, which we don't produce but install, and all sorts of accessories which go into waterproofing such a building. And as I mentioned, also prefabricated facade and roof elements, which we install on flat roof buildings. Next page, you can see a pitched roof, sort of a family type house, which we also address in our offer. And again, roofing obviously is the key part of what we're doing there, but we also expanded into the surroundings of a house with ponds, for example, a business which we do in Benelux, where our waterproofing material allows to create either a pond, landscaping pond, or a swimming pond, which is a solution where you basically replace a swimming pool with a more natural environment. You don't need to use chlorine, etc. So again, a environmentally friendly solution, which is gaining traction in most countries in Europe. Moving on to page 5. We not only manufacture material, as I mentioned, but we also install it. Waterproofing material, the prefabricated elements we produce, we also install ourselves if the customers require that. We make flooring in industrial buildings, on ships. This business is mainly present in Finland at this point, but again, we're going to expand it geographically. Green infrastructure we have mentioned, and again, we produce the cedar mats, but we also install them if the customer requires that. And solar panels, we basically in-source. We don't manufacture solar panels, but we install them on roofs and other areas. Moving into page 6, this shows you the sales channels we're using for our manufactured products. Most of what we sell goes directly to specialized contractors, installers, which can be either our own installers owned in Finland or a franchise system in Denmark, or independent roofing contractors. And that's mainly the case in Sweden and Norway to a large extent. The waterproofing contractor is usually used by the general contractor. General contractors don't do this type of jobs themselves. And when we sell to independent roofing contractors, we have a very strong, sticky relationship with them. We're talking about small to medium-sized companies, quite often family-owned companies, who we help in many respects. We don't just supply our material, but we help them in terms of their marketing, in terms of their systems, in some cases, in terms of legal issues, guarantee issues. So we have a very usually long-standing and close relationship with them. 30% of our product goes through builders merchants, distribution chains. There, the relationship is not that close, in the sense that they are large businesses usually who basically take care of all their business aspects themselves. But it's an important outlet, especially when you ultimately want to sell to smaller independent contractors who like to take delivery of everything they need for a specific job in one go. So at the builders merchants, they can find all the material they need, all the equipment, etc. they need for a job. Whereas the larger roofing contractors, which sell directly to, can take a whole truck of our product from our plant and use it directly on the job site. Moving on to page 7. It gives you a picture of our footprint. So we are focused on the Nordic countries, but we have significant operations in Northern Europe, continental Europe, Benelux, Poland, UK, Germany, also Switzerland and Austria are significant markets for us. We manufacture in Scandinavia and Benelux, and export, especially the synthetic rubber products, throughout Europe. Our exposure to cyclicality is favorable. Half of what we do goes into renovation, which is basically a stable market which evolves with GDP. New build can be cyclical, and it's about 50% of what we do. I would add that in Scandinavia, cyclicality has been relatively soft, I would say. There has been a housing boom in Denmark a few years ago, but that's the exception. So even in new build, in our geography, demand is relatively stable throughout the years. Moving on to page 8. I've mentioned we've had a relatively active acquisition strategy since 2016, since our IPO. We have made a number of acquisitions, all of them mainly geared towards sustainability, the wood-based elements I've mentioned, the green infrastructure and the solar panels. But we also have a acquisition drive towards increasing our portfolio of products and services. Our customers are usually looking for a one-stop shop opportunity, so they like usually our service level, and it means that we're able to sell adjacent product categories to them, and we've made a number of acquisitions in that direction, which allow us to increase the breadth of our portfolio. In some businesses, like the synthetic rubber membranes, we also have a downstream integration strategy. The reason for that is that synthetic rubber roof membranes can be prefabricated in a shop. So basically, we measure out the roof and then create the whole waterproofing area within a plant and ship it to the roof where it is installed extremely fast. You can't do that with the bitumen base, where you basically glue each roll individually on the roof. But in synthetic rubber, we are active in prefabrication, and we have shops for prefabrication in several European countries. We have slowed down a bit in terms of acquisitions last year for a number of reasons. Of course, the pandemic makes it slightly more complicated to make acquisitions, but we have had a very strong start this year. Already made 2 acquisitions, and we are quite confident that we'll make a number of other acquisitions this year. So we are back full steam in terms of our acquisition strategy. Moving on to page 9 and 10, I want to give you a short update on our results in 2020. Some of you might have followed our quarterly call, but if we can move on to the next page, you can see that we've had positive sales and margin development in spite of the pandemic. We haven't seen any significant impact on the pandemic, certainly on the general demand. And we've also been fortunate to be able to operate our plants and job sites throughout 2020. We've seen slightly more cases in the beginning of this year. No significant impact, but especially in Finland, there has been a slight increase of cases, and there might be an impact from that. As I mentioned, renewed acquisition drive with the solar panel company in Finland, one waterproofing contractor in Norway, Byggpartner, where we acquired 70% in January, and the pond and landscaping company Gauris in Netherlands, where we acquired 51% in February, which is an extension of our Belgian subsidiary Distri-Pond, which is the specialist in ponds and swimming ponds. So we've started to extend that concept to another country. We plan to do the same when an opportunity arises for solar panel installations. Moving on to page 11, you can see the figures. I mentioned we had a positive development in sales. You can see we have a 7% increase, 2020 versus 2019. There was a slightly negative effect from the stronger SEK. In terms of profitability, we've made significant progress in 2020, and we're now at quite a high level historically. We have an EBITDA margin of 13.8%, and in terms of our return on capital employed, ROCE, we are also significantly above our target. Our target through the years is 13%, and we're now above 15% right now. The margin performance was driven by volumes to some extent, some operational improvements. We've had a good cost control of our raw materials, and there's also been a bit of a cost avoidance due to the pandemic with reduced travel. Obviously, that's not going to last forever, but I would say the pandemic probably has increased our productivity, like is the case for most companies. Moving on to page 12, you can see that cash flow has been especially favorable. We've had a very strong cash conversion. Again, we're not going to continue above 100%, of course, this year, but we've been able to reduce our working capital. Basically, what we've done, we've built up some working capital to prepare for the effect of the pandemic, and we have now come down again at the end of the year. So significant cash generation. On the next page, you see a summary of our financial targets. Those basically haven't changed. And you can see that we've ticked all the boxes. So we have sales growth, which we believe is slightly more than the general market. We believe we have taken some market share again in 2020. Our profitability, I mentioned, is in excess of the 13% ROCE target. And the capital structure is very strong right now. We have a target of net debt on EBITDA to be at or below 3 times. And right now we are close to 0 at the end of 2020 and also in the first quarter. And last but not least, we have a target of distributing 50% plus of our net income as dividend. And we have a proposal to the General Assembly to distribute 10 SEK per share, which is 5.5 regarding 2020 and 4.5, which we initially intended to distribute on 2019 and which we postponed because of the pandemic. So we are now proposing to distribute the sum of the two after the next General Assembly in April, 10 SEK per share. Moving on to page 14, we were to sum it up. We believe there's a number of reasons to invest in Nordic waterproofing. We have strong market positions. I mentioned the strong link we have to our customers, and also the markets we operate in are quite consolidated. We have a strong emphasis and a good portfolio of sustainable solutions, and we plan to expand this part of our business. Low cyclicality, a very strong balance sheet right now, and in terms of a dividend, a relatively high yield for our shareholders. So moving on, I think we are ready to take your questions. Please shoot.
Thank you for the presentation, Martin. And I'll jump right into questions. So your core business is kind of mature, but you have this goal of growing above underlying markets. So what sort of initiatives have you undertaken or plan to undertake in order to achieve this above market growth?
Yeah, I think the key to that obviously is the acquisition strategy. But in terms of the existing portfolio, what we focus very much on is service excellence. So our products in some cases are commodities, and basically a number of other people are able to make them, and even at a comparable quality. But where we put the emphasis is really in terms of the speed and reliability of our service, our delivery to customers, and as I mentioned, the adjacent help we can provide our customers.
Okay, thank you. And then this great core business within bitumen products generates a lot of cash, but has limited reinvestment needs. So what's kind of your plan, or should I say priority, of allocating this excess capital going forward?
Well, as we've seen, we distribute a good dividend. That's obviously one outlet, but the key emphasis on acquisitions, and as I mentioned, we're again moving into an active phase this year.
Perfect. And then when it comes to M&A, what's sort of the most interesting areas you're looking at, and are there any additional businesses outside of your current operations that you might be looking at?
Yeah, I think again, the emphasis clearly is sustainable solutions. And at this point in time, I think we are focusing on extending the platforms we have already. So we usually move into a new type of product or service in one country, like prefabricated elements in Denmark, for example, initially. And then we try to copy-paste that into basically all countries where we have a good foothold. So we are emphasizing this process for the different platforms we mentioned here. and basically trying to extend whatever we do in Sweden or Finland or Denmark to all the Nordic countries and potentially also Europe and especially Benelux, where we have a strong foothold already.
And given that you have, as you said, a very healthy balance sheet as of now, are you considering larger, say, transformative deals, or is it mostly smaller companies as you've acquired in the past?
Yeah, I think we continue to focus on small to medium-sized companies. The reason for that is obviously there's a lower risk. Quite often we have a sort of a one-on-one conversation with the shareholders. Usually it's companies we've known in the past. We are very careful about trying to get management on board and keeping it on board by giving them also the possibility to have shares in the venture, and all of that is easier to do with the small and medium-sized companies. So I think we will continue in that direction.
I agree. And then I think I have time for one last question. So your gross margin has kind of fluctuated between mid-20s to high 20s, and I think we're kind of in the upper range right now. Could you kind of go into the key components affecting the margins, say for example raw materials and competition, and kind of your view on the current situation and where we might be moving going forward?
Yeah, really, I think raw materials, as you say, that's a key ingredient in our legacy business. That's 80% of our total cost, a very big proportion. And there we have seen a relatively favorable, quite favorable situation in 19 and 20, which means that we don't see any additional improvement in that area. We might have a bit of price pressure, which we then after a while usually are able to pass on to customers, but we don't see any further reduction in our input costs. In terms of the top line, we don't have any significant concern. We see strong demand levels continue. And in terms of the competitive landscape, we don't see any immediate right now.
Okay, perfect. Thank you very much, Martin, for doing this with us today. And also thank you to everyone attending this presentation. Hope to see you next time.
Thank you for having me. Bye-bye.
Hello and welcome everyone to today's presentation with Projektengagemang. My name is Stefan Knutsson. I'm an equity analyst covering the service sector here at ABG. And with me today I have CEO of Projektengagemang, Helena Hed. Welcome.
Thank you very much. So my name is, as Stefan said, Helena Hed. I'm the president and CEO of Projektengagemang. And I'm very pleased to stand here today to give you a short introduction of our company and also to tell you about our beliefs, why Projektengagemang is an interesting company and also an interesting investment case. But first, I would like to introduce myself. I'm a civil engineer from the University of Technology in Luleå. I've been working as a consultant in about 20 years, and I started at Sweco 2020. And I held different kind of roles, working as an environmental engineer. I worked close to their clients and customers. I worked as an assignment leader, and since 2006, for about 15 years, I've been holding different kind of management roles. And the last previous role I had was managing director at Sweco Management. So I have, as I said, working for quite a long time. I feel confident that I know the consultant business, how to develop a consultant business, and I also feel confident in our market. I started as the CEO on Projektengagemang the 1st of December 2020, and I would like to give you some of my insights, what I've seen and what I've learned during these 3 months at the company. First, I want to say Projektengagemang is one of the 10 largest consultant and architecture firms in Sweden. And even though we're one of the biggest ones, we're not that well known. We work with urban design. We plan the cities of tomorrow and to enable a sustainable development of the cities and society. Architects, engineers, and specialists are needed. What I met is very competent, very committed employees, and I met customers that are satisfied with our work. Although I do see that we are far from full potential. And my work and my mission as CEO is to create profitable growth and also shareholder value. So if we go to the next slide, I would like to tell you a bit about the agenda for today. First of all, I want to give you a short brief of the company, a company overview. I'm going to talk a bit about our journey and the trends we can see, a little bit about 2020 and our priorities ahead. So if we go to the next slide, please. This is Projektengagemang. We were founded in 2006, but our journey started in 1957. We are a multidisciplinary consultant group with almost 1,000 employees. You'll find us in 24 different locations in Sweden, and we're also located in Norway and India. To enable client satisfaction, we focus on collaboration, innovation, and sustainability. And I met a strong culture in the company, and I can really feel the core values that we are committed. We are responsibility, and you can sense the entrepreneurship within the company and with our employees. Every year, we work with about 4,000 customers, and every year we have about 13,000 different projects. And we work with the small projects, local projects. We also work with the big ones, really prestigeful projects, as the picture here shows one of the Sweden's largest building urban design projects where we are involved. Our clients, our customers, they say that they're satisfied with the work that we are doing. And when we do our surveys, 88% say that they are satisfied or very satisfied with our work. But looking into the market, we only have 1.5% of the market share. So I see that we have a big potential to grow our company and our business. So if we go to the next slide, I want to show you a bit about our organization and our skills areas. But first, we work as experts and specialists. We work on the local market, and we also work around the whole Sweden. And we work with a sustainable development and the urban planning and design. We have 3 different parts of the company. We work with architecture and management. We work with civil engineering and infrastructure and systems installation. And you'll find different kind of experts. For instance, the architects, you find the urban planning, you find management. We work with building construction, building specialists, and we work with infrastructures. We work with sanitary design, electricity, risk, fire, industry, and energy. And we focus on building strong teams close to our customers, together with our customers. And in that way, we can create value. And I see the value is not only for the customers, but it's also for the society as a whole. Looking into our business, about 90% of what we do is in building and construction. And we have a strong and a very nice position in building and construction in Sweden. So if we go to the next slide, there are big trends that are driving the development of the society today. We can talk about globalization, urbanization, digitalization, or climate change. All these ones, they really support the growth in our market. And then we, of course, have COVID-19, which has affected us negative. But there's also a lot of opportunities for us as architects and consultants to see in the market due to COVID-19. And if we look at what we are doing, we work with residential development. We work with education like schools or preschools. We work with hospitals. We work with healthcare. And what we do, as I said, it's urban planning, urban design, and we create smart cities. And we actually look into the future, because what we do today, what my colleagues do, we actually do things that you and me, we will be in a city in 30 years, and we will experience the thoughts that we created today. So what we do today is actually affecting the future. And what I see that architects, specialists in different kinds of way, engineers, we have an important role to play. And I see that we are actually important. And that's also why I really love to work as a consultant, because I feel that every day we make a difference. So if you go to the next slide, our journey. As I told you, our journey started in 2006, but our history is from 1957. Looking at the diagram below, you can see our revenue growth from 2006 until 2020. And you can also see our EBITDA margin from 2015 until 2020. Since start in 2006, we have had EBITDA margin on about approximately 6.5% during the time period. Looking at our journey, 2018, we had our IPO. And since then, the board and the management team have made restructuring work at the company. We are built by organic growth and acquisitions. And in 2019, we took the decision, the management board and the board took the decision to go to one brand. We consolidated all these companies into one brand. So now we have, you can find us as Produktionsteamet, and our brand is PE. We also now have common systems that support our collaboration, helping us to work together, helping us to be in the front in the technique. And also in 2019, the board and the management team looked into underperforming units and made a restructuring of the company. 2020, we are affected by COVID-19, although we can see that we are moving towards our financial targets. And we delivered, even though we had COVID-19, a revenue about 1.2 billion Swedish crowns and an EBITDA margin on 6.7%. If you go to the next picture. Today, we have, as I say, a strong platform, a platform that makes us and enable us to grow in the future. In 2020, as you can see in the picture, we had a net revenue that was decreasing, which depends on both COVID-19 and also the restructuring work that was made in 2019. But you can also see in the picture below that we are significantly improving our EBITDA margin. So looking at our summary, we had an EBITDA on 79 million SEK, our EBITDA margin on 6.7%. We significantly strengthen our financial position. We have a strong cash flow, and we also have a good order backlog. Our net revenue decreased, as I said, due to these underperforming units where we restructured and the COVID-19. And I want to tell you that in 2021, in the beginning of the year, we are 150 less employees than in the beginning of 2020. And this will affect our revenue during 2021. Although our financial targets, they're set, they're still the same, and this is what we're aiming for. We're aiming for a yearly revenue growth rate on 15%. We have our goal on an EBITDA margin on at least 8%. Our net debt between 1.5 and 2 LTM, and a dividend of 30% of the annual net profit. So we are back on track, moving towards our long-term financial goals, where we also can create a good shareholder market. Looking forward, going to the next picture, we can see our priorities ahead. So our ambition is to deliver the highest customer value and to develop the best workplace. And to do that, as a consultant, we need to have the best, the most interesting projects. We need to develop people and secure personal development. It's important with a good and a strong leadership and collaboration between colleagues and our partners to ensure high customer value. We want to do things a little bit better all the time, and to do that we are focusing on responsibility. If you come to us, you can feel the strong entrepreneurship, and you can also sense that we focus on delivering results. So I have a very exciting and in some ways challenging job to develop this company forward. And to enable that, one of the first decisions I took together with the management team and together with the board was to take away one management layer. So from the 1st of January 2021, we now have a more decentralized organization with more customer focus and also clarified responsibility. I think that is great, and I feel confident that what we made now with the new organization, but also how we focus on the future, that will create growth in the future for projektengagemang. So if we go to the next slide, and this is our last slide. If I want to summarize what we do, we design and we plan the future and the cities of tomorrow. And I think, and I know that engineers, architects, and specialists are really important to make this change happen, to help us to create a better environment for you and for me and for everyone to live in the future. I think my employees play a crucial role in this development of the society. Looking at the company, since 2006, we have been profitable. 2019 was a different kind of year, but now we're back on track and we are close to our financial targets, and we will work hard to reach them. We have the underlying market that drives and enables growth, and that's, for instance, the urbanization, which is continuing. We have the digitalization, which affects us every day, and also, of course, the climate change and how we create a sustainable city and a sustainable planet. We are, of course, as everyone, affected by COVID-19. It affects us in the beginning of the year, but we actually feel changes in the market. And our view of the future is that we expect a better market in the second half of 2021. So our focus now, that's to secure stable margins. It is to create profitable growth. And me and my team of my 1,000 colleagues all over the country, we will continue to develop projektengagemang, and our focus is to reach our full potential. And I'm really happy to be on this journey. So for that, thank you very much.
Thank you, Helena, for the presentation. I will follow up with some questions. And first up, you recently joined the projektengagemang from a long career in Sweco. What is the main things that you can bring from your career in Sweco to projektengagemang in your view?
Well, there's lots of things. First of all, I want to say that both companies have very competent employees, very committed colleagues, and in both companies I can feel a strong culture, and I feel that leadership is very important. What I bring is the importance of the decentralized organization. I bring the focus on clients and that we all collaborate together. And to be honest, I thought it would be a bigger difference between Sweco and projektengagemang. I actually feel like I am home.
Perfect. And then I want to focus a bit more about the strategic shift that you did in 2019, where you merged all your brands into one brand. Can you tell us a bit more about that and how you think that will benefit projektengagemang going forward?
Yeah, and I think it was very important, and was a very important step from the management team and from the board. We have been doing a lot of acquisitions, 47 of them, and to be in one brand where we work together, we collaborate, we have the same systems, and we have the same focus and the same goal. That helps us building our strong culture, but it also helps the clients to find us and understand what we do and how we can help them in the best way. And we can be the one-stop shop. If you as a customer come and say, okay, we need help with installation, we can also listen and understand the customers, what they need, and we can also help them with, for instance, architects or building construction. So for me, it is important, and I think it was a good, a very smart step from the board and from the management team to come into one brand, one PE.
And going forward, if you would like to rate how strong you think that PE's brand is in Sweden right now, and if you see improvements going forward.
I think that's a very good question. And what I see is, no, our brand is not strong enough. This is one of my main focus, and I work close to my team and to the market department, but also with all the employees. We need to tell the market what we're doing. We need to have a stronger brand. I want everyone to understand what we are doing at Projektengagemang, and that's not the case today. But I know that we're together. We're going to be much stronger in the future.
And just firstly, have you started to do any actions to improve the brand further?
Yeah. First of all, as I said, we now made our organization decentralized, and that's one way to strengthen us, to work together. The whole management team work as one team, looking at the whole PE. Internally, we work a lot with our culture, and we want every employee to talk about Projektengagemang and what we do. And we also focus now, which you probably and hopefully will see in media, where we tell more about what we're doing. We're building high, and we're construction broad buildings, and we're sustainable. So we're telling a lot more about our company and also the potential we have going forward.
Perfect. And then also you've done some restructuring in order to meet the lower demand that you have seen during the pandemic and also a bit in 2019. How confident are you that you are through the tough decision makings and can start to actually look forward and do some more fun decision making, so to say?
That's true. We made and took tough decisions during 2019. What I see when I entered Projektengagemang 3 months ago, I see now that we really have a strong platform. We took away underperforming units. We're focusing on the units that are actually going strong forward. We can, for instance, in our building construction and civil engineering, we had an organic growth on 7% during 2020. So we're focusing on what we're doing great. And what we're actually doing right now, we're looking a lot in our market position, where we are today, and how we can take a larger market share. As I said, we only have 1.5% of the market share. So that's one of the plans we're doing. And I promise that during latest the second quarter, we're going to tell you more about the plan going forward to be even better and to reach our potential.
Perfect. And also, if we look historically, Projektengagemang has grown through acquisitions. How do you view the M&A landscape? Are M&A still in the plan for you?
Yeah, we've been growing with organic growth, but also acquisitions. Today, my focus is develop profitable growth. First, secure the stable margins. First, secure the organic growth, and then we have, in the long term, we have the plans to continue with our M&As and continue with acquisitions. So that's in the plan. And you asked also about the M&A landscape. It's been a great consolidation in the whole market, but still, I think there are interesting companies that would come to Projektengagemang and in a very good way make us an even better company, both having more consultants doing the same thing, but also having new aspects into our company so we can help the clients and help our customers in the best way.
Okay, Helena, and if we would like to summarize, what will be your main top 3 priorities for 2021?
It is the customer focus. It is our culture. I want our culture to be felt in the whole company, and it is to secure our stable margins during 2021 and going forward.
Perfect. Thank you, Helena, for presenting with us today. And I would also like to thank all the listeners and viewers online for this presentation.
Thank you very much.
Hello, everybody, and good morning. Today we have the pleasure of having with us Kim Ullman, CEO of Concordia Maritime, who will go through his company's case and presentation. Concordia Maritime is a company that engages in the product and crude trade and owns many tankers, which I'm sure that Kim will go through shortly. Kim, please go ahead.
Thank you, and thanks for inviting me. Let's do a little update on Concordia Maritime. Mostly about the market, but also about the company as such, of course. Let's get straight on to it. Next slide, please. Thank you. Just to put it into perspective, I think you actually jumped a few pictures there, didn't you? That's right. That's the one. That's number 3, right? Sorry for that, everybody. Okay, so here we are. So some key facts about Concordia Maritime. It's an international tanker shipping company, as Dennis was saying. We own 12 product tankers and 1 crude tanker. And we've been listed in Stockholm since '84. And the Stena Group is the majority shareholder of 52%. Next slide, please. Yeah, our business model, simply speaking, it's about operating tankers in a daily manner, and you can do that in 3 various ways. You can do it on spot market, which means that you go from one charter to another, one cargo to another, and have to negotiate each cargo each time. And then there is a variety, and you can do a term business. The TC stands for time charter, so you can rent the tankers out for a period of time, and consecutive voyage charter is an alternative. Well, that's the main part, the daily operation. But of course, you have to make sure that you buy the vessels in a good moment and at good prices, and make sure that you buy the right vessels at those good prices, and then operate them. But then you should also, every now and then, take the opportunity to sell when the markets prevail or when the prices have gone up. And this is working very closely with the charter market as such. So the values of tankers go up and down as the spot market and time charter market goes up and down. So that's just to put it a little bit in perspective. Next slide, please. And to put it into another perspective, in where are we in the value chain? We are transporting crude oil, and we're transporting refined products. So if you extract oil from land or from the sea, and you transport that by crude oil tankers, and they are bringing it to the refinery, and the refinery makes products out of it, and we are then transporting the finished products in what we would call product tankers. Simple as that. And it goes on to terminals to unload it, and to being used in our all daily lives, as the graph is trying to show. So that's putting it in that sort of perspective. Okay, so next page, please. The ships, same ships that we were talking about before, but now in pictures. 10 product tankers, P-Max tankers, 183 meters long, 40 meter wide, IMO 2 Max class tankers, a chemical product tanker, and a Suezmax tanker. And this particular Suezmax tanker, or this particular tanker that is called a so-called Suezmax tanker, is 278 meter long and 48 meter wide, so pretty big units. Next slide, please. Okay, so that's putting the company in perspective, where we are and what we have. 2020 in short, in terms of numbers. It's being a little late now to show 2020 numbers, but you've seen it. It was a good first half, or a reasonably good first half, but a much worse second half. And all in all, it made us make a negative result of 65 million Swedish krona. We had a very heavy dry docking program continuing in 2020. But we also added some Suezmax capacity. We've chartered in ships to add to the capacity that we're hopefully going to gain from in an upturn in the market. And we have a new CFO since just a few weeks, as a matter of fact, Martin Nerfeldt. Next slide, please. Okay. 2020 was a year certainly affected by something called COVID-19. I think everybody else is going to say the same things, and this is how it affected our markets. On a macro basis, the oil demand was basically destroyed, if you will. We lost on average 10 million barrels per day in oil demand, and that's things we should have chartered or we should have shipped in our tankers had it not been for the COVID. So, and in order to meet that demand destruction, of course, the producers of oil needed to reduce the production. So we had much less oil to ship. And then on the demand side, we had hoped that Q4 would have been even stronger in the recovery of the oil demand, but we got the second wave towards the end of the year. And all of this is directly affecting the tanker market. Because it was weak because of the demand destruction, because of the cuts in production, and because of the fact that during a short period of time there was a stock build, and people started to draw from those stocks for the rest of the year, and that affected negatively the tanker market too. Next slide, please. So this business slide is trying to depict, how it has been, and we were, after a couple of bad years, 17, 18, towards the second half of 2019, we were about to see a structural upturn in the tanker market. Things were looking fine. We had an oil consumption of 100 million barrels a day. We had normalized levels of inventories, and we had that upturn towards the end of the year. You can see rates, on the left-hand axis, going from, $10,000 a day to $20,000, $30,000, $40,000 a day in this structural upturn. Then in the beginning of 2020, we had the worries around Corona. Then you see a very short spike, and that's difficult to describe, but it's got nothing to do with Corona. It's the main reason at that time was that the Saudis decided to flood the market with oil, lower the oil prices, and the oil prices went from high 60s to under $20. At that time, people started to stock up like there was no tomorrow, regardless of that demand destruction I was talking about before. People knew that, in the end, we will need this oil. Even if we can buy it for $20, let's do that. So they started to stock build. And we had a short spike in tanker rates, which is the reason why we managed to make profits the two first quarters. But then, of course, we have the demand destruction. OPEC decided, okay, let's stick together. Let's move this oil price from $20 back up to 60. So they cut production. And we were left with lower demand, lower production, and people drawing from the stocks. So you can see the Corona effects between $0 and $10,000 a day. And this is for product tankers needing around $15,000 per day on the left-hand axis to break even, roughly speaking, 15 to 16. Next slide, please. Okay, so this is what happens. This is just to show the same thing. When you have an oil consumption that goes down so dramatically and you still produce the red line, then there's a stock build, of course. And now we are at least drawing from that stock, which is good. So the production is under what the consumption is. And we're hoping that this we should clear out that overhang of stocks so that we come back into equilibrium and more oil will be needed to be shipped. I'll be back to that. So, okay, so that was just a picture showing how it works. Next slide, please. So Our ships right now, we have those 10 P-Max tankers, 5 of them on spot market right now, and another 5 is on what I called before, these term charters. The IMO 2 class vessels, these product chemical tankers, are mixing with clean petroleum products, CPP, vegetable oils and chemicals, and have managed actually to have a ratio of 80% of the time being laden with cargo, that is. Suezmax, okay, we only have 1, but we're in a big pool, or a pool that operates 25 Suezmax tankers, so we're not alone in the market, and we have added capacity in the Suezmax space of the equivalent of 1.7 Suezmaxes. Okay, next slide, please. So, summary of 2019 and 2020. Market on a structural recovery in Q4 2019. We saw that. We had 100 million barrels a day. We had inventories, okay. We had 5,300 tankers, utilization rates of 85 to 90%. We had high freight rates. That was in Q4 2019. Corona came, killed the market, delayed the structural upturn by some 18 to 24 months for the reasons we've been through already. And from second half of this year, we expect the market to start recovering again for the reasons I'm coming to right now. Yes, exactly. Outlook 2021, 2022. Next slide, please. The first thing we have to do is to have an economy getting back into shape. Let's hope that this is going to be the graph that's going to prevail for this year, where IMF and most of the analysts are looking at a recovery in the world economy in the size of 5-ish%, which is a very good base for the next slide, because the next slide is maybe the most important slide. If you look towards where we are, if you can see the estimate in shaded grade area, January 2021, the oil consumption, the red line, is on its way up, slowly but surely, in this recovery phase. And we believe that towards the end of this year, we are back to almost where we were in this famous Q4 2019. So the oil consumption is slowly growing, and you can see on the right-hand graph that we are going to get more oil from the producing countries that is needed to be shipped in order to keep the inventories at an equilibrium. Before that happens, next slide, please. We need, as I said, to get rid of the inventories. We need to close that gap. It dramatically built up during the last spring, but now it's down by 70%. And with the current pace, we are consuming roughly 1.5 million barrels a day more than we are producing, which means that this surplus should be gone by the summer. Next slide, please. So the consumption looks good. The inventories are going to be coming down to normal levels. What about the other side of the coin, so to speak, the order book? Well, we have a low order book. The only good thing with the bad market over the last number of years is that very few people have ordered new ships. So we have a relatively low order book. Next slide is showing the growth per year. So this is just converted into, we are expecting the fleet to grow by a couple of percentages. There's still a little bit of a growth, but it's only, if you will, circa 2%. Next slide, please. Putting it all together, economy going up, consumption going up, inventories normalized, we see a demand for seaborne oil transportation growth of 5 to 10%. Whilst at the same time, we see a supply of transport capacity growing by only 2-3%. So we do expect the market to come back from summer onwards. And one should know that very small changes in transport demand has a big effect on tanker rates. We must not forget the fact that even though we have had a very poor tanker market, all tankers are working. It's not like it was in the 70s when they were laid up around the world. Every ship is working. They're not working very well. They have bad charters, but they do work. No ship is in layup. So with this extra demand, put that into the tanker demand, and you will start to see significant changes in tanker rates. And this we expect to see happening from at least from this summer. So I think next slide is giving us the fact that in an environment like this, where we see an increased market, at least we have been through a bad period, been through that hopefully soon. We have docked our ships, we have cleaned them up, we've fixed them for the second half, so to speak, of this football match. And the gray bars is describing the fact that they are in the so-called spot market and can take advantage of this market upturn that we are expecting soon to happen. And the next slide is summarizing it all. Why Concordia Maritime? We know 2020 was affected by COVID-19. We do believe that from second half this year, we are starting to see a strengthening in the market, and we have a structural upturn in 2022 instead of 2020 as we thought before. So Concordia, well-functioning, right-position vessels, and the fact that we have access to the Stena sphere is great too. So I think the next slide is summarizing it with the fact that this is the restart of the next upturn in the tanker market. From there on, it's Q&A, Dennis.
Thank you very much, Kim. That was a very thorough explanation of your view on the market and also an overview of the company. I just want to sort of get right to it. Right now, the market is in a very difficult place. Rates are below OPEX, but your fleet was able to book rates above the market. Could you maybe give us a bit of color as to why your fleet tends to outperform?
Yeah, but they are in pools together with other ships. They have a critical mass from that perspective. They are a little bit extra or different to other ships, with the P-MAX vessels being a little wider, bigger. And for those who can use or utilize that extra space, there is extra money to be made. And the fact that we have managed to be 80% of the time in a loaded condition on the IMO 2 class vessels is a big testament to the fact that there was a good design to start with. Any taxi driver would be happy to have the taxi full of people 80% of the time.
Okay, and now during your presentation, you give a very thorough and clear outline of your positive, let's say, medium-term view because it's H2 2021. First question there is, what do you think is sort of the most imminent potential trigger for your space? And then also, if you could just give a bit of color on some of the long-term demand drivers for the tanker space investors should be looking at.
Well, short-term, it is basically what I've just mentioned. We are shipping less oil than what the world needs. There will come a day. Yes, OPEC extended their cuts by another month. Everybody had hoped for more oil to be shipped in April. Okay, so we pushed that a month. What will happen during that time is that the inventories will just go down quicker. So that's fine. We'll see even a bigger catch-up effect, if you will, come this summer for that effect. So that's the short term. We need to ship more oil. The world is consuming more oil than what we are producing, exporting, and shipping. So that is needed to come to an equilibrium. Long term, Long term is a difficult question, of course. Depends on what you mean by long term. Long term, in our view, is 3 to 5 years, and 5 to 10 years. I believe that there is still a need, whether we like it or not, for oil. Well, there's going to be a need for oil for a long time, but it's potentially a continuing growth in consumption and need for oil for a period of 5 to 10 years at least. Whenever that is going to be plateaued out, we do not know, and everybody's speculating on it, which is fine. But then the fleets and the tanker owners will need to adjust their fleet size so that it matches whatever the demand is. I mean, we're not producing the oil. We're not stimulating the consumption of oil, but we're transporting it for the need of the world.
And then sort of play a bit of devil's advocate. What's sort of the thing that you fear could hinder at least or delay the recovery for tankers? What's sort of the thing that you're looking out on the horizon for and hoping doesn't come?
Well, short term, it's another Corona. It's Corona version whatever, of course. Things that we cannot manage. So that's short term. Otherwise, things are looking pretty okay short term. And I'm not going to go into wars and things like that. You know, anything like that could of course destroy anything. But so short term it looks fine. Long term, it's you have the fact that politicians and policymakers, you know, could come up with rules and regulations that could be a notch or too much for us to swallow, so to speak. We cannot adhere to it, and that is a risk that it's not a collaboration between policymakers and the industry itself to make sure that we are jointly going, you know, taking this challenge together to make sure that we will make this transition into a non-fossil future in the future.
And then now, I know that those are some difficult questions, you know, looking at the long-term view, especially since some investors are a bit hesitant on working with oil, but it seems quite clear it's going to be around for a very long time, as you say. But now just sort of thinking from a strategic perspective for Concordia Maritime, what do you think, where do you think you're going to be in 3 years from now? Is it going to be secondhand purchases, secondhand sales, maybe even a new build? So if you can just give us your color on maybe M&A as well, some color on that.
Yeah, with our view on the market, I think it's certainly good times to buy secondhand. I have always been against as much as possible, you know, new buildings, because it just adds capacity, and we have had in the shipping industry a tendency of adding too much all the time. So that restraint, I'm so happy that we have the restraint in ordering new ships. So I think secondhand for the next couple of years is good. I envy, not envy, but I mean what Torm just did. I mean that's beautiful, you know. And it doesn't matter if it's 1 year old or 10-year-old or whatever it is. It's a bunch of ships, and that steel is going to increase in value. So that's definitely what we would be looking at over the next few years with this increase in transportation demand. Long term, it's more difficult. Long term, you have to adapt. You have to come up with new ships, engines, engine types that will not burn fossil. And as you know, everybody's working on that. We and our sister company Stena is working on that, and that's one of the beauties to be together with Stena with the R&D development research company or department, that we're constantly working on this, and we need to adapt. We need to adapt for the future, that's for sure. But we have to make sure that we do the best we can with the tankers we have right now.
And then, you know, just sort of the last question, I know it's ESG related, but you just sort of answered it right now. What are some of the initiatives that you're following to sort of help improve, let's say, your profile, your ESG profile? If you could just give us some color on that, that would be great, because it's a big concern for some investors in this industry.
Yeah, no, I appreciate that, and we need to be doing our share of this, and we are doing that, and we have been doing that for a long time. Just the fact that this Detta group that owns us 52%, and they have an R&D department. They have 50 naval architects that are working day and night, so to speak, to make sure what is next, what should we be doing next, and on the existing ships, what can we do to bring down the consumption, to lower the emissions on the existing ships. Cannot kill them. We cannot go and scrap them tomorrow because they are burning fuel. That's the way it is. We have 5,500 tankers in the world, providing the world with energy. But we need to be doing as much as we can on the existing ones, and we are to as much as we possibly can to reduce the consumption and the emission on the ones. Longer term, as I said, we're working on various projects to what is next, engine wise and propulsion bunker wise as well, and that's something we're working with day and night and have been doing for a long time. And I'm not having the perfect answer to whether it's methanol or something else, but as you can see, we or collectively as a group is heavily into methanol as we speak.
Kim, thank you so much for your time. I think that's been quite some detailed questions and very good answers from you. So thank you for being with us today and giving a very good overview on your market view and also a good overview of your company. So thank you for your time.
Thank you.
Two, one.
So it is now 11 a.m. and we can begin. My name is Laurits Kjærgaard, equity analyst at ABG Copenhagen office. It's my pleasure to introduce Green Mobility, represented by IR and Head of Strategy Anders Wall. To the participants, we have research on our introduced platform, which you have free access to. But without further ado, thank you very much, Anders, for joining us today and for your time. The floor is yours.
Thank you very much, Laurits, and welcome everyone. Welcome to Green Mobility. We are broadcasting this from our home city of Copenhagen, and as it says on the screen, the greenest mobility provider. We emphasize very much on the green part of our business. It has been a natural part of Green Mobility since even before our launch. It's very much part of our DNA. Green Mobility is a car sharing company. We operate entirely by EV, electric vehicles, which is the green part of the business. Naturally, it also comes when we look at the energy that we put into our cars. As Laura says, my name is Anders Wall. I'm head of investor relations here at Green Mobility, ESG, and our strategy focus as well. And I will give you an introduction to Green Mobility. Next slide, please. From the beginning of Green Mobility, we were focusing on 3 megatrends. They are still to this day, very much what we base our business on. It is urbanization, that we are all moving into bigger cities. We are bringing along 1, 2, maybe even 3 cars, and it's causing obvious problems, such as traffic jams, parking issues, noise, and of course, obviously, a lot of environmental problems. Secondly, it is sustainability versus urbanization, maybe a bit more positive trend, but still the trend that focuses very much, and we have to act. We have to act now. We have to do something. That is the core of our business today. The last part of our megatrends is, of course, the sharing economy. That is what enables us to actually do what we do. When we look at cities, which is where Green Mobility operates, there is a clear political focus on, 1, saving CO2 emissions, but also reducing private cars. These are 2 of the main elements that we work with in our business and where we engage directly with cities and politicians. We've been able to prove not only that we can actually save CO2 emissions, but we can also reduce private cars. And when we look at cities, this is where they have had a huge transition from just 3-4 years ago, where it was I would almost say a nice to have thing, to now it's become top priority in most cities to actually do something about mobility. Next slide, please. Our business is basically very simple. It's something that we focus on keeping it that simple, because then it's very easy for people to understand. And ultimately, what we're working with is changing people's habits. So we have to motivate you to do something differently today than you did yesterday. And when it comes to our cars, most people tend to be very clinging to their cars. It is comfortable that you know how the seat is adjusted, the radio stations, all that. So we have to make a very easy alternative for you actually to change your habits. So obviously, as I said in the beginning, we are a green business, so that goes without saying. We work on keeping it very intuitive in our app, so you can simply find the cars, use one, reserve it, and book it for your ride. We have a number of product structures in terms of pricing, whether you go by the minute, hour, or day. And then we also focus very much on keeping the infrastructure, so parking and charging, very simple. Again, so there's no hassles in what you're doing. Next slide, please. Our backend solution is based on from our headquarters here in Copenhagen, where we have customer service, but we are also very active in the streets. So we have our own street crew to take care of the cars, making sure that they're cleaned, they're charged. You don't necessarily have to do that as a customer. All things that are supporting the fact of creating a simple business. It's very intuitive to use. As part of our business, naturally, we gather a lot of data. We use that for operating the business every day, so down to positioning the cars, finding where should we ideally have the fleet Tuesday afternoon versus Sunday morning, and so on. So make sure that we have availability in the fleet. That is ultimately a key point as well, because when you as a customer are looking for going anywhere, It needs to be very accessible, so availability is key. Generally, you don't want to walk more than 3, 4, maximum 500 meters. So that's our primary task in our operational center, to make sure, based on our data, that we know where the cars are positioned. Naturally, we use data as well to develop the business. We can analyze a lot of behaviors in our data from what is needed, but also based on other input that we get from our customers. So we continuously develop the platform. And a few examples of that, if you take next slide, please. We started just last year, we developed a pre-book functionality, realizing that there are situations where you may not have the time to wait to find a car or go to that car. You need to catch a plane and important meetings, then you can actually pre-book our cars now. We will deliver it to your doorstep. On a slightly different profile, we also saw an increased need for transporting larger goods. So we've added electric cargo vans to our fleet, and they actually seem to be even more popular than traditional cars. So there's a use case that is definitely supported with these cargo vans. The last part are our packages. Since day one, we've had various packages for hourly usage and so on, where you get a discount. But there's also a need for people to go further, specifically in the weekends, where we have low usage in the city. So last summer, we introduced day packages where you can have the car for up to 7 days. And as you can see from the map, depending on how familiar you are with Copenhagen and Sjælland, all of a sudden during the summertime, we saw the fleet moving a lot out of Copenhagen. So there's definitely a need for shared mobility also for the longer distances. Next slide, please. The business model of Green Mobility is to a large extent very simple. We go into a new city, we can predict the cost of that city in terms of leasing of the cars, parking fees, if that's relevant, insurance, labor cost, and so on. So that's the green line you see on the slide. It will grow a little in the beginning, but over time it will fade, mainly due to expected lower cost on EVs as they develop in the market as well. As with any other business, when you start in day one, you have zero revenue. It's not unlike opening a closed store around the corner. So we build up that revenue. We look at our business on a city by city perspective. So this is the illustration of a city that we launch, where we can actually measure the cost and also the revenue per car. So it becomes a very simple KPI to follow. On average, we expect to spend 2 to 3 million euro to make a city break even, and do that within a 2 to 3 year time span. We've seen that in similar cities, and we see that as a very realistic time. There are, of course, cities where unique things may impact this. We see some countries at the moment where we have large subsidies on EVs that will, of course, lower cost, bringing in a break even even sooner. Jump to the next slide, please. An integral part of our business is, of course, also that we are a green business. We have a thorough ESG program, and we also work very closely with UN Sustainable Development Goals. And it is about contributing to the city and also engaging with the city on a political level. Some of the most obvious and very clear measures to do that is, of course, on CO2. So over time, we've saved more than 2,000 tons of CO2 by using our fleet. Likewise, we also measure the number of private cars replaced, and today it's on a factor of 1 to 4, meaning for every car we have on the street, we actually replace 4 private cars. Jumping to the next slide, please. A little overview on green mobility and our current locations. As you will see by the dark green dots, we are currently operating in 7 cities across 4 countries. So Denmark, Copenhagen and Aarhus, Sweden is Malmö and Gothenburg, Helsinki in Finland, and then Antwerp and Ghent in Belgium. You also see some light green dots. These are what we call announced cities. So cities that we are planning to move into. So in this case, it's Oslo, it's Brussels and Vienna. We've also announced that we've established a subsidiary in Germany, obviously to go into the German market, which is traditionally also a matured car share market. with some strong large cities. Across those cities, we operate a fleet of a little more than 950 EVs today, and currently more than 115,000 customers that we service across these markets. And if we jump to the next slide, please. Here you see an illustration of our development over time, and naturally, like many other companies, we were affected by COVID when it hit us about a year ago. But the interesting part is when we look at it from a historical perspective over a longer time span, we've actually had a very impressive growth, and it continues to grow. Naturally, with some dips last year, but from the initial sort of shell shock that we saw in the spring, we quickly rebounded in the business and actually grew throughout the fall, having record high numbers. This is illustration of Copenhagen, which is our most mature city and also where we have the historical data. So this is based on just one city, and which is also what makes it comparable over time. So the development over time, naturally, at one point, we would expect that it fades out, but trip-wise, it continues to grow, and we see a similar development in our other cities. So the development, if we jump to the next slide, please. The development last year led us to be able to announce profitability in Copenhagen in August of last year. And doing that as the first fully EV operator, I think that was definitely a huge milestone for GreenMobility. Was something that we had anticipated naturally, but with a little delay due to COVID. But equally an important milestone for car sharing in general. That it is a business that will be profitable. It does take a few years to build up a new city, but I think it's not unlike most businesses. You have to build this up. We've proven that the business works and the business model is sustainable. For us now, it comes down to building additional cities and growing the business. The developments that we've done over time in Copenhagen naturally can be implemented directly into our new cities, giving them the benefit of learning or of acquiring things from Copenhagen. Copenhagen has over time been sort of where we've developed things, we've adjusted our platform. So now it's very easy to roll out in new cities, which also makes it quite scalable for us because we have a set formula now for entering new cities. We know what we need to analyze before going in. We also know how to quickly start up a new business. So, which also leads us to expect that new cities, actually depending a little on size and so on, but that they will become profitable sooner than what we originally saw in Copenhagen, simply based on all the advances that we can bring to that business. If we jump to next slide, scale is what GreenMobility is all about. We need to continue to grow as a business in order to become a leading operator in Europe. We could start the business today and say, okay, with the 7 cities that we're in, we could most likely create a good and strong business, but we would end up just being a regional player. For us, the aspiration is to become a leading operator in Europe, and by that also having a lot of cities around. It is a land grabbing exercise for us. We need to go out and plant the flags of GreenMobility in European cities. The map is to some extent illustrative. Whether we will hit these exact spots will remain to be seen. But one of the big differences that we've seen is when we started our service 4 years ago, we were looking at cities traditionally with 1 million plus inhabitants. Now we've proven the business is sustainable in smaller cities down to 250,000. Naturally, this hugely increases the amount of cities that we can expand our service to. More than 160 cities across Europe fits this criteria. I'm not sure we're going to do all 160 cities, but it gives us a lot of room to maneuver and a lot of potential cities to work in. We are not the only one to operate in this field, but interestingly enough, at the moment, having more than one operator is not necessarily a negative thing. Again, coming back to the availability, if you have more than one operator, you will see more cars in the streets, and then more and more people will actually change habits into shared mobility. So it's also a factor that we look at, having cities where potentially we have strong competitors as well. I think the biggest part we see today is that, and this has to be in cities where we have political support, and luckily this has changed dramatically as well. Most cities across Europe are now looking to change actively in mobility to reach their CO2 goals, whether it's for 2025, 2030, and we can contribute actively into this. If we jump to the next slide, one of the ways that we do this is the structure that we work with. So we have what we call a hub and satellite structure, where specific cities act as a hub for other cities. Good example is in Scandinavia, where Copenhagen acts as a hub, meaning this is where we have our customer center. So all customers, despite where they are, in which city in Scandinavia, when they call our customer service, they reach Copenhagen. We don't necessarily need to have a lot of offices around the city, the individual cities that we're in. We do, however, of course, have a local street team that makes sure that the cars are serviced, they are charged, and they're positioned right and all that. So it is about scale, and this is where our hub structure works very well. If we jump to the next slide, please. This is also leading into the ambitions that we have as a company. From our current 7 cities, our aspirations is to go to 35 cities by 2025. And by that, we would become one of the leading operators in Europe. And it's merely just a matter of opening 5 to 6 cities every year. It's the same pace that we grew the business with last year. So it's absolutely realistic. And with that, we would bring more than 10,000 EVs. And of course, saving a lot of CO2 and replacing private cars, equally important measure for us and the cities that we are in. And with that, I conclude my short introduction to green mobility. I think we can jump to the last slide.
Super. Thank you very much, Anders. Maybe a few questions from my side. The first question is in terms of, you've obviously done a few share emissions to fund your journey. Copenhagen is in profit territory now, but it takes some time until the cities can also organically have enough profit to grow new cities. So perhaps, or you are perhaps leading the way in terms of new share emissions in the next couple of years. Could you give some details to how you're thinking about raising new capital to fund your journey?
Sure. As you sort of introduced and was what I was talking about before as well, in the pace that we want to grow cities, it will go faster than the time it takes us to make cities profitable. So we will need additional capital. We've been open about that as well. And I expect that we will raise capital at a number of times in the coming years, simply to fund this expansion. It may also be in terms of other sources of financing, but we like to sort of do it in step approach. So we generate some results. We can show clearly to our investors, now we've reached this level. We'll raise additional funds. We'll take the next part of the journey.
So not one big share emission, but perhaps a few $100 million from time to time to fund the journey.
I think it's always dangerous to put an amount on it when we haven't announced anything. But I see a bigger value for everyone in doing several tranches rather than doing one big. And it has to reflect also what we would need in the specific timing. We don't necessarily need a lot of money sitting on a bank account. It has to go into generating new cities and thereby growth in our business.
Okay, and if we talk about today, you have 950 EVs targeting around 10,000 by 2025. How many are currently being ordered? Could you talk about that? And maybe even, how fast does it take for you to say to order new vehicles for a new city?
At the moment, we see a lot of difference from OEM to OEM. As you can maybe see from some of the pictures, we work primarily with Renault today. The interesting and flexible part of our business is that where we 3-4 years ago only had very few EVs to choose from, now we have a multitude of EVs, and I think it's about 35 new models coming to the market this year. And naturally, these OEMs are very eager to promote the new cars coming in, and thereby also producing. The specific lead time varies a lot at the moment, also depending on COVID, of course. But I don't foresee any big issue in actually getting cars for the expansion plans that we have.
So, how long does it take for you today to order, for example, 100 EVs from Renault?
For us to order it goes. We can do that quickly, but delivery time, of course, it can vary. And I don't want to hold Renault to anything sitting right now, but I would expect a couple of months.
A couple of months. And now, obviously, you mentioned in regards to your statement here on the 29th of January that you are opening a subsidiary in Germany, looking at that to be the next country to be involved with. Could you highlight maybe some of the cities which are relevant for green mobility to look at? And I guess it's also plausible that perhaps you order EVs from a German manufacturer.
I think everything is possible. The benefit for us is that we have choices. We didn't have that 3 years ago. We have that now, and we ongoingly evaluate a number of cars. That's the fun part of what we do, that we can test drive a lot of cars. But you're right, we are looking at Germany. We are looking at a number of cities, primarily larger cities to begin with, because then it's easier to move into smaller cities. Whether it'll be Hamburg, Berlin, or other cities, we haven't announced that yet. But the obvious is to start in a larger city. And timing will, of course, constantly be reflected against COVID. We don't want to put cars on the street that aren't moving. It needs to make sense at the moment. But we're seeing that things are clearing up in Germany as well. So we're hopeful to be able to launch that in the coming months as well.
And in terms of the customer support center, will that be from Belgium to Germany, or from?
It's not. We haven't decided that yet, but we could actually run it from Belgium as well. But it's also we could also end up having a German-speaking customer center somewhere. But I think likely we'll start in small scale and then we'll ramp it up as more cities are added. But it's not decided yet.
Okay. Maybe another question in terms of 2020, the COVID-19 impact was obviously quite harsh for you because there was lockdowns in the cities, not a lot of people commuting to work. But then you experienced throughout the summer of 2020 that there was more flexible use of your cars, that people were traveling around Denmark to summer houses and vacation houses, etc. I know that you're coming out with your Q4 report here in a few weeks with a guidance on 2021, so I don't want you to guide, obviously. But could you talk about maybe some of the considerations that you have for summer of 2021?
I think we potentially look at having the best of both worlds, because what we saw last year when people stopped traveling, we lost a lot of our business going to and from the airport, which was a traditional good part of the business, but then it shifted into a different mode. Likewise for nightlife, school traffic, and so on, so university traffic, it has simply moved into different categories. So assuming that we would all go back to what we used to and everyone will be traveling this summer, I would expect that we simply add more or less back to what we had before. But remembering we've generated a lot of new customers throughout the second half of last year. So we will ultimately still have a larger business business foundation to work from. So I think we can adapt and work with this fading back to some kind of normality, because shared mobility is needed regardless of the sort of societal status.
Okay, and in terms of maybe the guidance, could you perhaps talk about which KPIs you will be introducing in your Q4 report? Is it number of cities? Is it revenue? Is it earnings? Or how do you think about that?
For us, as a growth company, cities and vehicles are still main drivers. Naturally, we will have guidance on revenue and profit loss as well. But I think for now, it is about generating that growth that will generate the coming financial terms. But all of them will be part of our guidance.
Super. And maybe one last question. You talked about, some of the hubs that you're introducing. We talked about, Belgium. Vienna is also coming online in 2021, I guess, and that's also becoming a hub, as I understand it. What other countries are relevant for green mobility? You've mentioned UK before. You've mentioned, I guess, the southern part of Germany, maybe even southern France. Are these some of the areas that you're looking at? Is exclusively EU, or how does that work?
Well, you mentioned a lot of areas, and I think more than we would realistically be able to cover in 21. But we've already announced that we also want to return to Oslo. So Norway is obviously a market. Existing markets, such as Belgium, is obvious to look at additional cities, just as Brussels, Germany, Austria. I think that's a good start of next year. But obviously, we constantly monitor and evaluate a number of cities across Europe.
You obviously have a number of competitors which are also owned by the car manufacturers. Is that a huge advantage for them versus green mobility, or do you see, a niche market for you to operate in?
Not from our perspective. I think it's not. Obviously, you have a strength with an OEM as your owner, but it can also carry a sort of a flip side that we've seen during the last year, that the OEMs naturally focus on their main business, the production sites, and less on what I would call their new ventures. So whereas we've been able to focus entirely on our shared business. So I think it's you have plus and minuses in it, and we don't see a bigger risk from an OEM-owned car sharer than any other car sharer.
Super. Thank you very much for your time, Anders. To all the participants, you are welcome to do research and introduce or reach out to Anders. He's always happy to talk to new investors. So thank you very much, Anders, and have a great day to you and everyone else on the call. Enjoy the seminar.
Thank you all.
Hi, and welcome to this presentation with Bergs Timber. My name is Benedicte Aas, and I am an equity analyst at ABG. Allow me to introduce Peter Nilsson, CEO, and Anders Marklund, CFO. Please go ahead.
Thank you very much. And we're sending this presentation from our Vimmerby office in Småland, Sweden. And we're going to give you a highlight of our strategy and our plan for how to change Bergs from being a pure sawmilling company into being a more active owner of companies working in the wood industry. And we are going to take one slide each, more or less.
So next slide, please. And one more. Yeah, thank you very much. And this is to give you an overview how Bergs' current operation looks like. Currently, we have 7 independent subsidiaries within the wood industry. We have 8 manufacturing sites in Sweden, Latvia, Estonia, and the UK. We have about 850 employees in 4 countries. Last year, we had sales of a little bit more than 2.1 billion and an ambition to grow. We had a good profitability level last year with an EBITDA of 212 million, corresponding to a margin of 10%. And this good profitability, together with the proceeds from the sales of the Swedish sawmills that we did last year, has strengthened the financial position considerably. And we ended up last year with a net cash position of 32 million. And this gives us a very strong position to develop Bergs in the direction that we will present today.
Next, please. Bergs is now a bit more than 100 years old as a company, and it all started with sawmills in South Sweden, Småland. And the company has developed very nicely and well during the years, but it's not a secret that sawmills, especially in South Sweden, has had some quite tough years, the last 20 years, I would say, with very varied profitability. And from time to time, quite a strained situation financially for Bergs. But about 5 years ago, we really started to work how to widen the scope for the company and to even look at new geographical areas. And it ended up with the acquisition of Norvik's companies in the Baltic states and UK, which more than doubled the size of the company. After that acquisition, we continued to look at how to develop the Swedish sawmills, our own sawmills. And we had a plan which meant a lot of investments and quite big changes. And really looking into the plan, it was quite a big risk for the company to fulfill it, and it would also take resources from our plans to develop into new product areas. And then after sort of evaluating the situation, we last year divested the sawmills. And of course it gave us, and we have a very strong platform for growing in other directions, and that's what we're going to talk about here. The main things with the strategic agenda for Bergs is that the listed company is an owner of companies which we are going to develop. And it is in the wood-related industry and logistics. We have a clear decentralized business model with independent subsidiaries with clear responsibility for results and development. We are working in 3 main product areas: sawn wood, joinery, and the wood protection. And we have also clear focus for growth, investments, acquisitions, and product development. Next, please. we see a very positive trend for the wood industry, and it's driven by the demand for sustainable products. And I think we should be on the next slide, please. The very positive trend for the wood industry and for the wood as building material, and it's driven by the demand of sustainable products. And here we can see a strong help from, domestic, different countries, EU, basically the whole world is driving and helping the development of wood. And it's driven by governments, etc. The industry has also been able to successfully develop new products and building systems, which help to make wood an attractive product for building in high buildings, bigger buildings, and it has also created a more cost-efficient way of building in wood compared to, let's say, 10, 20 years ago. Also, the interest for home improvements and do-it-yourself is helping the development. Next, please.
And this is how we have organized our business today. We are organized in 3 product areas. And the biggest area is what we call the wood protection, with the net sales last year of just over 1 billion and representing 44% of the total group. In wood protection, that includes treated wood for different applications. That could be impregnated wood, painted or coated wood, fire retardant wood. We also have a special range of treated and untreated wood also for some of our special DIY customers, especially in the UK. EBITDA margin was about 6%, and looking into the different product areas within wood protection, that margin varies quite a lot. One rule of thumb is that the more value added, the higher margin. And we come back to our direction a little bit later. The second area is joinery, and that is made up of custom-made doors and windows in the premium segment. It's different kind of garden products, and we also have a newly built house factory in Latvia, also producing different kind of houses. That's all from multi-story buildings to hotels and leisure houses. And the Aktier houses in Sweden are a major product that develops very well at the moment. Net sales last year is a little bit less than 300 million with a good profitability. The third product area is the sawn wood, and that's production of sawn wood, mostly to industry customers for further construction and value-added production. Also, one of our sawmills are also supplying our wood protection businesses as well. This area represents 36% of the net sales last year, with a very good profitability, almost 14% in EBITDA margin. And I would say that that is due to a very hot market for wood products at the moment, but also that our remaining sawmills have historically had an average higher margin than the divested Swedish sawmills.
And then we take the next slide, please. And I'm going to take a few words of our 3 product areas. And we start with wood protection. We are one of the largest supplier in EU, with production in Sweden, Latvia, and UK. We have an extensive knowledge due to our long experience, and which we are proud of. We are very active in different development projects and collaboration with customers, etc., to even widen the range of products. And Our markets are mainly Sweden, UK, France, but also here we can mention the Baltics and Iceland. And it's sold mainly to builders, merchants, and DIY chains. Next slide, please. And this is our site in Nybro, Sweden, which is, if not the largest, one of the absolute largest in Europe for wood protection. And then we take the next slide, please. And here we are in product area joinery. And there we are active in 3 segments: doors and windows, garden products, and modular houses. And we see a nice growth in all the 3 segments with about 5 to 10% annually. And we can also mention here that Berg stands for 15 to 20% of the doors and windows for special houses in the UK. Customer made. Next slide, please. And so our product group joinery, it is a wide range of garden products, fencing, stairs, swimming pool kits, etc. We have certified doors and windows, CE marked for UK, Sweden, Iceland, and the Baltic states. High quality of modular houses, and we're actually launching a new garden furniture program under the name of Radical Wood, which is mainly for Sweden. Looking at the customer base and the countries, the main countries, markets, we can see it's very similar to what we just seen, but with a little bit less to Sweden and Norway. But here we see a big potential for growth, especially in Sweden. Next slide, please. This is our site in Valmiera, Latvia, which is for both for joinery and wood protection. And here we have about 500 people employed. And we have a lot of plans to develop the site and the areas. We own the land all around, nearly all what you can see at the picture, actually. And then we take the next slide, please. So even if we sold this Swedish sawmills, we're still very active with sawmills and sawn wood. And this is from the Baltic states. From Latvia, there we stands for about 10% of the country's annual production, with one big site, with proven very good profitability, mainly industrial customers. From our Estonian mill, we are selling mainly to our company in Latvia, Bykulat. And we have a very strong relation with raw material suppliers, which is raw material is a key to a successful sawmill. So that is a very good reason to keep and develop these mills for berries. Next slide, please. Here is the site, Vika Wood in Latvia, the sawmill. Next slide, please.
In addition to the 3 product areas, we also had 2 other operations. One of those is production and sales of pellets for heating. And that's mainly for private persons, as all the products are bagged. And these are sales mainly in Sweden and Denmark and through builders, merchants, and DIY stores. We have a very modern production unit in Sweden. It's in Fågelfors in Småland, and that's also the trademark that we're using. And the production at that site is about 5% of the Swedish production of pellets. We just also introduced a new product that's a stable pellets, and that was for bedding in stables and similar usage. And the sales in this area was about 100 million last year. And we also have a port and distribution business in the UK, and that's very close to London area and very close to M25 for further distribution. And here we are handling wood, our own wood, but also external customers, and also a big part steel products that is totally external. This was sales about 75 million last year. Next slide, please. And then with the background of looking over the strategy for the group, we also have reviewed our financial targets. We aiming for a growth of annual growth of 10% over a business cycle. That should be made both organically and through acquisitions. EBITDA margin over 9% over a business cycle. A financial net debt should be lower than equity, and we normally should distribute about 25 to 40% of net profit for a year. And in comparison to previous financial targets, we have a higher growth rate, and we have a higher ambition also for an EBITDA margin.
Next slide, please. And here is to be more specific about the growth we are planning. And we have been identified investment of about 500 million SEK in the existing units for the next 3 years as investments. And then we are, on top of this, we are actively looking for acquisition opportunities. And to be more specific about the planned investments in the existing units, it has to do with wood protection, how to grow the volumes. Linax, which is a special wood protection which we are making in Sweden, expanding the doors and windows, planing lines, expanding garden product production, but also to invest in the digital improvements. Looking at acquisitions, we really can't be more specific on that one, but we're looking at options and opportunities. Sure. The next slide, please.
And one important area to grow the business is actually working very hard with the digital development. And here we're looking for developing tools and solutions to enhance and increase our marketing and sales efforts, including logistics. We are actually very soon launching a new e-commerce solution to buy a special assortment of our garden products. And we also, of course, will look into our production also using a new technology to increase the efficiency. And here we will use Woodworks by Bergs, is our company in the group that are closest to private persons and consumers. And they will be as pioneers in the group within this area.
Next slide, please.
And if growth with the digital development is very important, sustainability is also very important for us. And besides that, we have sustainable and renewable products. We really would like to have a strong sustainability profile as well. And we have set a number of targets in a number of areas, how to work with sustainability. And a few examples of our goals are that we would like to have more than 80% of procured wood should be certified by 2024. We should reduce our accidents by 50% to 2025. And we should have zero fossil emissions in our own production by 2030. And our main emission in our industry is actually both services bought and mainly transport services, and that will of course also work with and having requirements on our suppliers.
Next slide, please. Then it's why to invest in Bergs, and it is an investment in a material which has a very positive trend, wood. And then we have to also remember that Bergs are actually the only listed company in Sweden concentrating in wood products. So that's one reason. And we have a favorable position for growth in wood protection and joinery. We have a great knowledge. I'm not talking about myself and Anders mainly, but all our employees. Strong financial position. And we have allocated 500 million for growth. And we are sustainability, which is a focus. And then next slide, please. And this is to the last three main points of how we are going to take this company from being a sawmilling company to an active owner in the wood industry. And it is, one is to build capacity in investments, complementary acquisitions, accelerate the digital journey, and then strengthen product development and aftermarket service, which we are see an increased potential. Next slide, please. And this is our last slide, more or less on time, I think. This is an example of our some of our 850 employees. So thank you very much.
Sorry for taking some minutes from the Q&A session, but I think we were almost on time.
Thank you very much for the presentation. So we have a few minutes left for a short Q&A. My first question is about after the divestment of your Swedish sawmills, how would you say that the cyclicality of your earnings have changed now and will change going forward?
I mean, historically, we had the quite tight circuits with the Swedish sawmills, and I mean, no one knows exactly what's going to happen. But looking at the raw material situation, we think it's going to continue to be very cyclical, and we don't, historically we don't see the same in our other segments. I don't know, Anders, if you want to make that more clear.
I think that's the main reason, and also that we can see historically that with the remaining businesses that we have today has over time has more stable margin. Maybe not the highest margin, but definitely not the lowest margin. So it has been quite stable and increasing. So I think the conclusion is that we will be less volatile compared to as we have been previously.
And also to say that we can see very good growth in the more specialized products, that the margins are actually higher than we have had historically.
Thank you. And my second question is regarding your organic growth target. You target to grow within joinery and wood protection. Which type of product area within these categories do you want to grow further?
Everything related to wood protection, doors and windows, and then garden products. That's the three main areas, and then of course we have to look at logistics and how to develop the digital things. But that's the three main things: doors, windows, garden products, and wood protection.
I might also add that if you look at wood protection, the biggest products groups today is what we call the green impregnated products and the painted or coated products. but we should see a really growth potential in the special products or new products. And as Peter mentioned, Linux, which is a product treated with linseed oil, which is very nice looking and very popular at the moment, and we see big growth potential in that. And also, as we see, we are building more in wood and also higher buildings in wood, which will be set requirements for more fire protected wood. Yeah, where we see a big potential, and we are actually active in that area at the moment also.
Thank you. And also, your growth targets also includes acquisitions. Could you give us any flavor on is this the same segments that you wish to expand your organic growth, or is this some other segment? And also, what type of size and profitability levels are you looking for here?
I mean, it is to strengthen the organic growth of the main gain wood protection doors and windows and garden products. That would be the goal for acquisitions. And then, but then we would not exclude any other development or I mean areas. But that is the main target. And I don't think we should limit ourselves to any specific size when it comes to acquisitions. But we are definitely not mainly looking for turnaround objects. We are looking for profitable, nice, steady companies when we are looking at acquisitions.
Thank you. Thank you very much for the presentation today and for us answering our questions. And thank you to all who listened in. Have a nice day.
Thank you very much.
Hello and welcome back to ABG's Investor Days. With us today we have Björn Järnström, CTO and founder of Ferroamp. My name is Ophelia Aspemyr and I'm an equity analyst here at ABG. And with that said, please go ahead, Björn.
Okay, great. Thanks a lot for inviting us today. So we can jump to slide number 1. And just to, is it possible for me to see the slides, by the way? Okay, anyway, we will continue. So if we start with slide number 2, so just to give you an introduction to Ferroamp, we are a fast-growing company within the renewable energy field. So we're building and delivering a hardware and software platform for integrating solar cells, energy storage, and electric vehicle charging in buildings. And this is very much driven by the energy transition and the strive towards more renewable energy. And the platform we have developed is modular, so we can cater anything from a small residential villa to a larger commercial facility. Last year we recorded net sales of about 77 million Swedish crowns, which has grown quite rapidly for the last couple of years. And we keep our target on 400 million run rate in 2022. And before telling you a little bit more about our technology and our customer offering, I would like to show you a little bit about the market context and the trends that we see in the energy industry, so you know where we are coming from. So if we go to slide number 3. So this is a recent example from Portugal, and so it's a large tender for a commercial utility scale PV installation, and one of the winning bids were 0.01 euros per kilowatt hour. So 0.01 euros per kilowatt hour. There is no other energy or electricity production source on Earth that can even come close to competing with this. And even if we were to apply this to Sweden, you might get 0.02 euros per kilowatt hours, which is still very good. And this is without subsidies. So solar is already, we have seen a very rapid growth in solar the last 10 years, and this is just the beginning. This will continue. And one challenge with all these massive deployment of solar is that you need to transport electricity to the place where it's needed, but you also need to store it in time so that you have access to solar electricity during the night or when the sun doesn't shine. And this is something that poses challenges to particularly the grid, both from a local and regional point of view. And another thing that we see is growing quite rapidly, if we move to the next slide, is the rapid growth in electric vehicles. And the race is over here. It's no longer a question if the electric car will outcompete the gasoline car. It's just a matter of when. And it's almost to that point now that we're not even counting years anymore. We're counting months. Until last year, electric vehicles was a high-end product for the sort of more wealthy owners. But this year we see a large palette of electric vehicles which are commercially and affordable from the big car manufacturers such as Volkswagen and Nissan and PSA, the PSA group. And these cars will need to be charged somewhere. And this is another thing that also causes stress on the electric grid, both locally within facilities, but also regionally. And this is some of the challenges that we address with our technology. So if we jump to the next slide. This is a comparison of the cost of energy versus the cost of the grid. So the blue bar represents the turnover on the Nordic Energy Exchange. That's the value of all the electricity being consumed in Sweden, about 40 billion crowns. Whereas the red bar is 50 billion crowns. That's the the grid fees that customers pay to get that electricity to their house. So already today, it's more expensive to transport electricity than it is to buy it. And obviously the production cost for energy is even lower. And this difference will only increase over time because the cost of energy is actually coming down because the cost of solar and the cost of wind is coming down. Although, that being said, you will still see a larger volatility in electricity pricing because sometimes you have a lot of energy and sometimes you have not so much energy. And then on the other side of that, all this intermittent production needs to be transported to where it's needed. And on top of that, you have intermittent consumption in terms of electric vehicles that need to be charged. So that will on the other side then drive up the cost for grid even further. And this is exactly where Ferroamp is coming in with our technology to address these challenges. So if we jump to slide 6, just to summarize the drivers we see in the market, you see here the solar inverter market, which is continues to grow, and you also have the electric car market, which is expanding even faster. And some of the overarching drivers here is the increasing use of renewable energy and the structural demand for more renewable energy, and the energy transition in general to move away from fossil fuels. Another driver that is becoming more and more important, but not although a lot of these technologies are not dependent on it, is regulatory incentives. And this is both from the European Union and also now from the new Biden administration to propose legislation that will even further speed up the energy transition. And then you have the technology development that is in general, I would say improving our way of life with electric transportation and backup system and more reliable energy systems. Okay, let's jump into slide 7 to give you a little bit update on our technology. So what we have developed is an ecosystem based on hardware and software, and the different hardware components are power electronics. So in the upper left, you can see the Energy Hub inverter, which is the core product that we have in all of our facilities. Today, we have about 2,500 commercial installations in operation. And the Energy Hub inverter is a core component here. It's what you call an inverter. It converts between DC, direct current from solar panels or batteries, into AC current that you can transport on the public grid or use in your facility. But it can also go the other way, so we can, for example, take energy from the public grid and store it in a battery for later use. We also have a solar string optimizer, which is used to connect solar panels to a DC grid. We have EV chargers to connect electric vehicles to the same concept, and we have integrations with different energy storage technologies. And one central part of this is our software platform in order to integrate all of this, because I think that the true value of these technologies comes when you start to see them as a system and not as separate products. So it is when you can take solar energy that you get during the day, and then you can take an active decision whether that solar energy should be used in your building, stored in your car, exported to the grid, or stored in your local battery. So it's when you start to see this as an interacting system and you have control of it, that is when you really start to see synergies between these technologies. And that is why the software platform is so important. Can jump to slide number 8. And the software platform that we have developed is part of it is run on the systems themselves, and a big part of it is run on our cloud-based energy management system. So here our customers can log on and they can not only visualize how they produce and consume and store energy, they can also control and optimize and analyze their facilities. And I think this is really one of the keys here, and this is where we set us apart from competition by the fact that we have real-time data, we have high-resolution data, so we have 1 second resolution data for most of the things that happens in an installation. And this is a very good platform to expand further and build new business models on top of that. For example, to do virtual power plants, or to have APIs to integrate with other system providers. We can do frequency regulation, for example. We can go to slide number 9. Another thing that I just would like to highlight, which is unique with our technology, is something we call phase balancing. This is a bit technical, but it's quite a good feature. Electricity in our buildings come in 3 wires. We have a 3-phase system. And in most smaller to mid-sized facilities, you have a varying degree of unbalance that limits how much power you can use. And this is particularly stressed when you are going to charge electric cars, because then you have a load that consumes quite a lot of power for a fairly long time. And that can then cause problems in your electrical supply. But with the phase balancing technology, we can actually enable this. You can even charge your car faster without overloading the mains fuses. And on top of that, you can use this technology to, in many countries, to reduce the fixed grid cost that you pay for connecting to the grid. And this is something this is actually a software function integrated in our inverter. And it's independent from solar cells and energy storage. So we have quite a lot of customers that are buying only our inverter for this feature. And just to sort of illustrate to you what type of customers we have, we can jump to the next slide. This is a mobile charging station that we supplied to Vattenfall, and it contains about 700 kilowatt hours of batteries. They are slowly charged from the grid 24 hours a day. And then you can come up with electric vehicles and fast charge them. Like in this case, it's electric snowmobiles, but it could also be electric cars, obviously. And this is one of the things that sort of illustrate what is happening with our grid now, because in many places, the grid isn't strong enough to fast charge electric cars. But then you can use one of these solutions. So you can, like in this case, it's a ski tour and the grid isn't strong enough, but then you can easily deploy this container and you can fast charge the vehicles. We can jump to slide number 11. This is another example from our customers. This is about 100 apartments in 3 apartment buildings. They have solar panels on the roof, and they have second life electric bus batteries in the basement. And all of this is integrated with our hardware and with a DC grid connecting the buildings, and then our software to manage the system. So we use it in the summertime, or they use it in the summertime to increase the self-consumption of solar electricity, and to in the wintertime to reduce peak loads. And even though these 2 examples, they look vastly different, and I can show you a bunch of more different use cases that are quite varying in size and features. But the thing that makes this scalable is our modular concept. Because and I like to compare this to Lego bricks, and if we're supplying a system to a residential house or a residential villa, we maybe supply 2 yellow bricks and 1 blue. But in apartment building like this, we're supplying 54 yellow bricks, 16 blue, and 8 red. And this is actually what makes the system scalable, and also the fact that today we're operating more and more through resellers and distributors, and we have provided them with the tools to design and dimension and commission these systems without our support. And this is also some part where actually our software platform comes in as very important, because even though these systems are sold by distributors and we may not initially know the end customer, when the system is commissioned, the end customer will log on to our portal, and we will start to get high resolution real-time data from the facilities. So even though they are sold by our channels, we still keep the main contact and with the end customer, and we have the possibility to integrate or interact with them and provide new services in the future. Okay, we can jump to slide number 12. So if we look at the last year or so, we have focused quite a lot on building our partnerships. As I mentioned, we're selling more and more to distributors and resellers. So we have added a couple of companies to that list. We also introduced our new generation of a solar string optimizer, which is designed for high volume production and where we can achieve much better margins. And we started to outsource production on our other products as well. So if we look at the near term strategic focuses, there are two things that we are focusing on. One is growth, and that is done by adding more different partnerships in order to expand to other countries in Europe, and also looking into how we can use our cloud-based platform to develop new services that gives us new sort of high-margin revenue streams based on the data and the connection that we have with the end customers. And the last one is margin development, and this is done by industrializing what we call the generation 2.0 of our portfolio. And some of the products that we sell today do still have a touch of a little bit hand-built feel to it, and this is something that we are investing quite a lot in right now in order to design the products for mass production and design for manufacturing, design for test, so that we can improve our margins. And this is a work that is well underway. The first product has already sort of come out the end of this process, and we're now working on the other hardware products that we have to do the same journey with them. Okay, we can jump to slide number 13. So as I mentioned, we are growing quite rapidly. Last year, 77 million crowns net sales, and we have a scalable business model. And we are actually improving the scalability of this business models even further. And this is the main drivers here for scalability is industrialized outsourcing. Last year, we were actually limited because we had so long lead times, so we did actually lose some orders because of that. And now, thanks to outsourcing, we have actually resolved quite a lot of those bottlenecks going into 2021, and we will continue working on that during this year. The other thing which is very important for scalability is digitalization of the customer journey. So this is something that helps our installers and the resellers to design and commission and deploy the systems. But very, very important is that the customer journey doesn't end there. That's just a start, because that is, as I mentioned, that is when the customer's facility is connected to our cloud-based system, and we start to get high-resolution real-time data, and we can build new services on top of that and new features. So the intention here is that even though we are supplying a hardware product today, the thing that you buy is not sort of the end application and the end functionality. We can actually add more functionality after the system has been commissioned. And I think this is really a key here. So we have spent a lot of time to implement good over-the-air update procedures and ways so that we can add new functionality in the future and APIs, so we can build an ecosystem around our technology. And last but not least, then improving and building new partnerships and sales channels in Europe. Okay, slide 14. Thank you. So to summarize this, we're very well positioned in a rapidly growing market, and there are global mega trends that are driving this when it comes to the energy transition and new legislation and so on. And the system is modular and scalable because thanks to this modularity and the DC grid technology that we have, that's one of the sort of underlying technologies that enables this modularity. We can address anything from the small private villa to the large commercial facility. We have a proven revenue models and scalable business model, and we're continuing to even improve that further as we go. And also I would just like to highlight the DC technology, which is where we are actually one of the world leaders, and I would actually be so bold to say that we are the one who have the most commercial installations in operation using DC technology, and some really high-end applications where we have like office buildings with more than 1,500 load points on our DC grid. Yeah, that's essentially it. So thanks a lot.
Okay, thank you for presentation. As you said, Ferroamp is growing really fast, and you also have a focus on growing fast, but can you say something on when you expect to be profitable?
Yeah, so we expect to sort of reach net zero by the end of this year. So and this is mainly driven by the fact that we are increasing our volumes and we're continuing to work on improving our margins.
Okay, and you have a range of products today. Are you primarily working with developing this further, or are you working with new products today? And can you, in that case, say something about the new products?
Yeah, so all of the above, I would say. So we are developing a new generation of our products. This is partly one very important thing here is to improve the margins, of course. But another very important thing there is because at the same time we are adding new functionality such as backup and off-grid capability. So we get that integrated into the Energy Hub inverter. And when it comes to the new product side, one thing that we are working quite heavily in is EV charging, because I think that EV charging is really, really central to electrical installations in facilities in the future. Because so far, electric vehicles has been seen a bit of a problem because they need a lot of power to charge, and you need to expand the electrical grid in order to cope with that. But with new technologies such as vehicle to grid, where you actually can discharge the car will also become part of the solution. So that is why it's so important for us to integrate them and also to see them as one of these as one part of this overall system. So yeah, that is one of the new products that we are working on.
And as you said, also energy storage is a hot topic. Can you say something about your levelized cost of storage compared to a commercial storage solution?
Yeah, I would say that we are roughly the storage systems we sell. The main cost driver there is actually the cost of batteries. So I would say that on the levelized cost of energy, we are on par with other companies in the business. But I would like to say that particularly because now we're operating mostly in Sweden, and it's not really a good use case to store energy and to really use energy storage for just for the sake of storing energy, because we still have fairly low electricity pricing in the Nordic countries, and the price volatility is, with a few exceptions this winter, hasn't been that severe, so that it actually makes sense to store energy from that aspect. So I think the big driver here is actually to use energy storage for reducing power consumption. And in that sense, we have actually designed our system so they can deliver higher power levels than a lot of our competitors that have focused more on sort of self-consumption of electricity, for example. So in those cases, we are actually more cost competitive than a lot of other companies on the market.
Mm. And should you say that this is your competitive edge, or should you say that it should be the phase balancing or the energy cloud, or what should you say?
Yeah, again, all of the above. Yeah, I mean, we have some unique features. It's the phase balancing that sort of creates a real instant value for the customers. But then I would say that the focus that we have when it comes to energy storage is working with peak power reduction and power management is also something that sets us a little bit apart, because this is where our customers are sort of seeing their pain points today. And then, of course, the software system and the APIs. I mean, being a even though we're growing, we're still fairly small, and I think that our success is not to do everything ourselves, but rather to have a software platform and have open APIs that enable and even encourage other vendors to integrate their systems and their functionality with our platform. So in a sense, you could say that their success becomes our success.
Okay, really interesting. I think we have to round up here. Thanks a lot for the presentation, Björn.
Yeah, thanks a lot.
Thank you.
Good afternoon and welcome back to ABG Investor Days. My name is Jesper Birch Jensen and I work as an equity research analyst here at ABG. With us today we have the CEO of Precise Biometrics, Stefan Persson, so without further ado, please go ahead, Stefan.
Thank you. Next slide. Next slide, please. So, warm welcome to Precise Biometrics. We are broadcasting from our offices today, so it's really nice to have you here, even if I can't see you. What you actually saw here recently were the real life. Something happens right now, and it's not the future. And I will come back to that a little bit later in my presentation. So my name is Stefan Persson, and I'm CEO for Precise Biometrics. I will give you an update about what we have been doing during the last 2 years, the actual situation, and a little bit also about the future and the huge potential we see in this market. So next slide, please. For those who haven't met Precise before, I will start with a little bit of who we are and then the background of the company. So next slide, please. We were founded in 1997 in Lund, actually, and we are today 50 employees. We are based in Shanghai in Asia, who are taking care of the operationals in the mobile area for our customers out there. We have our headquarters in Lund, where we have the majority of the development of our platform in the fingerprint area, but also the new area of digital identity and unique. And then we have an office on the East Coast in the US, in New York State, in Potsdam, who are taking care of the US market and all customers there, and also selling the unique system, and also is supporting the development of our algo in the mobile area. We have two business areas, the digital identity and algo, which is the mobile and smart cards. We are on the stock exchange market, approximately 500 million SEK. So you can actually buy and sell us every day. That's possible. Next slide, please. Everything is about that you are the key, and I will talk more about that in the coming slide. Next slide, please. So it's about real customer, the real needs, and real life, so to say. So why should we do things complicated when we can make it very, very easy? And with the technology that's available now, you can actually have a fantastic, easy life with a high security. Next slide. It's about you are the key. You are the key to everything. So no matter of who you are, where you are, and what you do, you should always have access to a digital identity in a very controlled and secure way. It's owned and handled by you, so you decide when to use it and how to use it. You are the key. Next slide, please. Now I will talk a little bit about the future here, how we see the total market and where we're progressing. It's about one ID and what we call several applications and resources. Next slide. Today we have a situation where there are more and more consolidation of the digital credentials. We're coming from a situation where you have passwords, you have PIN codes, you have cards, etc. But that is now merging into one credential in the identity area. We are going also to see the more merging online and offline identities. In the past, it was more or less impossible to have something for different type of application, but more and more are now integrated into a merging situation. And in the future, then we will have a single credential for all activities. Next slide, please. This is a very important landscape picture. If we start on the left side, we have the trusted source like national government, like banks, and in some countries it's the telecom operator or the gas supplier that actually is the starting point of the trusted source. And then that trusted source is then linked to an identity provider. So in Sweden, we have Bank ID or Freja EID. And then on the right hand, we have a lot of different digital IDs in the landscape. We are the link between the left side and the right side. We have the possibility to link the user's trusted source ID to something that we can utilize in many, many different applications on the right hand. Today it's using the PIN card, PIN code and different cards and tags, etc. But in the future, you should only use your biometric to open up different applications and resources. Next slide, please. So yesterday it was, for instance, in the access system, it was a closed source. It was a proprietary system, actually like the old mobile phone industry, where you have the Motorola, you have the Nokia, you have the Ericsson system, and no one were talking to each other. And that we can see also in the access system. But that will now change here in the same way as there have been change in the mobile industry, where we have the Apple platform and we have the Google platform. We will see a similar changes in the access system also. Next slide, please. So what will happen then is that we will have a more open source operating system where you actually can add on different type of technologies and different type of features on top of the open platform. It will not be one system that fits all. It will be an open environment where you can actually add different platforms into the system. It will be one user, one digital identity, but many, many applications and many, many different type of features, etc., that will be used outside in the world. Next slide, please. One example here could be, for instance, we can today integrate with, for instance, the LG screens. So when you enter the office, you get a warm welcome, and then on the screen, so it's based on that the face recognition, do the matching, and then the information sends to an LG screen, and then you have the information on the screen, as you saw in my previous video, actually. So this is not the future, it's something that happens already now. So you can start to combine the digital identity with a lot of different services and applications out there. Next slide, please. Precise unique ID then. Next slide. One day in your life means that you open up in the morning, you open up your mobile phone, you open up your bicycle or your car, you go to the office, you buy a coffee, and you buy some lunch, and then you go to the gym or you take a transportation, etc. You buy something on the internet. There's a lot of different things you do that today requires passwords and PIN codes and cards, etc. But what we can see now in the future is that all this will be removed in one way or another way, and you can use your biometrics instead. Next slide, please. So this picture then means that you have the trusted source, you have the identity provider, and then you link that ID with your biometrics and can start to use it in the digital world for many different applications, distributed via our cloud services. Next slide, please. One example could be, for instance, the hospital. We have the possibility there when you have done the identity provider and, for instance, Freja EID, and then we can start to distribute out this, for instance, at the hospital. When you come to the hospital, you enter the building with your biometrics. Then you walk in the corridors and open doors with your biometrics. You open up different applications on computers, etc. You use biometrics. And then when you open up lockers, etc. for medical handling, you use your biometrics. So no password, no cards, no tags. You use your biometrics for opening up different type of applications and services out there. Next slide, please. Then we actually started here with the financial institute and banks and all that. But they were very slow mover, and then on top of that, we had a problem with the corona situation and all that. So then we decided to start with access. So now I will explain a little bit more about the access area. Next slide, please. So we have seen that we have divided into 6 different verticals. It's apartment blocks, it's commercial buildings, constructions, gyms, industrial, and public. And we have started to work in all of these verticals. Due to the corona, gyms is a little bit tricky right now, and we have most attraction in construction and in industrials right now, but all of those areas are very, very interesting for the future. Next slide, please. The go-to-market strategy here is that we, of course, will integrate with different AMS, access management systems, like what we have done now with the RCO, and there will be more to come. We have S2 in US, for instance. It's so important that we are integrated with this platform to get the scalability. We are working very closely with the installation firms also, because they are a right hand out there to install the system and make sure everything is up and running by the customers. We have also direct sales, because it's so important to understand the market and understand the customer's needs there. If we don't have that, we will not be able to develop the future roadmap for our customers. And then we have other type of measurement like partnership, ecosystem, and maybe acquisitions also to open up and actually get a bigger platform for the future and opportunities there. Next slide, please. So this six segment and the 6 verticals, we have looked into the possibility there. And just in Sweden, we have hundreds of thousands of different buildings, and we can see the number of buildings is increasing every year, and the opportunity there is great. So next slide, please. So what we've done there is that we take the number of properties in Sweden, we look into the split between what we call mechanical and electromechanical locks. And then we said that in average there will be 1 installation per property. It might be more, but at least 1 installation per property. And we have all calculated that the annual revenue will be in the area of 35,000 SEK in Sweden. And then an adaptation rate also, which means that the conclusion will be, next slide please, that the overall potential market is more than 7 billion SEK just in Sweden for this type of product. And we think that maybe 15% will be addressable by Unique, and that means, next slide please, at 2025 we can address with Unique just in Sweden approximately 1 billion SEK in Sweden. Next slide please. When it comes to the number of users and installation, we're tracking that each month. We started here last year with 0 installation and 0 users, and now gradually during the last year we have increased it month by month. Today we have close to 50 installations. We have thousands of users every day. The business model is based on what we call a SaaS model, a software as a service. It's a recurrent revenue. So it's a very, very stable setup because we are signing a 3 years contract. So compare with the old business from Precise, we now have a business model that is a recurrent revenue. The average price for this is 1 SEK per user and day. And we will continue to track this and of course present it now and then each year. Next slide, please. Today, we have a lot of installation already, as I said. We have a good partnership with RCO, we have NVSS security, we have a lot of installation done with Algeco, and we have some very interesting ongoing activities that will happen during 2021. Next slide, please. Then into our main business today, the Algo, which is the mobile and the smart card. Next slide, please. So we have a very solid position within the mobile, and as you know, mobile is a very competitive market. We have been focusing on ultrasonic and optical area, and recently we announced again our deep collaboration with Qualcomm, and we're working very close with ABGSC also, as you know, and other potential partners out there. We have a situation now that we have increased our scope. We have pre-processing, we have the matching, and then we have also the liveness that is extremely important going forward. What we can see here is that the usage of mobile phone increased day by day, and due to that, it's very, very important that we have a very secured interaction with different applications on the mobile phone. So safer and faster than ever, and it's looking good for the future in the mobile area. When it comes to the biometric cards, together with our partners, we have done the evaluation that there will not be any huge volume this year. We continue to work closely with them to see the opportunity in the market. And as we said earlier, it's a bonus if something will happen this year there. What is very important for the future is the easy enrollment and the low cost that need to be better to really scale up and see a huge volume in this area. Next slide. I will now give you some update about the business status and how we see that. So next slide, please. During 2019 and 2020, it was about stabilization of the business. We came from a very tricky situation, and during 2019 and 2020, all the focus were to stabilize the overall business. We have a sales in the area of 20-25 million per quarter, so we could see a really stable progress of the company. Gross margin in a healthy 90%. We think that it might decrease a little bit over time because we invest a lot now in digital identity, and by that we might hit a little bit in the gross margin. But overall, a very, very stable sales and gross margin situation for the company. Next slide, please. When it comes to the operating profit and loss, our target were to be close to plus minus zero, because we invest all our EBIT earnings into the new area, because we are planning and we are doing things to grow the business going forward. So all the positive EBIT we have generated during the last 2 years, we invested that in the new business going forward, and we will continue to do that also during this year. Next slide, please. Very stable cash flow situation. We have now it in a much better control compared to 2 years ago, and we continue, of course, to monitor this carefully, how much we can invest for the future, and continue to have a stable situation for the company. Next slide, please. So that was all for me, and then I hand over to you again.
Thank you, Stefan. I have a couple of questions. Let's start off with a few on Unique. As you mentioned, you started 2020 with close to 0 installations, and now you're close to 50. What's been driving this? The change? Have it's been mainly incoming customer requests, or did you like see that COVID is going to change the demand for this product?
So the actually COVID had helped us a little bit, not in the gym area, but in other area, because this is a digital end-to-end solution. You don't need to meet anyone that should have access to a certain area, and you can send out the invite and all that via just an email. So that have actually helped us, a touchless end-to-end solution. Of course, when we started from 0, we had a good reputation within the biometric. We're utilizing in that to start to roll out. But of course, we have put a lot of efforts into sales and marketing, and we'll continue to do that because this is a new area for us, and it will take some time to build it up. But this will be the major part of Precise going forward. And as you could see, just in Sweden, is a fantastic opportunity with addressable market more than 1 billion SEK just in Sweden. We have started to focus in Sweden and the Nordic countries. We have some activities in Norway, and via our sales office in US, we have actually been able to sell and have the first installation in US also. So that will continue to be the main focus here going forward during the next coming year.
Thank you. And you touched upon it there that Sweden will be your main focus to start with. And I was just wondering, thinking in terms of perhaps sales and marketing or other competencies which you might need, what is it you need to really scale up the number of installations? Do you feel that you have what you need to do that, or do you see a need in certain areas to grow in Sweden?
No, so the important part here is to have the partnership, like what we have with RCO or S2 Lenel, because then we can address the existing market. We will, of course, continue to sell with our own resources, but that's very limited what we're capable to do there. The important part here is to be compatible with different platforms to get up the scalability. And we're also spending a lot of resources and efforts now to both educate and get installation partners up and running, because then we will scale the sales efforts and opportunities going forward.
So, and when you speak with your installation partners, are there other solutions which they can offer their customers then, or is Unique pretty much unique in this area?
Yeah, we are pretty unique actually. It's a digital end-to-end solution, which is not so common in this area. We can see there are competitors in Asia and in Korea, but most of those are actually on-prem solution and not possible to have a digital distribution. So right now we are pretty alone in this field and this area. Of course, there will be competitors out there and that will come, and it's no issue with that because the market is huge, as I said. But as it is right now, we are unique with this product.
Thank you. I have a couple of questions on the mobile segment as well, and you touched upon it there that you recently announced that you further your partnership with Qualcomm just last week, and that your new software has been integrated in their ultrasound fingerprint sensor. And I was wondering, what kind of types of volumes do you expect from this deal? Do you expect it to contribute in 2020, or is it more of a longer-term contribution?
Now, we really hope that it will contribute in 2021. When it comes to the volume, it's really tricky to estimate that because all the sales and all that is via our partners. And as you know, I mean, Qualcomm and EdgeTech and other partners, they are selling this to as a platform to the OEMs like Samsung, LG, Vivo, Oppo, etc. And that we are not really part. So our customer is EdgeTech and Qualcomm. And to estimate their volumes out there is really tricky. And that's one of the reasons why we can't give any forecast for the full year, because we don't know actually. But the situation is really good. We took a decision here 2 years ago to minimize the number of customers and really support them and spend a lot of efforts into the development to take a bigger scope of the pre-processing and the liveness, etc. And now we can see that starts to pay off. But how successful they will be out there, that's impossible to say.
And do you know, I guess you don't know then how many smartphone solutions which actually they've sold this solution to yet? I guess that's ongoing.
No, they report that quarterly, and so unfortunately we don't know that. Of course we know which phones they have tried to sell to and tried to integrate it to, but which solution in the end that will be successful, that we only get quarter by quarter.
I understand. Thank you. That was all the questions for me, but thank you, Stefan, for joining us today and telling us more about Precise.
Thank you. Thank you. Have a nice day.
You too. Bye.
Take care.
Hello and welcome to this next presentation here at ABG Investor Days. My name is Simon Granat and I work as an equity analyst at ABG covering IT and tech stocks. And with us today we have the pleasure of welcoming Magnus René, who is the CEO of Ovzon, and also its CFO Johan Brandt, who will together present the company. They will present the company for about 20 minutes, then we will follow up with a smaller Q&A session for about 5 minutes. And with that said, Magnus and Johan, please go ahead and present the company.
Thank you, Simon, and welcome everyone. So we're going to present this Ovzon, the Swedish-based satellite communications provider, with our exciting what we are doing exciting for the future. Bear with us that we are actually in two different places. I'm in Boston, Johan is in Stockholm, so we hope we can make this presentation live and nice anyway. So let's switch to the next picture immediately and to Johan.
Okay, thanks Magnus. As you probably know, Ovzon is a Swedish company offering a unique broadband solution focusing on performance, which is more or less bandwidth, and mobility, which is offering the smallest terminals. The company was founded back in 2006 by Per Wahlberg and Kenneth Leinell, both with a background from a Swedish company named Swedish, focusing on production and development of small satcom terminals. And the plan when they started Ovzon was to maximize the performance and the mobility by combining the product development of small terminals and also the design of our own satellites. The first terminal was produced and launched back in 2013, and our business model and our service, which was a regional service by then, has been validated since 2014. And today we have 31 employees around the world, a very experienced team. We had total sales of $19 million for 2020. And if you look at our total addressable market, that market amounts to roughly $6.7 billion, and that includes the MSS services and part of the FSS services, which we will get back to. So next slide, please.
So if we look at what we are doing and what we have done the last, say, 1, 2, 3 years, we build the company strong. We build a foundation to handle our first own satellite and to prepare the company for that. And we do that in many different ways. On the commercial side, we add a number of new partners. We've added Airbus, GoMedia, Network Innovations, and so forth, partners in both Europe and in South America. We have added agreements with Intelsat where we have built a network based on the satellites available that are most like Ovzon 3 in order to start selling and showcase the Ovzon 3 case already now. We have got new orders from US DoD, or renewed orders, I should say. That is continues to be our biggest customer. We have launched our new terminal Ovzon T6, which is a lighter and more easy-to-use version of the T5. We have demonstrated SATCOM on helicopters, which is something that everyone in this business finds extremely exciting because it's a very hard business technical case, and it's a very compelling business case because helicopters are often used for surveillance, and the ability to stream video, for example, for a helicopter is interesting not only from defense point of view but also for coast guards and rescue services and so on. And We have demonstrated that. We're working, for example, with our large Italian customer. And just to give you a flavor of this, the Italians, they have, say, at least 30, 40, 50 helicopters that could and should in the future be equipped with satellite communication, which means that there are thousands of helicopters worldwide that should have this. So it's potentially a very big market where we have a unique solution. We have invested in the organization. We have several new top recruitments to the management team, and we have on the downside experience, of course, some disturbances from COVID-19. And moving on, we have today a backlog of roughly 70 million US, which is a pre-capacity contract on Ovzon 3, but also commercial orders from different customers. We are launching our first satellite, Ovzon 3, which will bring us capacity, but also a differentiated offering moving forward. So altogether, we are entering into new area, and we are well equipped for that area. So next picture, please. A very quick technical crash course in satellite communications or in communications. So why we have satellite communications? Because there is fixed, there is mobile. The short answer to that is that fixed and mobile are both require comprehensive and a lot of infrastructure that is ground-based and that is not movable, whereas satellite has all the infrastructure in space and can move it to wherever it's needed. So with satellite communications, we can always move the infrastructure and our capability to wherever it's needed on the globe in more or less an instant. Next picture, please. And with the foundation we have built, we are, as I said, taking a big step, launching our own first satellite in the end of this year. It will go live mid-2022. And this is, of course, something that will help us expand our business by a lot moving forward. And now we're going to show you how we are doing that. Next picture, please. So we will, to take care of this vision and execute on it, we will use our technical solutions, our expertise, our position there. We'll use our proven position with the large customers, with specifically defense customers. And we will continue to develop the organization. We'll use the organization that we have built during the last couple of years, and we'll continue to defend our position as an innovation leader on the market and also to expand that position. Next picture, please.
So if you look at our offering, the Ovzon services is sold as a complete SATCOM solution. And when you look at our solution, it's more or less a one-stop shop, which means that you get a user-friendly terminal, which is bullet number 1 here. You also get satellite capacity. You get gateway connectivity, and you get the network management system. And of course, you also get 24/7 service and support to be able to run this service in a professional way. The next picture, please. As you know, we are offering a revolutionary mobile broadband service, and our service has transfer speeds that are significantly higher than competing services. And in this chart, we try to position ourselves versus competing services. And if you look on the x-axis, we define the mobility, which is more or less the size of the terminal. So to the right, you have really small terminals, and to the left, you have more or less fixed solutions with large parabolic antennas. On the y-axis, you have the bandwidth. You start around 0. And as you can see, with our leased capacity, we are running a service around 20 megabits per second. And you find the Ovzon service in the upper right corner, which is this combination of high bandwidth, great performance, and small terminals. You can also see that we have this indication saying Ovzon 3, and that means that our current position is our current solution when we run this service supported by leased capacity. But when we launch our own satellite, and in the future a number of satellites, we will be able to improve our service even more, either or in a combination with smaller terminals and even more bandwidth. So you will see Ovzon be moving in the upper right direction. And you can also see other competing alternatives. Along the x-axis, you see MSS services, and to the left, you see a number of FSS services. And in the middle, you also can identify some LEO initiatives, for example, Starlink. The next picture, please. Our goal has always been to launch our own satellites in order to fully leverage on our unique technology. And as Magnus said, our first satellite will be launched by the end of this year. And Ovzon 3, which is the name of the satellite, is equipped with an onboard processor. It's also equipped with 5 steerable beams. And this makes it possible to deliver even better performance, smaller terminals, and new services that we haven't been able to deliver today. So next picture, please.
Yeah, so talking about different satellite services, I'm sure that some of you or all of you have heard about LEO satellite constellations. So this is a way to explain different structure of different networks and different satellites. So to the left, you have what we call regional satellites. They cover a fairly large fixed areas. Typically, these are designed for TV broadcasting, so they cover a region or a country, and we use them for part of our satellite service. In the middle picture, and typically the regional beams, they can be moved around, but they are not moved around all the time. In the middle picture, you see a representation of spot beams, which is what we have on Ovzon 3 and what we lease today from Intelsat on IS-39 and IS-37. These are beams that are agile, that are much higher energy than the spot beams, so they give higher bandwidth for the user, higher communication speeds. And they can also be moved much quicker. They can, for example, follow a ship or a boat when the ship or boat is moving. So they are truly movable infrastructure. We can put all the energy of the beams to exactly where we want to have it. And then on the third picture, you see what the LEO low orbit constellation looks like. That's quite the opposite of steerable beams, where you have a certain infrastructure, but that infrastructure is smeared out over the entire globe, and you cannot, for example, put more energy or more power into a certain area, but it is what it is. And in some areas, you'll have capacity that you don't need, and in some areas, you'll have capacity that is not enough. And next picture, please. And the way we see our advantage, GEO is us, geostationary orbit, and LEO is low Earth orbit. And there are a number of things that are important differentiators here. What are the most important ones, we believe, is regulatory, where since LEO is moving all the time and is actually covering everywhere all the time, it has much more challenges when it comes to regulatory and spectrum sharing than GEO. The satellites themselves have a limited lifetime, 5 to 10 years, whereas GEO is typically more than 15 years. Our satellite is designed for 16 years plus. The network architecture is simple for GEO for the reason that it's the satellites are fixed on the horizon, whereas for LEO it's complex since the satellites are moving and you have a lot of handover issues and stuff like that. The same effect or the same fact gives the issues with the free sight of a satellite, where LEO is challenged, whereas GEO is simple. And as a summary, you can say that LEO is more of a mass market standard internet service, whereas GEO is mass market and niche markets, with our ability to point and focus energy and beams to exactly the areas where we want to have them, or rather where our customers want to have them. Next picture, please. So this picture shows our network as it is today, where we combine steerable beams with regional beams and give our customers the ability and opportunity to use our terminals in a broad range of geographies, and at the same time give them the opportunity to have a super high spot beam, super high service in areas where they choose. Next, please.
If you look at our customers and applications, we focus on customers having a need for significant high bandwidth and high mobility communication solutions. And our service has been delivered to customers since 2014. During the foundation, we delivered our service to US DoD, and they have been a customer to us since then. If you look at recent expansions, we have also been delivering services to the media sector and to NGOs. And in the future, we might also address industries like aviation, the yachting industry, or the telemedicine industry. So next picture, please. So Ovzon 3 is our very first own satellite, and we started that project back in 2019. Now is the time to launch the satellite, and it will be launched by the end of this year. So the planning, design, and sourcing, we are done with that. The detailed design is also finished. So right now we are manufacturing, testing, and are doing the verification of the satellite. So we are planning for the launch in the fourth quarter 2021, and the start of service date will follow roughly 4 to 6 months after launch. If you look at our activities during 2020, Magnus mentioned COVID-19. I think it's important just to notify that we have not experienced any significant negative impacts by COVID-19 when it comes to this project. So we follow more or less the plan. So next picture, please.
So we said we're going to talk about how we build the future, and this is really how we are building the future. We have been recently expanded a number of customers, and it's important to understand that we have one very large customer. We have a number of smaller customers, and in the future, we still think we'll have a few very large customers on the government side, and then a lot of smaller customers on the commercial or smaller side. And we have started that journey to build a larger customer group. We have, to do that, we have expanded the number of sales partners from 1 to 10-fold in the last actually 18 months. We have expanded the number of employees, mostly on the commercial side actually, but also on the R&D side to build our future. And as mentioned, we have this agreement, very important agreement with Intelsat, where we've been able to expand our network so that we have now a global reach network. On the recruitment side, we have a new incoming CEO, Per Norén, that will start latest end of April. We have 3 more additions to the management team to strengthen that team. Tom Hopkins as the Chief Operating Officer, Dan Geiger as the Chief Commercial Officer, and Nils Norén as the CPDS, Chief Product Development and Supply Officer. And that is, of course, a big change, and a big, let's say, strengthening the management team is very important. And finally, we are on time for launching Ovzon 3 in this year, and fully move into our own service in 2022. Next picture, please. And if we look at the market we are addressing, the total satellite market is roughly 127 billion US dollar, and it's more or less stable. It's growing relatively slowly, whereas the part that we are addressing, our addressable market, which is mobile satellite services and part of the fixed satellite services, is growing with a healthy 8% according to 2 consultants, and that is the market that we are addressing. Next, please. And if we look at this, where we are in regards to competition and with the structure we are building. So we have a purpose-built satellite that is coming on board very soon, online very soon. We have the smallest, the most mobile, and highest bandwidth terminals, the best in the business, frankly. We are leveraging a part of the band, part of the geostationary band, which is called KU, which is preferred by our customers. And we have 10 orbital positions, 10 parking spots in space that we can bring in use for future satellites to come. Next, please. So to summarize then, how we are taking care of exploring our vision. We have a technical solution that is ahead of competition. We have customers that are staying with us year by year and that are happy with our solutions. We have built and are continuing to build an organization, and we are investing for growth, and we are taking care of and developing our position as an innovator leader on the market. And with that, we move on to questions, please.
Thank you. For that presentation, both Magnus and Johan, I think that Johan showed a great picture where Ovzon is able to combine both high mobility and high bandwidth. And my question regarding that is, what's keeping competition out from that area? You showed a great chart over it. Is it the technological advantages, which is rather complex? Is it patents? What's it relating to?
So, I mean, our position is a result of both technical solutions, how we have designed our service, the use of our unique frequency band and the 30B band, and also how we have developed our terminals on ground. So it's a combination of all, I would say.
Okay.
So it's the energy in the satellite, it's the terminals, etc., etc.
And it's our support. It's our NOC as well, actually. Our network center.
Okay. I know that historically you've been able to deliver sales of around 200 million SEK per year, but in 2020 sales actually fell down. Could you give us some brief comments on what that related to?
Yeah, we had the short and quick and through answer to that is that we had a regional challenge. We had our largest customers were moving into an area where we couldn't support them, so we had a slightly smaller order for a period from that customer. That has now been corrected, and we look forward to getting back to the old turnover, or actually even higher.
Sounds like a bright future ahead of your scheduled satellite launch. Unfortunately, we're running a bit of a tight schedule, so I'll have to end this session right now. But I'd like to send you both a big thank you for attending today, and leave you to give any final remarks if you do have.
What do you have, Johan?
Thanks very much for listening, and thanks very much to ABG and Simon for hosting this.
Thank you.
Thank you.
Hi, and welcome to today's presentation with Eltel, presented by CEO Casimir Lindholm. Myself, my name is Max Bacco, and I am an equity research analyst here at ABG within industrials. And with that said, please go ahead with the presentation, Casimir.
Thank you. Yes, welcome to this virtual meeting. My name is Casimir Lindholm. I'm the president and CEO of Eltel since September 2018. Previous to that, I was president and CEO of Lemminkäinen, the second largest construction company in Finland, and I also history within Eltel during 2008 and 2012. We can go to the next slide. So Eltel in brief, Eltel was founded 20 years ago. We are mainly active in the Nordics. We have a Nordic strategy. Part of that strategy is to focus on the 4 Nordic countries and step by step close down operations outside the Nordics. For the moment, we have more than 900 million in net sales and almost 5,500 employees active in the Nordics, and then mainly Poland and Germany. Listed on a Nasdaq in Stockholm since 2015. We can turn the page. Our main purpose is securing the lifelines of modern society. This is, of course, always vital, especially vital in COVID-19 times. So we are both building and maintaining the networks on the power and telecommunications side. Our main customers are the main operators, the main telcos in the Nordics, and of course the main utility power companies as well. We can turn to the next slide. Sustainability, it's an integrated part of our business and the way we work. I will pick a few things from this slide. Health and safety, of course, key when you work in infra and with infrastructure and networks. Our reduced lost time injury frequency last year on group level was 4.9, and that's an industry leading level. I think we can compete with other similar industries like the construction industry. So we have improved, we're on a good level here. The other part here that I would pick on is environment. We are working together with the main telcos in the Nordics regarding CO2 and reduction of that. At the moment, that work focuses around production planning and first-time resolution to make sure that we don't travel unnecessarily. Of course, the fact that we are maintaining and servicing and building the networks, we also are part of making sure that private persons and businesses do not need to travel unnecessarily because we secure the lifelines of the society. We can move to the next slide. So how is the net sales divided? Well, the 4 Nordic countries is the main part of the business. Going into 2021, that's 85% of the net sales is in the Nordics. We have a target of growing in line with the market. A lot of focus on improving our operations internally. Still a lot of potential in that area. And then going forward to 22 and 23, we will focus on acquisitions on a small, medium scale. And that will be done also in the Nordic countries. A lot of focus on productivity, efficiency in our day-to-day operations as well going forward. We can move to the next slide. So what is driving the business? Well, first of all, in power, there's a lot of regulatory demands. There has been so. For example, the storms in 2008, 9, 10 has demanded that power companies will secure the networks by digging cables underground. That's one typical demand from the regulator. Other parts is technical shifts. We see a large shift from the old copper networks on the telco side to fiber, to 4G, and now to 5G. That is typical for our business. And at the moment, we are both building 5G and at the same time dismantling 3G and also the old poles and lines in the copper networks in the Nordics. So both maintaining, building, but also dismantling. It's an aging infrastructure we work with, especially on the power side, so that needs to be renewed, and there's a demand on that because there's new energy sources that are now being activated, especially wind parks and so forth, and the old infrastructure can't handle all these new investments. So that goes for the whole of Nordics, but also for Europe in large, that the infrastructure is old and needs to be renewed. Some outsourcing cases still out there. The main ones have been outsourced during the last 20 years in this industry, but still local ones or part of bigger operations that will be outsourced in the years to come. We can move to the next slide. So we are on a transformation journey. Eltel is a turnaround case. We're halfway through that journey. We'll look at some numbers later on, but you can clearly see that we have been restructuring the company, focusing on the Nordics. We have improved our operations, the quality, all the production KPIs. We have a healthy balance sheet now, and we have a positive EBITDA, and we have also started guiding for 2021 and also have started guiding towards 2023 when we aim to reach a 5% EBITDA margin. The next phase then after we have also taken care of the old projects and operations outside the Nordics in a professional way, then the next step is to look at M&As in the Nordics. We can go to the next slide. And here you can see the evidence of that we have been successful in turning this company around and improved the financials quite a lot. It has been possible because we have been divesting assets, we have been taking down the risk in the company by not focusing on high voltage project business outside the Nordics going forward. And we have also been able to improve the operations and the invoicing process. We have gained market share in the Nordics. We have been successful in protecting the market leading position and also gained market share in the large tenders, in the large frame agreements that we have won during the last 2 years. We have also implemented a leaner structure, a leaner organization. We have a small group structure on top, and then we have countries responsible for the business locally, driving it through the country model, and we have been investing in our countries in the Nordics and made a lot of changes there as well during the last 2 years. So in that sense, the first part of our transformation journey has been successful, and now we are in the second part. We can go to the next slide. And this can also be seen from all the numbers. I will pick a few here. Of course, net sales has been coming down because we have been divesting and we have been closing non-strategic assets and projects. And we have been able to turn the company into a positive EBITDA margin. And as mentioned before, we are guiding to improve that year on year until 2023 to reach the 5% that we're targeting. At the same time, you can see that the balance sheet is on a healthy level now, down from over 200 million euros in net debt down to 67 by year end 2020. So with that said, the company is well positioned in the Nordics and well positioned both for margin improvements going forward. And that is also supported by the wins we have done on the frame agreements towards the big telcos and big power utility companies for the years to come. And then on top of that, we will look into smaller M&As going forward to support the top line, but also to support the margins. I think that was the second last slide, and this is the last slide. Well, basically, why to invest in Eltel? First of all, we're the market leader, the only player that is present in all 4 Nordic markets, with a clear market leader, both regarding size, but also regarding quality and the other KPIs that are important to our customers in the Nordics. There are trends supporting growth. We see growth in 5G, 5 to 10% of net sales in the years to come, let's say 3 to 5 years, will be supported by 5G. There's also a lot of fiber investments coming in Finland, in Norway, and in Denmark. We still have internal potential in operational excellence, improving the margins going forward, and that I see just as an opportunity that is good, that we still have work to be done there internally. We are historically a quality-focused organization. We have been, and we are again, the quality leader in this business and in these markets. And on top of that, we have cross-border synergies. We can learn from each other how we run our operations, how we work towards our customers, and we also have cross-border synergies from our resource company in Lithuania regarding, for example, resources that are really skilled on mobile 5G and on fiber that we can utilize in the Nordic countries. And that was the last slide on the summary where Eltel is today and where we are heading and why this is an interesting company to look at.
Yes, thank you very much, Casimir, for the presentation. Now over to a few questions. So to begin with, as you said during the presentation, you presented a target of a 5% EBITDA margin from 2023 and beyond. Could you please break down how you intend to reach this target?
Yes, partly that is coming from the fact that we still have in 2020 numbers and partly in 2021 numbers will have old projects that we're finishing that they have not been contributing to the margin much outside the Nordics, and that is mainly in high voltage in the power business. So those projects are being finalized as we speak, and they will be finalized during 2021, both legally and financially. So that is, of course, a burden short term on the margins. So after 2021, we'll not have that business anymore, except for in Poland then. The other part is that, as I mentioned, we have operational improvements that we can see happening now in the Nordics step by step. There's still potential for improvements there. And then we have a good market supporting us both in Finland, Norway, and Denmark. I mean, the order books are good. We have been successful in the markets, and we have been able to win new contracts with better terms and conditions than before.
Okay, perfect. And within your next phase, investing in sustainable growth, you mention M&A as a driver of growth. Could you elaborate on what types of acquisitions and companies that you are interested in?
Yes, we are looking into the Nordics from a country perspective because our countries look a bit different today. One way of looking at it would be to look at Eltel Finland, which has a quite perfect split between communication and power, and trying to duplicate that into the other Eltel countries. That could be one way of looking at M&As. The other part would be to strengthen our position from a geographical perspective locally and see what kind of company would add and strengthen our position in the local country. And then on top of that, our business mix is a bit different from country to country. There are things where we can actually internally learn and move things cross-border where we are successful in one business in one country and maybe not in the other, and organically grow that business. the last one and the last part is to look at other types of closely related businesses that where we might be active in one country and in another not, and that is maybe indoor solutions, or move a bit higher up in the value chain and look at IT, documentation, design related companies that could be of interest for Eltel.
Okay, perfect. And as you mentioned during the presentation, the rollout of 5G is a driver within the communication business. Could you please give us some more details on how Eltel is exposed towards the rollout of 5G?
5G is, of course, now happening as we speak. The pilots were made last year, and now it's full production, especially in Finland and Norway and partly Denmark. Sweden is a bit behind due to regulatory topics that they're a bit late. But the volumes are coming, and I mean the capacity in the 4G network is up to the roof. So the telcos wants to invest into 5G to release capacity from 4G networks. That is one driver. The other part is that the end customers, especially on the business part, is really demanding 5G. Then how fast 5G will develop is a bit unclear at this moment. So that's why we say the next 3 to 5 years, depending on how fast the market is moving and how much investments are coming our way. And of course, then we need to be successful in the tenders regarding 5G. But for the moment, I mean, the demand looks really strong. 5G is, of course, different to 4G, but technically, of course, but we are installing 5G in similar places as 4G to start with, basically rooftops and so forth. So there are no demands for having the rights to install in those areas. But then when the density gets bigger, then of course you need the requirements regarding permits and so forth might affect the rollout speed. But in the early days, it's more of rolling out 5G in places where there are existing equipment already. And as mentioned before, at the same time, we have talks and contracts around dismantling of 3G then in similar areas.
And on another note, you mentioned in the presentation that you have reduced your net debt. However, Eltel has in previous annual reports stated that bank covenants and the possibility of not fulfilling them is a potential risk for investors and other stakeholders. So the question is basically, is this still an issue for the company?
No, it's not. And when we extended the current bank agreements, that was done in a totally normal fashion. So in that sense, that period is over for us. Of course, it was a topic in 18 and 19, okay, but not on these levels of net debt anymore. And then looking at the positive result from last year, and then a guidance of a even better margin this year.
Perfect. And one last question. With the new segmentation that you presented in the Q4 2020 that will begin in Q1 2021, we can see that Sweden is the segment with the lowest EBITDA margin. Meanwhile, Norway is well above the 5% target. However, the split between power and communication is rather similar between the two countries or segments. So why is Norway performing so much better than Sweden?
Well, historically, I think what has happened in Sweden is that, and we are not alone regarding this, is that when the fiber was booming, the fiber market was booming in Sweden, there were too many companies, including Eltel, looking at only at the top line and not on the margins and the risks and the quality. So unfortunately, there's a lot of write-downs in the results in Eltel Sweden over the last couple of years. Now we are through that period, and we have cleaned the history, and we have made a lot of changes in Sweden, and we can see that it's gradually improving, and it was actually improving more than any other country in 2020. Of course, still from a very, very low EBITDA number, and starting to get closer to a turnaround. So that is the history in Sweden, and then of course the market as such regarding fibers is clearly lower than before in Sweden. What comes to Norway then, on the other hand, is in a positive market regarding investments into fiber in 2020, and on top of that now we have 5G, and to be honest, then our operations in Norway is really well run. And we have invested a lot in the past into processes and systems and so forth. And then there are some differences regarding the markets as such. So it's not only one topic that differs between the countries, but looking forward now, what we will see is of course that the countries will become closer to each other regarding margins when you look at the strategy period until 2023.
Okay, perfect. I think that was all the questions I had for today. So thank you very much, Casimir, for the presentation, and we will hopefully see you soon.
Thank you, and thank you for having us, and thanks for the questions.
Thank you. Bye.
Bye-bye.
Hello and welcome to this presentation with Maha Energy. My name is Carl Fredrik Schjøtt-Pedersen. I'm the equity research analyst with ABG Sundal Collier covering Maha. With us today we have the CEO of Maha Energy, Jonas Lindvall, and he will present the equity story to you all, and subsequently we'll have a brief Q&A session. So Jonas, the floor is yours.
Thank you, Carl Fredrik. Thank you for hosting this event, and we're pleased to participate. If we can go to slide 3, we can skip the normal disclaimer, and I want to spend a little bit of time on this slide because it sort of identifies what we are, gives our DNA of our company. So we are in the energy sector, for those of you who do not know, specifically in the oil and gas sector. We're an upstream junior oil and gas company, and we obviously produce oil and gas. We are active in 3 countries, and we have 5 producing assets. 3 producing assets and 5 assets. In particular, I want to spend a little bit of time here going through what sort of sets us apart, what we're different. So first off, we operate all our assets. We believe that by being the operator, we can control our own destiny. We set our own schedule, and we can control the capital spend. So that's very important when you're building a junior company like Maha. Secondly, one of our core principles is what you see down there on the left-hand side of the screen on the slide. Is we have a very robust asset base where we split our assets into 3 categories. Primarily, we want to build our company on the fundamentals of exploitation. So we're not an exploration company. We are an engineering company. We apply enhanced oil recovery technologies. We bring engineering skills, and we're very, very strong on the subsurface. So essentially 90% of all our assets in our portfolio are producing assets. They should be low risk, what we call brownfield developments. Our growth comes primarily from our middle segment there at 40%, the 40 in the strategy, where we seek out and find underperforming hydrocarbon assets, and we apply technology through our skill set to grow our business. So it's a very low risk business that we're building. We do not spend a lot of time trying to identify exploration targets. Instead, we spend our time in exploiting those already found hydrocarbons. The 10 on that 50-40-10 strategy is a little bit of what we would call near field exploration. So that would be, for example, bypassed reservoirs, smaller traps very nearby our existing infrastructure. So we're a very sort of closed, fenced-in company. We tend to stick to what we're good at, which is in the exploitation arena. So if we go to the next slide, please. So any oil company, we base our growth and our cash flow through our reserves. You can see on this slide here, we are active in 3 countries, United States, Brazil, and Oman. We recently added the Oman Block 70 to our portfolio, and that completed what I call our 3-legged stool strategy, where we want to be diversified across at least 3 jurisdictions. And that's important in our business because, things happen, political risk, financial risk, new tax laws are introduced. So you don't want to have all your eggs in one basket. So we set on very early in our building our company, we decided that we wanted to be properly diversified across 3 stable jurisdictions. If we look at our reserve growth over the past 4 or 5 years, we can see that our 2P or proven plus probable reserves have consistently grown across that time. Right now, we have about 48 million barrels of reserves, 2P reserves, and the majority of those reserves are in oil. About over 90% of all our assets are oil-producing assets. We are a listed company. We started out in 2013 as a private company. And in 2016, we entered the First North bourse in Stockholm. And as recently as last year, we've migrated up to the main market, the main board in Stockholm. Current market cap is just over 1.5 billion SEK, and our current production is just over 4,000 BOEs per day. We'll go to the next slide, please. So this slide is very busy. It sort of tells the story. This is the roadmap of our company. It tells, gives is our sort of health check dashboard. So if we start up on the left-hand side and work our way around it, you can see our production growth. Since 2016, we have quadrupled our production. We started in 17 by just under 1,000 BOEs per day, and we exited 2020 at over 4,000 barrels of oil per day. On the right-hand side, you can see 2020 split up. Now, 2020, of course, has been a very tough year for all of us. We are no exception to the being hit by the pandemic. You can see that towards the end of 2020, our production suffered. We had a number of technical issues that really hit us quite hard. Now, I must say, though, that, and this was not done on intention, of course, but we managed to follow the oil price curve down. So when oil prices started recovering, we had fixed all our production issues in Brazil, and we were increasing production. So that's a bit of a silver lining to our troubles of the second half of 2020. If we go straight down below there, we have our operating cash flow, and our operating costs are relatively low in the industry standard. Current production costs are between $7 and $8 per barrel. And that's reflected in a very healthy netback that you can see in our sort of bottom left-hand corner of the slide. We currently, the 2020 netback was just over $20 per barrel, which is very healthy considering that the average oil price for 2020 was just over $40 per barrel. So at $60, $70 per barrel, which it is now, the oil price, we are enjoying very strong, healthy netbacks and generating good cash flow for the company. Go to the next slide, please. So I was, next slide, please. If we, we have to go back one. T-field, yes. So I'll spend a little bit of time going through our assets, which is really the fundamental driver for our business. Before I round up and tell you a little bit about our future plans, we actually released last night our 5-year strategic growth plan and can be found on our website. First off, we are, like I said, we're active in 3 countries. We have 5 assets spread across 3 countries. The crown jewel of our assets is located in Brazil. It's the T field. We acquired this back in 2017. And when we acquired it, it was producing just over 1,200 barrels per day. Today, we're doing well over 3,500 barrels per day, and we're growing this asset to a peak of 4,800 barrels of oil per day. It's located onshore in the state of Bahia. We produce from 2 separate sandstones, so we have some risk mitigation there in that the 2 reservoirs are completely independent of each other. We've spent the last 2 or 3 years to upgrade the facilities. We have also secured offtake agreements for the oil that we produce there. So this is our cash cow, is what I like to call it. We've spent the majority of our cash upgrading facilities, drilling wells, establishing offtake agreements, and also securing gas offtake for our associated gas. So that's moving into a harvest mode, as can be seen at the bottom of this slide, the capital plan for 2021, which really just entails drilling more production wells and water injection wells. Whilst we stay in Brazil, we can go to the next slide. We also operate the Tartaruga field. Tartaruga is, the field is just up the street from the T field in the next province up, also onshore. This was our first acquisition in Brazil. And this is an interesting play. It's more of an appraisal slash development play than the T field, which is squarely in the harvest production mode. It's got 3 wells on the structure, and it's denoted by basically the Pinedo sandstone having over 27 separate layers of oil-producing sands that contain some measure or not of hydrocarbons. This field is currently producing on a gross basis about 500 barrels per day. We have 75% of this. We drilled a well back in 2020 and tested a well here, and the idea is to spend some more time evaluating this structure before we move into further development of this field. Next slide, please. That rounds up Brazil. We have, like I said, we have 2 fields in Brazil. We recently added our 3rd leg to our stool. We diversified into Oman. We were successful of a tender process there that started in 2019, and this is Block 70. So Block 70 is right smack in the middle of central Oman, also onshore. We operate this block. We have 100%. It is surrounded by multiple large oil-producing fields that have been producing it for a very, very long time. The notable feature of Block 70 is it contains an already discovered and appraised oil field called Mafraq. Mafraq was discovered back in 1988 by Shell, and it has been delineated by 3D seismic and a total of 5 wells, along with 2 production tests, of which one was a long-term production test conducted by Shell. The idea for this is for us to go in and develop this field. It's very shallow. It's only about 500 meters deep, and we believe that the horizontal drilling is a very successful technique that we can apply here to extract this oil at a relatively benign cost. We're very excited about this addition. It is a large field. It contains anywhere between 180 and 280 million barrels in place, maybe more. And we have currently booked contingent resources of just over 22 million barrels. And the contingency there is the approval of the acceptance of a development plan by the government of Oman. For 2021, we are establishing our presence in Oman, and we will be buying long lead equipment for our drilling campaign in 2022. Drilling will consist of anywhere between 6 and 10 wells to begin with. And after we evaluate the results of those wells, we will move into a full field development. The idea is to take this field to 9,000 barrels per day on a plateau basis if our pilot project is successful. Next slide, please. The last place where we're active is the United States, and we use the COVID-19 crisis to our advantage. There were quite a lot of distressed assets going through the sales process back in 2020. We picked up a producing asset in the Illinois Basin. Compared to all the other assets we have, this is relatively small. It only has about 3 million barrels of recoverable oil in 2 PKs. But it fits very well into our portfolio in that it's very low risk. We have 3 independent reservoirs producing. So if 1 or 2 reservoirs are tight or off structure, there is extra safety in having those stacked reservoirs. It is a very predictable in terms of area wise. It's very predictable. It's almost like a manufacturing process here. There's well over 2,000 wells in this area, so the stratigraphic control is extremely good. And we've identified over 100 future drill locations on this asset. Very, very cheap. We can drill the well here for about $650,000. Each well will yield about 65 to 75,000 barrels. So you have to put this as a very, very low risk, relatively medium to low return on that investment But like I said, it really forms a good foundation to build a company on, generate sufficient cash flow, particularly at these oil prices. And then last slide, please. Last but not least, we have the LAK Ranch. This was the asset that we founded the company on. Currently, it is shut in. LAK Ranch is located in Wyoming, and it's a heavy oil, a 19-degree API, which is it's quite significantly heavier than what we produce in Illinois Basin. Illinois Basin, it's a 35-degree API, very light oil, very good quality. Here we have to work a little bit harder for our oil. This is purely an oil price play more than anything else. At $40, $50 per barrel WTI, we will not make money here. At these levels, we are looking at re-implementing the investment process in LAK. LAK contains well over 60 million barrels in place of oil, and that is well proven by well over 50 wells. The oil is there. The trick is to get it out there commercially. So with that, you can go to the last slide. But that concludes my presentation for today.
Excellent. Thank you, Jonas. I guess there are quite a few questions popping to mind, especially given your growth history and the ambitions that you do see forward. Let's start off with the growth expectations and trajectory. Are there what would you identify as the main risks to be able to perform your production outlook in accordance with expectations?
Well, we've spent the last 2 or 3 years building our asset base, and I want to go back to sort of our core strategies that we build our company on, which was one of which was this three-legged stool. But really, you need high-quality assets to be able to grow your business. We stay onshore, and and that's really to mitigate risk, financial risk. The cost of overruns onshore has a much lesser effect than, say, when you're operating offshore. But to answer your question, the main risk I see is operational risk at the moment. We've amassed a great foundation for the company. We have world-class assets in Oman and in Brazil. We hope to grow our business further in the United States. It's a more competitive market there. But the main risk right now is with the oil price having recovered, is operational and execution risk.
And drawing further on that, how is the operational environment, especially in Brazil, given the current status on COVID-19? Is it your experience that is becoming easier, or is it still quite tricky?
Brazil is a plethora of different issues, I should say. Some of them good, and maybe some of them more challenging. But with COVID-19, no question, we were hit quite hard. Because we are reliant on a lot of third parties in Brazil. For example, our gas offtake was completely shut down in the month of April, and that impacted us because we had to reduce production because of that. Borders have been closed. Municipal level borders were closed. The movement of people and goods have been impacted, not only internationally but also domestically. So COVID was a real challenge for us, notwithstanding the impact it had on oil price, of course. But when you're looking at it logistically, it has been very tough. Now, we have put in place lots of procedures for us to mitigate that. For example, we're currently drilling. We do daily COVID rapid tests on all the sites. We implemented a third string on our operational staff, so that if one crew got sick, then we would have ample bench strength to follow up. Those are just some of the mitigations that we put in place, but there's no question it's been very tough.
I guess that's the story for most companies, so it's fully understood. It's more if it has evolved or not. Thank you for the update. If you look to Mafraq, this is a huge field in terms of oil in place, as you mentioned, between 100 and 200 million barrels. And then you have booked on a contingent basis 20-some million barrels of contingent resources. The question from my end is two-parted. First of all, you currently hold 100% working interest. Is that something that you'll farm down over time, or do you anticipate to continue to hold such a large stake? And the second question is, what is the potential for the recovery rate for these types of fields over time? Do you feel that the current resources booked is representative of the potential, or is there substantial upside potential?
Right. So the first part of that is we have already been approached by 3 parties for farm down. So we are definitely considering farming down, but we are not going to go less than 50%. I mean, this is a significant asset for us. It's a great opportunity, and we're extremely bullish on this. Why do I say we're bullish? It will lead into your second question, and that is we have an incredible amount of information. I used to work for Shell. In fact, I used to work for PDO or Shell at the time, back in the late 90s. I know this area extremely well. I know this field quite well as well. The information quality that we have on this asset is unbelievably extraordinary. So that gives us great confidence in what we believe we can extract. So it is a heavy oil play. It's very shallow. It's only about 500 meters deep. It has been delineated by 5 wells, 2 horizontals, one vertical test and 1 horizontal test, all without the use of heat. So this crude oil cold flows and reservoir conditions. That's not to say it's not without challenge. It is with challenge. But the main criteria for this oil is that it does move without the application of further energy. So with the advent of modern pumps, particularly here from Canada, the sort of the heavy oil capital of the world, unbelievable strides have been done in pump technology. So we are very confident that we will extract this oil economically at high rates without the use of heat or energy. Now, if we were to provide heat, then the recovery factor would definitely increase. So there's 2 parts to this, and that is, of course, the recovery factor, which can be increased by the application of energy/heat. The other is the size. Now, the in-place volumes I have mentioned to you are not, the oil-water contact in this field has not been determined. So the numbers that we have is what we call oil down to. So there's further upside to those numbers. And that's one of the first things that we intend to do, is to try and go hunting for that oil-water contact so we can really determine what the true size of this price is.
Excellent. So it does sound like there is potential for positive revisions if your development plan turns successful. So that's sounds good. 2 final questions as time is running out. The first, could you provide an update on your financing? You do have a bond maturing in May. You have announced that you have a bank agreement on the way, or that has been firmed up. And you also have a grace period for a further bond process. Could you, 1, tell us about the current status, and 2, given where the oil price is at the current levels, are there any risk as long as financing is in place that we could see mid-year revisions to your spending plans?
Great questions, and I'll try to be very quick. So you're absolutely right. We are in an exclusivity period with a bank, and that's progressing extremely well. The technical due diligence has been completed, and it is our hope that we will move into final documentation, hopefully by the end of this week, maybe early next week. That depends about their internal investment committee. We are also in parallel to that, like you noted, we have part of our agreement with this bank is that we do have the right and the authority to discuss with our existing bondholders with respect to potentially an amended bond option, and that is also going on as we speak. And I think that hopefully this week we will be able to reach out to existing bondholders with a potential proposal. So we are running both tracks, and I am absolutely confident that come May 29, we will have this refinanced. With respect to revision of capital spending, I think given the current oil price scenario and our positive traction in the financing market, I think that's very possible.
Excellent. With that, we are running out of time. Thank you so much for your presentation, Jonas, and very interesting to follow Maha and the growth story in the time to come. Thank you for your presentation. Hello and welcome to this presentation with Tethys Oil. Presenting today will be CFO Petter Hjertsted. My name is Carl Fredrik Schjøtt Pedersen. I'm the equity research analyst with ABG covering Tethys Oil. I will be the moderator. So after Petter has taken us through a 20-minute presentation, I will moderate a Q&A session. So with that, Petter, over to you.
Thank you, Carl Fredrik. Good afternoon, everyone. Thank you for listening in. I am the CFO of Tethys Oil, a Swedish listed but Oman-based or Oman-focused E&P company, oil and gas exploration and production company. So please go ahead to the next slide. We like to, this is how we like to see ourselves, and I think this is summarizes pretty much what this company is about. We are a fully financed, dividend-paying, Oman-focused exploration and production company. We have had production for several years and continuously exploring, and I think in the coming years we will be exploring even more than we have in the past few years. So it's going to be a very interesting next few years, given where we are. Next slide, please. You can see some of the key data of the company. We are, as I said, listed in Stockholm. We have a market cap of about $260 million. We have 2P reserves of almost 27 million barrels, and they have been steadily increasing the past few years, as you can see. And production has been stable in the past few years. And in terms of financial performance and the EBITDA, solid profitability, but strong correlation to the oil price, as you can see from the graphs. Next slide, please. 2020 was a very challenging year for our industry. It was the pandemic, a record oil price crash, and for a company like ourselves in our part of the world, we were also subject to the OPEC Plus production limitations that kicked in May of last year. So it was a quite a turbulent year with a lot happening, especially in the first half. Looking at these numbers, you can see some traces of that. Although I have to say, at the end of the year, looking back, we are quite pleased with the financial performance that we've had, given those quite challenging circumstances. So while we took a significant hit on revenues for the full year, down more than 30% versus the year before, we remained profitable on operating result. We had free cash flow, and we managed even to improve our OPEX per barrel. So we're very pleased with how we performed in the year, given those quite challenging circumstances. Next slide, please. So production is from our main producing asset, or from our main asset, blocks 3 and 4 onshore in Oman. As you can see, we've had quite stable production in the past few years, with last year seeing the biggest deviation that we had for many years, and that came in Q2 2020 as a result of the Sultanate of Oman signing up to the OPEC Plus limitation agreement. And as they entered into that agreement, all producers in the country were expected to contribute to the reduction in production. Shortly before then, we had in fact had record production, so that it was a significant drop for us. Towards the end of the year, we were allowed to produce somewhat higher than the quotas we were permitted, and that remains the case at present. However, we are still formally under those production limitations. Next slide, please. I think while production has been quite stable in the past few years, our reserves and resources have been growing. We have 9 consecutive years of positive reserve replacement ratio. In fact, adding more reserves than we have produced in the year, and in some years we have quite significantly so added. And at the end of 2020, we had our highest reserves ever, almost 27 million barrels, while at the same time having almost 14 million barrels in contingent resources, all from our producing asset, blocks 3 and 4. Next slide, please. Well, we've had that stable production and growing reserve and resource base. We have also been committed to distributing cash to our shareholders, and we have done so since 2015. I believe we were one of the first junior oil companies in the European space, at least, to provide a regular dividend. And this year, the board of directors has proposed a 2 krona per share ordinary dividend in addition to a 2 krona per share extraordinary distribution. Since the start of our since 2015, when we started distributing, we have distributed more than 100 million to our shareholders, and we have repurchased shares for almost $20 million. So next slide, please. And the key to that distribution is, of course, our balance sheet. It's a very solid balance sheet. We have no financial debt and ended the year with 55 million in cash. Next slide, please. So, our operations. We are fully focused for the moment at Oman on the Arabian Peninsula, outside the Strait of Hormuz. It's a relatively small country population-wise, but a large area of which the majority is desert and uninhabited. Production pre-limitations was around 1 million barrels per day, and the country, while it's firmly in an oil region, is not a member of OPEC, but has been a very active member of OPEC Plus in those cases where those agreements have been made. It's worth noting that any export that is made from Oman of oil is done by shipping over the sea, and it's outside the Straits of Hormuz, and therefore not impacted by a lot of the turbulence that has occurred in that region in the past years. So next slide, please. Our operations in the country. We have our main core assets are blocks 3 and 4. That's 2 blocks, but 1 license. Quite a significant piece of acreage. We have held a non-operated interest in that since 2007. We have a 30% of the license, and it is has been in production since 2010. It has produced solid cash flows in past years, while also being the source of significant exploration in parallel to that production and development. We have built up a strong local presence with a large proportion of local staff with technical expertise linked to the Omani geology. And to capitalize on that experience, we have picked up a portfolio of exploration licenses in recent years, and that's Block 49, Block 58, and Block 56, of which all are currently operated by us. And this means that we are actually one of the biggest acreage holders in Oman, with our licenses in total covering roughly 18% of the country's area. Next slide, please. There has been a significant amount of activity around those licenses in the past few years. So we picked up Block 49 in the license round of 2017 and held 100% until the end of last year, when we agreed to farm down 50% to the US onshore company EOG Resources, and that deal is should be closing imminently. When it comes to Block 56, we farmed in for the first stake in 2019 and made a subsequent agreement at the end of last year to increase our stake to 65% to become the operator of that block. And Block 58 is a license we picked up in the most recent license round, where we have 100% and our operators. So next slide, please. Blocks 3 and 4, the mainstay of our production and cash flows in the country, sees significant activity with both development drilling and exploration drilling. But as the oil price came down and production limitations were imposed last year, activity was cut back significantly, and we went from 3 full-time rigs operating on the block to 1, putting 2 on standby, and reducing a lot of the development and the exploration activity. We only drilled 1 exploration well, which was the Anan-1 well, which was completed late last year, with very positive results. For 2021, we expect to pick up activity, bringing back the rigs successively during the year to increase drilling operations, both for production and exploration. So next slide, please. Here's an overview of blocks 3 and 4. These are quite significant licenses. It's almost 30,000 square kilometers. So it's a huge area of mostly rocky desert. You can see where a significant part of that is covered in 3D seismic. And we have a number of producing areas. It's the Shard field, the Farah South field, and also the Saiwan East and Erfan. So a large number of different fields producing, and all going into the same infrastructure and being exported into the national pipeline infrastructure. And as you can see by the leads and prospects, there is significant exploration still to be done on the block, and there will be more seismic shot in coming years. So we believe there's plenty of running room for this block to keep growing in terms of reserves and resources, and potentially even production. Next slide, please. Block 49, farmed down to EOG, as I mentioned before. Once that's completed, we'll hold 50%, and then they also have an option to increase interest to 85% for any unconventional exploration, and that in particular would be fracking or tight oil related activities as defined on an operational definition. Next slide, please. Amin-1 well is the first exploration well we've drilled on the block. It was spudded on New Year's Eve of last year with a target depth of 4,000 meters and a primary target at 3,500 meters in Hasira sandstone, and a number of secondary targets and other areas of interest to be studied. This is the first exploration well to be drilled on the block for quite some years, and it is in general to be considered a frontier block with relatively limited drilling done on it in comparison to other parts of the country. However, we announced about a week back that we have encountered hydrocarbons in the primary target, and we are currently commencing a testing program and expect to give some more information on that in the coming weeks. And it's very encouraging, but we also need to see the test results before we can draw any conclusions from that. So next slide, please. You can see some of the pictures from the drilling operations. This is also out in the desert, and in fact on the edge of the Rub al-Khali empty quarter desert that continues into Saudi Arabia. And that is also the geological basin in which the primary target sits. Next slide, please. Block 56 started last year with some testing of some pre-drilled wells. When I say pre-drilled, it was drilled before we were in the block. One of which encountered or was successful in testing, producing 20-25 degree API oil. While we have yet to determine the commerciality, that's certainly very interesting and is something we will pursue going forward. Otherwise, the focus from our side was to increase our interest and looking to increase it to 65% and assume operatorship from the current operator, Medco Energy, the Indonesian energy conglomerate. This year, we expect to drill a few wells on that to follow up that Al Jalmud well, and hopefully be able to determine the commerciality of that, and also prepare some 3D seismic acquisition. We can go to the next slide. This is an interesting block in that it is significantly smaller than both Block 49 and 3 and 4, but does contain a wide variety of geological plays and petroleum systems. So 3 distinct areas with all quite different properties, and that we expect to explore in the coming years. And you can see the Jalmud well up in the top of the picture. That's where we had the flows in the production test last year, and that's what we will be following up with the drilling. Whereas we expect to shoot 3D seismic across the central part of the block, where a well was drilled by the previous operator, which did not result in a discovery, but provided some very promising data. Next slide, please. And on this picture, you can see the 2D seismic and 3D seismic coverage and some of the main leads, which we hope to firm up with increased 3D seismic coverage over the block. And that is something we expect to be doing towards the end of the year. So next slide, please. Block 58, our most recent addition, sits in the south of the country, south of our Block 49, and just west of Block 6, the main producing block in the country. And it has, in fact, contains a part of that was relinquished from Block 6 quite recently, and thus shares some of those geological properties. In this year, we expect to shoot some 3D seismic on the block and prepare for drilling of an exploration well. We are committed to at least 2 wells in the first exploration phase, which we believe should be able to give a good indication of the potential of the block. If you go to the next slide, you can see we have identified 2 leads on the existing seismic, very close to some existing discoveries just across the border in Block 6. And we will be looking to firm up those leads and to a drillable prospect, and hopefully be able to drill something in around next year, hopefully. Very promising, and geologically similar to what we see in Block 6, and quite different from what we see to the north in Block 49. So quite distinct in that perspective, which goes for all our exploration blocks, that they do have all they tap into very different basins and petroleum systems, providing a quite diverse portfolio. So next slide, please. In 2021, we expect to invest a total of almost $15 million, the majority of which going to Block 3 and 4, and most of that would be drilling, which includes development drilling and hopefully a couple of exploration wells at least. We also will be investing in the infrastructure, including gas utilization, to reduce flaring and improve our carbon footprint. On Block 49, it's completing the drilling of the Thameen-1 well and the testing operations. And on Block 56, of course, it's those wells I mentioned before, and preparing for the seismic. And on Block 58, also preparing and conducting a 3D seismic survey. Next slide, please. So to summarize, we go into 2021, or we're in 2021 with the highest reserves ever. We continue to distribute significant cash to our shareholders. We have lots of activity going on across our blocks, lots of exploration activity, and hopefully can make a mark on our reserves and resources in coming years. And most recently, we've seen that the Thameen-1 well has encountered hydrocarbons, which is very encouraging. So expect some results in that in 2 weeks, and plenty of more information in the months to come on across the portfolio of assets. With that, I want to thank you.
Thank you, Peter. I just wanted to ask you a few questions following this presentation. First of all, if you look at the bigger picture, you have been able to grow your reserves pretty much throughout the life of the company, and it's been such a tremendous growth story. How come you're able to continuously grow them? What are the kind of restrictive factors, or how should we think about reserve growth going forwards?
I think the reason we've been able to increase our reserves over the years is the fact that we are continuously producing, developing, exploring, and appraising at the same time. Whereas the traditional model would be following an exploration, you would appraise everything and then start to develop. Well, we've kind of done that continuously, which is a lot more common, of course, onshore, but I think we've done it a bit more than most. And that means that there's a continual ability to step out and use the information gathered from the production, and quite easily, and using the infrastructure to easily tie in satellites and new discoveries. But it also means we've been able to utilize the cash flow and the staff on the block to be able to shift resources between development and exploration. I mean, we certainly believe that there's plenty of running room on the block. There's a lot more exploration to be done. There's a lot more to be tested. We are quite encouraged by the plans that are being laid for this year when it comes to exploration, in terms of perhaps taking a bit more risk than has been done in recent years, where there has been more focus on perhaps a slightly lower risk exploration, which has certainly added to reserves and resources, but not made a huge mark. We hope to be to reach a bit higher this year and see if we can take some bigger steps. That also does entail a bit more risk, so we'll see. But we're certainly very excited about it.
In terms of the Tamine-1 exploration well, when results come in or are announced in the next couple of weeks, what should we look for? What is what would define it as a commercial discovery? And if it is a commercial discovery, what will then a potential development program look like?
Well, I guess there's any number of factors impacting that. I mean, absolutely, volume is a factor, but more fundamentally, it's a question of, does the oil flow? I mean, we in most wells in Oman encounter hydrocarbons, and in this part we have less experience of exploration, well, there's first of all the question: is it oil, or is it gas, or is it some combination of the two? That can certainly have an impact on how to develop it and what the development thresholds, commerciality thresholds are. So I would say there's any number of factors, including what kind of hydrocarbons, what kind of flow rates, and in combination with what the expected volumes are. Pre-drill, we were certainly looking for something that on a standalone basis would be commercial, while at the same time selecting a well that we thought would provide us with good information on the overall potential of the block. So it's at this point we're very happy with what we've found so far, and even if it does turn out to not be commercial, but we certainly hope so. And we're not that far from infrastructure. So while it's frontier in the respect of the limited amount of exploration being done in the area, it is fairly close to pipelines and good infrastructure. So we are quite optimistic on that.
Sounds good. And lastly, I guess with the oil prices at current levels, very healthy, nearly $70 per barrel, how should we think about the prioritization between holding a very very strong cash balance, increasing dividends, and potential for mid-year revisions in terms of increased spending?
Well, I certainly think the dividend proposal is what's been presented by the board. We have, of course, some other tools in the toolbox. There's the share buybacks if we want to trim the balance sheet. But there certainly is, given the year we had what we had last year. where a lot of spending was deferred, there is certainly potential to do some more investments that can reap some long-term benefits. So I think we'll certainly see some of that if the conditions persist. But there are any number of certainties. We are formally still under production limitations, and while we have been permitted to produce a bit more, there are no guarantees. So we will. First and foremost, we will be sure that we try to capture the value in our assets, and I think that's kind of priority number one.
Okay, very clear. We are unfortunately running out of time, so I will have to say thank you so much for your presentation, Petter. Very insightful and a story that will follow close in the years to come, and especially in the weeks to come.
Yeah, stay tuned. Thank you very much.
Thank you.
So welcome. I think we can commence on the next equity case. My name is Laurits Kjærgaard, equity analyst at the ABG Copenhagen office. It's my pleasure to introduce North Media, represented by both Kåre, Hendrik, and Lasse, and I think they will do a quick introduction to themselves. And to all the participants, you should have the research on our introduced platform, and which you should have free access to. So without further ado, thank you very much, gentlemen, for your time today. The floor is yours.
Thank you, Laurits. And thank you to you all for joining us today. We have looked forward to presenting our annual report 2020 together with our goals for the 21, and also as first time in this annual report, also our ambitions going a bit more forward for 22 and 23. Next slide, please. My name is Kåre Vig. I'm the Group Executive Director and CFO. And with us today is also Lasse Brodt, who is the CEO of the FK Distribution business, and Henrik Løve Jensen, who is the CEO of the North Media Online. As I said, we will talk you through the 2020 highlights, the guidance for 21, as well as our strategy for the upcoming 3 years. Next slide, please. So 2020 for North Media, what was that really about? It was obviously a year of great contrasts. In our company, in the country, in the world, we are battling COVID-19, and yet we in North Media, we had a very good year with best EBIT performance ever. Our revenue was by and large unchanged, 1.045 billion in 2020, which is the same level as 2019. And for those of us that don't know us so well, bear in mind that the reason why there's a slight drop between 18 and 19, as you can see in the slide, is because we in 2020 have sold off our newspaper activities. So going back that to 18, the revenue is actually at the same level. But by and large in 2020, the overall story is that the revenue of FK was down by a couple of %, and we had high growth rates in our online BK activities. As I said, it was the best EBIT performance ever for the North Media Group, 240 million, up from 166 million in 2019. And what's that really? Because of going from 2 to 1 in FK distribution. Lasse will come back to that in a minute. And also an upward trend in double-edged margins in both online and big and FK business. We are fortunate with a strong cash flow. Traditionally, we've also had a strong cash flow in 2020. We didn't see a big impact from the COVID-19. And bottom line, we also had best ever year, up almost 50% to 307 million. A big part of that is, of course, because of the EBIT, but also because we had a high return on our securities, 155 million kroner, or almost 38%, was the reason behind that. And bottom line for our shareholders is that the board will suggest to the AGM that we pay out a dividend of 5 kroner per share for 2020. That would correspond to a yield of a little more than 6% based on the share price at the end of the year. So now we'll go a bit more into the businesses, and Lasse, will you take it from here?
Yes, sure I will. Thank you, Kåre. And as Kåre said, my name is Lasse. I'm the CEO of FK Distribution. In 2020, we at FK had focused on strengthening our business areas so that we can maintain the very strong core business and focus on developing services and solutions in new markets. In the core business, we have optimized our distribution windows. We did that at the beginning of 2020, which has had a positive effect of the overall business at FK. It manifested itself with a significant improvement in EBIT. In the second quarter of 2020, the volume declines around 15% because of the COVID-19. Both the number of free weeklies, newspapers were decreasing, and also the ad volume in the free weeklies, and therefore also the number of advertising pages in the weeklies. Despite the corona, the turnover of unaddressed leaflets was roughly at the same level as expected, whereas the turnover from free weekly newspapers was less than expected. Despite corona, we increased our EBIT by 35%, or 62 million Danish kroner, to a level just below 234 million Danish kroner. In the new business areas, which includes digital platforms, selected mails, direct mails and magazine mail, as well as packaging of leaflets for other distributors, have overall made a larger contribution to FK's overall business in 2020. At the end of the year, we choose to shut down daily to focus even deeper on our core business. And I think, Henrik, will you continue with North Media Online digital services?
Yes, thank you. Yeah, as Kåre mentioned, my name is Henrik, and I'm in charge of our online businesses. First of all, I'll touch upon upon our online businesses, BoligPortal and Ofir, and I'll also share some highlights on BK, our digital access platform company. When it comes to BoligPortal, this is the leading Danish housing rental platform. We have a strong market leading position in Denmark. We're building a position in Sweden on our Swedish brand Bostadsportal. Ofir is the number 2 job platform in Denmark. We have a unique multi-channel platform across job portals and social media with Ofir. So I think that we have with BoligPortal and Ofir two strong businesses with a promising future. I'll dig into BK a little later. When it comes to the financials, we saw BoligPortal and Ofir have revenue up by 20% last year, with the Ofir 24% up, and BoligPortal as the biggest and most mature company up by 19%. We saw a threefold increase in our EBIT in BoligPortal and Ofir on overall level, with an EBIT margin of 22.3 totally. BoligPortal's EBIT margin was 34% last year, and then Ofir went profitable in the last part of 2020, and we expect the full year profitability this year. The results was fueled by increased activities and new services across BoligPortal and Ofir. We have had more rentals in our rental platform. We launched new services to landlords and tenants as well. And in Ofir, we have improved the efficiency quite a lot, having been able to service more customers and more candidates finding a new job the last year. Next slide, please. If we look at the next slide, please. Yeah, got that. If we look at the BoligPortal, that is our leading digital business right now. We have a housing rental platform, and it's not just a marketplace where you advertise a free flat or a room for tenants. It is actually what we're doing here is that we're building an end-to-end rental platform, where we have a marketplace where you can advertise a free rental. You could also, as a landlord, have help from us doing your administration in a more efficient and digital way, doing digital rental contracts, digital move-in reports, and services like that. And then we run complementary services for tenants. When you move in, you need electricity, you need internet and stuff like that. You can easily order that through our rental contracts, etc. And everything is centered around data, where we collect data and use data to reinforce the services for landlords and tenants respectively. And we have launched a brand new platform mid-January this year, and this will be from where we ramp up new services across Denmark and Sweden in BoligPortal. And as I mentioned, by now we have a strong position in Denmark. Revenue is still growing 15%. We were up by 60% in Sweden, and we have good margins and EBIT which is up by 72% for the last year. Next slide, please. We'll dig into BK. BK is the leading Danish provider of digital access solutions. We serve municipalities in the home care sector in Denmark and Norway as well, where we help municipalities get access to disabled and elderly people's homes. This part of the business went profitable last year, and we continue growing from there. And the second part of the business is the stairwell segment, where we help suppliers of goods and packages get access to doorsteps, so that people can have services and goods delivered at home. We see an increasing demand in that sector, and we have been investing heavily in that in Greater Copenhagen, and are about to prove the case there, looking to sign more suppliers this year. And In that business segment, we are building up. We have a coverage of 200,000 multi-story units in Greater Copenhagen, share of more than 50% of the units in Copenhagen, and we plan to expand that further this year. That's all from Boligportal, Ofir, and BK. Kåre?
Thank you, Henrik. So now we are leaving 2020 and look a bit more. We will look a bit more into what's the group strategy going forward for the next 3 years. I'll run through the main ambitions for the group, and then we'll dig into each of the businesses in a minute. First of all, it's important to mention that we have introduced some new segments now in the 21 and going forward. The first one is last mile delivery, which is actually FK distribution, and the other one is digital services, which is then Boligportal, Ofir, and BK that Henrik just talked about. And why have we done that? That's because North Media is actually two things. One thing is last mile, which is a stable, well-earning, high EBIT margin business, whereas the digital services, we see a higher growth, increasing and improving EBIT margins, and also more scalability options going further internationally once we have completed doing the plans in Denmark. So that's the reason why the segmentation will be last mile and digital services going forward. So what are the overall ambitions? One thing is for the digital services, we do expect to see around 20% growth annually for those 3 businesses, together with the scalability options, as I just talked about. And in terms of last mile, yes, it's a stable business, but there's still things to do in terms of optimization, introduce new products, packaging services. Lasse will talk in a minute more about some interesting cooperation with Deutsche Post. Still lots of things to do within the last mile business as well. And then we've also look a bit more into acquisitions that will primarily be within the digital services. And group-wise then, what do we see in terms of growth and margins? We see an organic growth from 22 of around 3%, and we will see an increase in the EBIT margins up to around 24% in 23. So let's dig into the last mile strategy. Lasse?
For the last mile for 2021 to 2023, if we take a look into the last mile over the next 3 years, then we generally expect to maintain a very strong position and subsequently also strong earnings. Specific for 2021, we continue to focus on optimizing the core business and the operation. Corona is affecting most of our customers who had to keep their stores closed in January and February in Denmark. However, many has developed click and collect solutions and have removed some of their media investments, but they maintained their leaflets, their unaddressed leaflets. Right now, some of the stores in Denmark has opened again, where others have continued to close completely. The grocery stores and supermarkets in Denmark have increased their sales significant in this period. For the 3 weekly newspapers, we expect that the lack of advertising sales will continue to result in thin and light newspapers as long as Corona affects our society. We will increase our focus on acquiring new business by increasing our presence in selected mail, and not at least by further developing of our collaboration with Deutsche Post in Germany. Overall, we expect that Corona in particular will have some significance for the top and bottom line, and therefore we guide the turnover to 840 to 870 million Danish kroner and the EBIT in the range of 210 to 230 Danish million kroner. In 22 and 23, we will have continued focused on the core business. We will increase in selected mail and direct mail. We will grow in Germany and explore other opportunities to create business internationally. We will do that on the base of green technology and green products that we have developed in Denmark over the last 8 to 10 years. Overall, it's our ambition to be able to maintain our strong business throughout the period, stabilize revenue, and deliver a profit margin of around 24%. Henrik?
Thank you. Next slide, please. Thank you. If we look into the digital services, Boligportal, Ofir, and Bekey, our strategic focus areas is that by now we had 3 focused businesses with great digital platforms and infrastructure, and I think that we are now on the path of reinforcing this growth that we've seen for the past year. We also seen that we can do a growth of 20% revenue, and we can have high EBIT margins in, for example, Boligportal, when we do things right. So we will continue to scale that in our home market in Denmark with more products, more volumes, and more customers on board. But we will also seek opportunities internationally. We are on the Swedish market with the Boligportal, and we are in Norway with Bekey, and I think that we will strive to go further international with our platforms. We have great platforms differentiating themselves in the market in Denmark and also in Norway and Sweden by now. So we'll see to go from there. As Kåre mentioned, we have reserved funding for acquisitions up to 200 million kroner. We say in our reporting. And what we're looking for is opportunities that can create synergy to our existing businesses in the current markets that we are in, so that maybe go deeper in the value chain in the companies like Boligportal, for example. But we will also look for international opportunities, helping us to scale faster abroad. If we look at the guidance for 2021, we're looking at raising the revenue to between 145 and 155, and have the EBIT go up further. And we are looking a bit further ahead, 22, 23, to have this 20% annual growth rate on an overall level, excluding acquisitions, and an EBIT margin of 25%. Next slide, please. The main areas that we're looking at in Boligportal is that we will continue launching integrated services in this end-to-end rental platform to reinforce our position with the landlords and also help the tenants have an efficient way and secure way to find a place to live. And we will continue to secure stable income and revenue streams with the recurring revenue, such as subscription services for landlords and tenants, and also software service business models in a more advanced way than we have had up until now, and we are doing that right now. Then, of course, the new platform that we have launched, we will roll out the service concepts and service agreements that we develop in Denmark and Sweden on the same platform. Of course, with a few moderations, so that we have a product market fit in Sweden and Denmark, respectively. In Ofir, we don't have a big market share in Denmark, but I think that we have huge opportunities to grow from where we are now. We have a strong data-driven core. We deliver great effect to our customers. So I think that we're building on the position that we have in the public sector. We can grow that. But we have huge chunks in the private sector that we can and shall win in the coming years. We will continue optimizing the platform and use data in a more clever way, so that we can be more precise, delivering better sales rates and also effect to our customers. And then we have still some work to do by having the Ofir brand be more visible out there. In Bekey, we will still invest heavily in having greater coverage in Greater Copenhagen and look for market entry in other big cities in order to strengthen our position in the stairwell segment, so that we can have more fuel the home distribution business. And I hope that we later this year can disclose some of the contracts that we are dealing with right now. So we will have more activity on this platform. And as I mentioned, more focus on internationalization as well. See if we have opportunities in the home care segment and the stairwell concept as well abroad. Next slide, please.
And then let me just summarize the ambitions for 22 and 23 with a number perspective, as I am the CFO. Overall, for all our group, we see a 3% annual organic growth rate going forward. So when we say organic, this means that should we acquire businesses, that would not be included in this ambition for the revenue going forward. And as I said, this growth rate is based on a stable revenue in the last mile businesses and around 20% growth rate in the digital services. EBIT margin wise, we see it go up to around 24% in 23 for the group. And as we have also illustrated here, we see a stable high EBIT margin for the last mile business and an improving EBIT margin going forward for the digital services up to 25% in 2023. And then for the dividend side, I mentioned we plan to pay out 5 kroner per share for 2020. It's also the ambition to, when and if we fulfill these ambitions for 22-23, it's also the ambition to pay out a dividend of 5 kroner per share for each of the financial years 21 to 23. The next slide, please. So in the near term, what's the expectations and the guidance for 21? We have looked at the expectations for last mile and digital services. I'll just add to this, just on the back of the 22-23 ambitions. The reasons why we see a slightly decline in the revenue in last mile in 21 is because of the COVID. This is also why we do expect that the second half of this year will be stronger than the first half because of the COVID. And the reason why we also see a revenue increase in digital services in 21 of around 14% and not the 20 I just mentioned, that's because there is some delay also in the introduction of the new platform in bolaget that Henrik just talked about. So therefore, we will also see a second half being stronger than the first half. So overall for the group, we expect a slightly lower revenue between 985 and 1,025, down from 1,045 this year, and an EBIT at around the same level between 230 and 255, where we did 240 this year. So slightly lower revenue and EBIT on par with 2020. And next slide. The last thing I'll share with you is that we have also in 2020 done some work in terms of our approach to sustainability. And we have performed a general mapping of our role as employer, market player, corporate citizen, you will. And the board has established a sustainability committee that in 21 will establish sustainability targets for each of these areas that we have now identified. So we look forward to coming back with more on this at a later stage. This was what we had planned.
Super. Thank you very much for the very detailed presentation. Henrik, you mentioned, and you can only expect a question when you say something like that, is that in terms of Bekey, you're working on in the stairwell segment on new collaborations to roll out maybe 2021. Is this companies like packaging companies that you imagine, like Bring.dk, UPS, these types of companies, or is it which segment should we be looking at?
I think that we're looking at all sectors delivering goods and services for people's homes in greater cities. So I think that we have a lot of interesting dialogues going on, and as I mentioned before, we hope to be able to disclose that later this year. But what we've seen is that we've really seen the interest from the consumers pick up on this, and we've also seen this going up further as a result of COVID-19, where people expect to have more things delivered at home. So definitely see a trend there.
So we'll understand more maybe in the second half of this year, or at least later in the year. A question for you, Lasse. Obviously, digital services is a small part of FK Distribution. You do sell some through different services. Is there no M&A opportunities within your spectrum? Now we've talked about the 200 million with the online services, but I guess FK Distribution, is there no M&A options within your field?
In the digital business of FK, it's a little hard to see the opportunities. But in general, there will be some possible ways to make a consolidation of this market, the physical market for distribution. But it's a little early to go deeper into that. We are screening right now our possible ways to go in that matter. But right now, the focus is on having a stronghold on our core business. And developing in Germany, as I spoke to earlier in this meeting.
And the revenue from Germany doesn't have the significant impact in 2021. Can we expect sort of in the strategy you rolled out to be a larger portion of your business? And you know.
Yes, but it will not be a game changer standing alone. It will not. But it's a way down in Europe for us, so you can say.
Okay. And for you, Henrik, sorry about this call, but now we'll talk about the businesses. For you, Henrik, maybe just a question on that you're turning your model into subscription-based model to get more recurring revenue. As I understand, you also get less seasonality in your business. Could you just talk about the transition from the first half to the second half of 2021, where it's a little bit slow in the first half?
Yeah, of course. But what we see is basically that we have this very strong position with the rental platform in Denmark, but mainly as a marketplace. What we want to do is that we want to expand this from just being a marketplace to an end-to-end platform where we help landlords and tenants throughout their journey together in the property. So what we have done now is that we have basically looked at our data and looked at our product roadmap. We have been pulling out some traditional revenue streams, made some of them free in order to have more volumes in our business, and then we will basically, as we go through 2021, introduce more and more subscription-like revenue streams. So this is why we are kind of backloaded there, but it's done in a controlled manner.
Super, that makes great sense. That's all we have time for today. Thank you, Kåre, Lasse, and Henrik for joining us today, and have a great afternoon from my side.
Thank you.
Thank you very much.
And thank you for listening. Thank you for joining.
Hi and welcome everyone. My name is Eric Moberg. I'm an equity analyst here at ABG covering the online gaming space. And with that, I hand the word over to Richard Brown, CEO, and Tore Formo, CFO of Gaming Innovation Group.
Good afternoon. Thank you everyone for joining me today to introduce you to Gaming Innovation Group. If we move to the next slide for the agenda, I will give a brief overview of GIG, talk around the company's strategic positioning within the iGaming industry, followed by a business update and summary. So if we now move to slide 4, Gaming Innovation Group is split into 3 business units or divisions. Our platform division, which provides cutting edge and highly scalable technology for the iGaming industry. It is essentially the technical backbone of an operator that collates an array of services from the overall player account management, the CRM, responsible gaming and player safety tools, to the payment processing, and supported by a full real-time data platform that allows leading business analytics and the ability for complex regulatory reporting within the industry. We have a proprietary sportsbook platform that is operational in European markets, and our media division, which connects the end users or players to operators on a global level via high quality website assets tailored for specific markets and product verticals. Each division is then complemented with a managed service offering towards our clients. These services range from front-end development to customer operations and compliance, all the way through to digital media marketing. On the next slide, just briefly, GIG is listed on both the Oslo Bourse and Nasdaq exchanges, with offices in Malta, Spain, Denmark, with approximately 460 full-time employees. Our platform is licensed in 10 highly regulated jurisdictions, with an additional 7 in the integration pipeline, and our media business has primary assets in more than 25 countries. On slide 6, 2020 has been a truly transformative year for GIG. The company became a fully focused B2B business. We divested the B2C unit to Betsson Group in April of last year, improving its operational and strategic focus while also deleveraging the business. We've positioned the company for future growth. We've ramped up the platform sales with full focus on regulated jurisdictions and a retail gambling transition to online. We signed 13 clients in 2020 onto the platform and launched into multiple regulated markets. We've also made meaningful progress in the expansion and diversification of our media business, as the results in the latter part of Q4 and early indicators in 2021 have shown. Our org restructuring has also been completed. GIG has a sound cost base for operation improvement going forward. And we consider now also the sportsbook to be in a place where we can continue to support and grow that particular area of the business. COVID-19, of course, hadn't impacted the way we live in the world. GIG had 2 main priorities around the pandemic: the protection of staff and business continuity. Both we managed well with the swift, successful work from home response that enabled both of those priorities. As we've seen in many of the other industries, the pandemic has also accelerated trends there, with a decline in retail and an acceleration of online. The gambling industry is no different in that sense. The strategic actions we placed throughout the year have put GIG in a place to deliver growth in the coming years and therefore drive ultimately shareholder value. If we now move to slide 7, we can have a look at the financials for the year. 2020 not only saw the implementation of that strategic shift, but it also delivered a material year-on-year growth. Normalized revenues came in at 52 million, up 19%, and EBITDA came in at 10.7 million, which was up 212% versus 2019. And the normalized EBITDA margin for the year came in at 21%. If we now look over to a strategic overview on slide 9, we have a vision in the company to be the industry-leading platform and media provider, delivering world-class solutions to our gaming partners and customers. As mentioned, 2020 was a year that we put the building blocks in place to pursue that goal. We completed the strategic business review, moving into the business to focus entirely to the B2B. Not only did that improve the strategic focus of the business and the position of the company, but it also brought significant improvement to the balance sheet via a material reduction of debt. We delivered significant year-over-year growth, as the previous slide has shown, an overall sportsbook strategy and cost center, and worked a lot on the sportsbook strategy and the cost centers there to bring it into a sustainable position. Our focus around operational efficiency also resulted, especially in Q4, as we saw the results of those initiatives being put in place, with the OPEX being down 25% year over year on a comparable basis. As part of that a key part of that was the continued investment and development of our platform to always be moving towards the best-in-class and most modern technology stacks. As an example, despite the growing number of transactions on the platform and on the technical platform, the actual tech costs to maintain that reduced by around 60% year over year. On the next slide, we'll look at some of the industry growth drivers. There's significant growth opportunities in the industry, and the online gambling industry's kind of macro growth trajectory is outpacing that of the land-based and retail gambling segments significantly. And this is driven from two main factors. Firstly, the local regulation of the online gambling segment, and secondly, the digital adaptation of the consumer. On slide 11, we show some breakdowns there of the estimated growth per region. As you can see, the global trend shifts are happening at different paces. In some markets where digital adaptation is high, such as the US market, it is the opening up of local regulation that is driving that market size increase. And in some markets where it may have already been regulated, the consumer demand for online product is actually growing that market considerably. In a couple of examples here is Latin America or Eastern Europe, where it tends to be the case. In some markets, it's obviously a combination of the two points. GiG's focusing its efforts on these markets where these dynamics are prevalent in order to position the products both for where there is demand for them, but also to grow in conjunction with those markets as they continue to mature. If we now move over to the next slide, we'll see how we group the kind of industry into 4 clusters or target customers, if you will. The first one is being big brands and new entrants. Typically, these are kind of media houses or rights holders who, once markets locally regulate, they look to additional revenue streams to supplement their core businesses. They're leveraging market access, share of voice potential, etc. Secondly, and an important cluster for GiG is local brands with existing local consumer bases. This tends to be land-based or retail gambling companies present in markets that haven't regulated online yet. And once that regulation occurs or the demand grows, they then look to move their businesses to have an online offering. And as I said, this is a core focus group for GiG's platform business. GiG is well positioned with its technology and its product suite and operating services to actually help those businesses really transition into the online area. The second cluster we can kind of group together as emerging online brands or larger established online only gambling companies that have been active in the market for quite some time with a blend of locally regulated or Malta EU licensed companies. They tend to have more of their own tech media business. If we look on slide 13, this gives a very brief idea of where GiG is targeting. And as you can see, there is a much opportunity with large swathes of the global markets in that pre-regulated phase. So we have a very good starting point and a position to actually grow and expand the business as more and more markets locally regulate. If we now move to the following slide, that strategic position that we've developed has actually enabled us to sign a significant volume of contracts, 16 in the last 12 months, in a multitude of diverse markets, mostly regulated or soon to be regulated markets, where there is a clear path or legislation to regulation, such as Germany or the Netherlands. The majority of those businesses that we signed also have retail or land-based based off their use of their own brand and their own consumer base. If we move to the next slide, on slide 15, we can also give some more color on the timelines and the ramp periods of this software as a service model that we have in the platform. The SaaS contracts generate long-term and sustainable revenue source for GiG. The contracts have an initial average term of approximately 4 years, and the average contract value grows from around 0.6 to plus 1 million per year over that initial period. There is a ramp period from contract signing to launch, where we are building the technical specifications and or the bespoke development of front ends, which depending on the contract scope, the market regulators, related certification procedures, etc. once they then go live, then the operator continues to ramp up and grow its own business. GiG also benefits from that growing revenue base. The increased complexity that as we focus on locally regulated markets, which are all quite unique in the way that they have no uniform or unified set of requirements, means that the actual barrier to entry into entering multiple markets or these markets that we work in tends to be quite high. And that means that, of course, as we go towards the end of the contract, there is a higher barrier of entry for competition, which means that we're able to capitalize on the longer term based off the initial work that we did in say, years 0 and year 1. If we look at slide 16, just to summarize our strategic positioning and product offering, if we look at some of GiG's core strengths, we have an end-to-end product and service solutions for the iGaming industry. We have first-class technology and product offering, a deep operational knowledge and experience on a global level, and a strong track record in our partnerships. We've developed a strong omni-channel experience and an expanding media reach. These core strengths are always continually positioning us well to capture our target markets and move towards our long-term objectives. I will now move over to a brief business update. So if we pass to slide 18, some key takeaways for the fourth quarter. We have continued that positive development with significant year-over-year growth, both in revenues and EBITDA in the fourth quarter. We signed 4 new agreements in Q4, bringing it to a total of 13 for 2020. Our media business experienced positive development, finishing off with an all-time high in revenues in December, and first-time depositors generated, a key performance indicator, was up 36% year-over-year and 9% versus the previous quarter. The sports betting unit, as I mentioned, has gone through some significant change in its strategy and structure over 2020. That was completed, and as the results will demonstrate, the cost base now provides us with an ability to move forward for onboarding and strategic partnerships and the ramp up of the sales in that particular unit. 2 new brands were also launched onto the sportsbook, and the strategic initiative to close what we call our white label business model was also completed. On slide 19, we can just touch on the head figures there. So normalized revenues were up 38% year over year, and the EBITDA for the segment grew quarter on quarter by 29% and year over year by over 4,000%. On the next slide, I will just touch briefly on our EBIT performance, as it's an area, especially for new investors, it's been some questions over the last period. So I would like to spend a little bit of time just explaining that in more detail. The fourth quarter saw a marginal EBIT loss of around 100K and a marked improvement of around 1.5 million quarter over quarter. GiG currently amortizes a series of affiliate domain assets that were acquired in 2016-17 over 8 years. Now, this practice is not really comparable to many of our peers who, in most cases, actually define these assets with an indefinite life. We've taken and we moved into this very conservative approach. However, it impacts the reported EBIT result. It does not actually reflect in my opinion at least, that adequately describe the performance of the business, since most assets that we acquired are performing at the same or even much higher levels than at the time of acquisition. If you therefore consider operational EBIT, when excluding the amortization of those domains, the fourth quarter delivered positive EBIT of 1.5 million. For the full year, the operational EBIT was negative 2.7, which corresponds to an 85% improvement year over year. To look in more detail of the business units, if we move to slide 21, normalized revenues for the platform division came in at 4.9 million in Q4, 15% up year over year. I'm pleased also, of course, to see the platform deliver a positive EBITDA for the quarter of 0.2 million. We signed those 4 new agreements, as mentioned earlier, and the strategy to move the clients entirely to a software as a service model and discontinue the white label model is nearing completion. Just to expand a little bit on why we took the decision to close down the white label business, is that it has several objectives. One is to reduce the operational complexity of being a license holder and the overhead costs that go with it. There's also a meaningful reduction in business risk and strengthens the overall sustainability of the unit by not being a license holder going forward. Of course, the strategic move in the latter part of, we started it in the latter part of 2019, ended up with reduced Q-on-Q revenues of approximately $500,000 as we closed down and moved over 6 white label brands as they were discontinued. We currently only have 2 white labels still left, both of which have signed contracts to become software as a service businesses in the near term. Additionally, in the quarter, we saw the new German regulation impacted revenues in the platform by approximately 0.2 million. We quickly implemented the new technical changes for the new regime in Germany. We see great opportunity in the long term of the regulated German market. We've demonstrated that already by signing several new customers who would not have gone into the market had it not started to regulate. So we see that while there is obviously a short-term hit there, we see that the long-term gain of signing new contracts and increased demand for our products in that market will lead to a growth over time. We're very confident of that. So despite those kind of short-term impacts, I'm very pleased with the year-over-year development and the long-term outlook, and happy to deliver a positive EBITDA for the segment as well. Just on the following slide, just to reiterate, GiG is currently licensed in 10 jurisdictions with 7 more in the integration pipeline. 2 brands went live in the quarter, and we currently have 15 brands in the integration phase for launch. 76% of the GGR, so the operator revenue, came from locally regulated or soon to be locally regulated markets. And the software as a service and other revenues were stable quarter on quarter, despite that short-term negative impact from the regulatory framework in Germany. And as stated, as part of that white label discontinuation, GiG rescinded its Swedish and UK licenses to enable further cost reduction and risk mitigation. So now moving on to the media slide. The media business performed well, and it continued its positive development in Q4, finishing off the year with an all-time high in revenues. Revenues for the quarter came in at 9 million, a 20% increase year over year and 5% up versus the previous quarter. Our paid media division continues to see strong development as more and more markets open up to those particular paid marketing channels. Q&Q improvements up 11% and 87% up year over year. The EBITDA for the media services ended up 4.3, which was up 8% versus the previous year, and also the same corresponding percentage for the quarter. As I mentioned, first-time depositors, which is the number of customers that we refer to operators, increased by 36% year over year and 10% versus Q3. We saw positive developments, in particular in December, and that continued into January. WSN, our core market, core asset for the US market, reached all-time highs in Q4 and is now present in more than 9 states across the US. We maintain focus on delivering and developing that business outside its current core markets in 2021, and the diversification of the marketing channel acquisition strategy. If we move to slide 24, I can recap on the sportsbook. We saw a marked improvement in the cost base due to the various strategic initiatives through the year, resulting in a 78% year-over-year reduction in operating expenses. Therefore, the EBITDA landed in a negative 300K, an improvement of 1.5 million year-over-year. We signed a strategic partnership with BetGenius, and that was implemented into operations in the fourth quarter. Now all of our clients are running with the fully integrated sportsbook platform and technological solutions from GiG and the managed trading solution from BetGenius. We signed 2 new clients for sportsbook in Q4, and therefore we have 4 in the current integration pipeline. Also pleased to see our operator turnover increase by 16% quarter over quarter, and that business unit is now positioned to take on new clients, grow in the online gambling largest vertical, with clients operational both in Europe and in the US. If we move to now slide 26, so we'll have a quick update on 2021 so far. We've signed 2 new long-term agreements onto the platform already this year, one of which for the US market with a company called Playstar, that will roll out as New Jersey as the first market entry, and an additional contract for the German market with an established online operator who's launching a new brand once the market locally regulates casino. Sales pipeline remains strong. We have a globally diverse pipeline. The trend continues as land-based and retail businesses look to go online, and regulation continues to push that demand. One new client was launched into the complex and highly regulated market of Romania, a brand called Magic Jackpot, which is owned by Superbet, one of the largest sportsbook operators in the market. And our media division delivered an all-time high in first-time depositors in January. In January, revenues on a normalized basis were up 40% versus the same period last year for the group. If we now move to slide 27, we are now coming out of that transformative year with a strategy to pursue GiG's long-term financial targets. Our ambition is to deliver double-digit organic revenue growth over the next years, with an aim to achieve an EBITDA margin in excess of 40% by 2025. We will use the cash generated from the business to lower leverage ratios while also pursuing the growth opportunities in this growing iGaming sector. Now, if we just move to slide 28, I will summarize. GiG delivered significant year-on-year growth, both in revenue and EBITDA. We've signed a multitude of new agreements, securing geographical, regulated and diversified future recurring revenues, and the sales pipeline remains strong. We have a leading and growing platform business with approximately 80% of that in regulated or soon to be regulated markets, and a highly profitable growth-focused media business, including an emerging position in the US. GiG's proprietary sports betting platform has been placed in a sustainable long-term position to grow via new client onboarding and already licensed and operational in multiple markets. We have a proven operational excellence through the year with a revised B2B focus, and improved cost efficiency, and a growing sales pipeline, and an exciting onboarding pipeline. Thank you very much for your time today. I will pass you back over because I believe we have a Q&A.
Yes, thank you very much. You touched on this earlier. You have 60 new contracts signed during the last 12 months. As you mentioned, each contract adds roughly 0.6 to 1 million euro annually. Could you perhaps elaborate a bit more on the dynamics on the current incremental margins each contract have, and also in terms of investments going forward, what sort of investments are required going forward within this segment?
Yeah, certainly. So to start with the margin point there, we have a very good cost base as of today to manage the client onboarding. Of course, there's some capex required in terms of bespoke development for new markets that will become revenue generating once live, but that normally happens over a short period of time, 3 to 6 months. The platform is very robust, so the amount of changes required are not huge, like wholesale changes at all. Normally just amount to tweaks here and there that can take 1 or 2 months, depending on the scopes, sometimes a little bit longer. And those, once the client then goes live, the actual cost to maintain that client as they grow is relatively minimal off the cost base that we have today. So therefore, the margin continues to increase as the operator revenue increases, and we don't have any additional kind of investment required to continue to support that market entry once live. So therefore, the margin will continue to build as we build the revenues and the money flows through the P&L. Then with regards to the timing, I think the second point of the question was more about the incremental, how it grows. They can vary very much from the client to client. I think if you look at one of the previous slides where we see that some take between 6 to 9 months to start to scale, to become material, and others it comes a little bit quicker, and some take a little bit longer. It depends a little bit on the partner's marketing efforts, etc., and where they are positioned themselves. So we see probably a good guidance would be the 9 months to reach the materiality level where you start to really see once post go live. But in some cases that happens much sooner, and in some cases maybe a couple of months longer as well.
Thank you for that. That's some good color. And in regards of the pipeline going into 2021, if you're just comparing it to when you entered 2020, could you perhaps elaborate a bit on your view in regards of this?
Yeah, certainly. I think we see a growing demand in the sportsbook section of the pipeline. That's one item we can see. I think also in general the pipeline remains very healthy. We're looking at potentially some more complex deal structures as well. However, overall, it's a very, very strong pipeline. That fundamental shift in demand has not gone away from last year. If anything, it's accelerating. We see more governments looking at regulation of online. This obviously drives demand in those local regions. We have markets such as the Netherlands that is opening up this year as both kind of existing operators who look at the market or surrounding regions are becoming more and more excited about those regulations. So we see also in Eastern Europe and Latin America movement in the regulatory landscape. Ukraine, for instance, and then some various other countries in Latin America. And that's just pushing demand further as well, which means that the pipeline also remains very strong for us.
Got you. Thank you very much for that. And if we look at the affiliate business, you have a really strong momentum as of right now. If you look at the European side of things going into 2021, aside from Germany, are there any other markets that you assess will face headwinds on a year-over-year basis?
Not necessarily. I think Germany is the key one there. I think with regards to Holland, we used to have assets in Holland. We actually closed them down well ahead of the regulation around 2 or 3 years ago now. So we actually see that as more of an opportunity. Also with our strength in paid media, which relies on new markets opening up and being able to be active there. We can't do Facebook, Twitter, or Google PPC in unregulated markets. So when those markets kind of open up, that is actually new revenue streams that have become available and new markets available to us in that particular segment. And we've seen obviously some really strong growth driver in that part of the business. And I think that's something that we can continue to pursue and something I'm quite happy about. So in the European side, we've diversified a lot over the last couple of years in terms of markets. And that obviously, of course, helps with, if there are any unforeseen headwinds, to have a diverse business that's robust in that sense as well, means that we can continue to have lots of growth opportunities.
Fair enough. And then just like perhaps one last question on the US. You have some market access there, and you have some assets ready for that market. Could you perhaps give us some flavor on your view on what type of market share you're aiming to grab there within the affiliate market long term?
With regards to the affiliate market, I think it's a little bit hard to kind of be concise on the market share size that we're aiming. We have a long-term strategy with sports betting and casino there. We've taken a nationwide approach, which we believe will pay off in the long term. We're seeing progress month over month, but we're still relying on a multitude of states to open and the different positions that we take in that. So we're very pleased with the strategy and the way it's progressing. We look forward to more and more states opening up as well. And we will continue to pursue that. So we're happy with the position we have. It is a long-term strategy that we've adopted, which we think will suit also the long-term development of the US sports betting regulations, and the same therefore goes for casino as well.
Got you. Thank you very much, Richard. Thanks for doing this. It's much appreciated, and thank you all for listening in.
Perfect. Thank you very much.
Hello and welcome to ABG Investor Day. My name is Simon Jönsson. I'm an equity research analyst here at ABG, covering the tech sector. With me today, I have Babak Esfahani, CEO of Played. Babak will hold a presentation, then we'll have a short Q&A. Babak, the floor is yours.
Thank you very much. So my name is Babak Esfahani, co-founder and CEO of Played. So Played is a company working with smart lighting control. We are the leading provider of smart lighting control for the professional segment here in Sweden. And with our wireless technology, we create value all the way from installation to the end user experience. So if we move on to the next slide. So our offering consists of pucks. These are normally installed behind the actual switch or the outlet or next to the light fixture or in the electrical cabinet. And our product range is complete, meaning that we can handle almost any type of lighting installation. And we work with all of the major brands of switches and sockets and light fixtures. So we can handle everything, and we are compatible with almost everything on the market today. Yes, next slide. So we are today the preferred supplier amongst electricians in Sweden. So our products are installed by electricians, by professional electricians. And today we are the preferred supplier for those kinds of products here in Sweden. So the reason is that our technology provides electricians with benefits during the actual installation, simplifies the installation, increases the customer satisfaction, and also increases the sales for the electrician. Next slide. All of this is held together with our own wireless mesh technology. And this enables us to handle all types of installations, all the way from retrofit, where you only need one or maybe a few products, to a completely new build where you would need maybe 30 to 50 products. It also creates comfort for the electrician to have a normal electrical installation in the background, so no cables are needed or no modifications are needed to get all of the functionality. So it creates both comfort for the electrician and also comfort for the end user that does not have to invest in anything that affects their actual infrastructure in their homes. So this wireless technology is key for creating a robust wireless network that can hold all of our functions and features. Next slide. So this is the value chain. We sell our products through electrical wholesalers, and there are just a couple of few of them here in Sweden. The ones you see on the slides are covering 90% plus of the market. And they in turn sell to electricians, which is our main customer indirectly and or directly, and the indirect customer is the end user. And then the electrician installs typically as residential as well as commercial. So it can be homes and villas and apartments, as well as restaurants, offices, shops, and so forth. So both residential and commercial applications. Yes, next slide. So this is an example just to illustrate the benefits that we have for the electrician, and this is the crucial part for our business model, since the electrician is the one choosing our products for their own sake, independent of what the end user requests, because it enables their work to be done in a much more efficient way. And all of the end user functions and benefits are just icing on the cake, so to say. So this is a typical installation in a kitchen, a kitchen renovation, where you have just renovated the kitchen and have an electrician there for the electrical work. So you have two light sources in this picture. You have the ceiling light source, and you have the light source next to the cabinets in the actual kitchen. So typically you have two buttons controlling each light source in the kitchen entrance. And one cable is very easy to pull, and that's the cable to the ceiling light. However, to pull the cable to the cabinet light are in many cases difficult because the kitchen has been remodeled. There were no cabinets there before, so no cable has been pulled there. So you need to pull the cable through concrete very often, and then you need to have paint jobs to cover the cable and so forth. So it's a very complex and costly cable to pull. And this leads the installation to become much more unflexible and expensive, and very difficult for the electrician to carry out and also explain to the customer why the costs are so high. So if we go to the next slide, we can see how this is solved with our product. So the exact same dimmers that were needed before. So you needed 2 dimmers before, one for the ceiling, one for the cabinet. And instead of having the dimmers in the entrance, as you usually have, and pull the cables from the dimmers to the light sources, you can now move one of the dimmers from the entrance to the actual light, to the actual cabinet, because you have lights there, so you have power there, so it's very easy to place the dimmer there. And what you do then is you pick up your app, and just in a few seconds, you create a wireless cable from the cabinet to the entrance button. So it is the exact same material as it was before, 2 dimmers, but you save the entire cable pulling throughout the whole kitchen, and you also save the paint job and so forth. And this is just one example of a kitchen renovation. You have the same problems in offices when you remodel the offices for new tenants. You have the same, they want to move walls, they want to create new conference rooms and so forth. And then you have the same lighting issues with pulling new cables to accommodate those renovations. So this is a very common situation where the electrician can gain much more flexibility by using our products. And besides this, besides the benefits that the electrician have, the technology also gives the end user many benefits that they did not know that they could get. So after the installation is done, the electrician could say to the customer that I've also installed one of these smart dimmers or smart products, and the user gets an app which they get pleasantly surprised by. And then they also many times realize the potential of having these products in their home. So in many cases, they ask the electrician to build out the system to more rooms, so they can turn off everything from the hallway, from the beds, and voice control to Google Home and so forth. So it's also an automatic upsell for the electrician. So instead of working with traditional products as they were before, the electrician works with our smart lighting control products and gains a lot of benefits for themselves during the installation, as well as a happier customer that get more features than they knew they were getting, as well as an automatic upsell when the customer wants to expand the system. It can happen during the installation, or it can happen later on when the customer calls the electrician back to actually expand the system. So this is a simple explanation, a simple example to show the power of having our smart lighting control instead of the traditional one. So if you move to the next slide, I have condensed everything into this slide where the electrician uses our products, and they have one supplier for solving many things. So to the left, you have the replacements. So our product replaces single-purpose products that they were using before. We discussed the dimmer in the example above, but you have other products. For example, you have a product for wanting the lights to turn on when the sun goes down and turn off when the sun goes up, a so-called astronomical clock. Our products, since they are smart and connected, they have that functionality already within them. They know where the sun is and they can turn on and off the lights automatically. So it also replaces all of those products, which are very difficult to configure and many times more expensive than our product. So it not only replaces dimmers, it also replaces many other products that are on the shelf today. So the electrician can have one product and solve many single-purpose products that they were using before with easier configuration, better price, and so forth. Furthermore, it gives the same product gives them the flexibility to solve complex cable pulling by doing that wirelessly instead. as we discussed above. They can move the dimmer, and they can also place wireless buttons on the walls where there are no power at all to add even more flexibility. And furthermore, the products are also future-proof, because more and more requests are coming for smart systems. You have complex installations in offices, restaurants that want scenarios. You have homes that want voice control and smart lighting. And the electrician can use the exact same products. Again, they are comfortable with them, they know how they work, and they can do a complex installation with 30, 40 units and don't have to learn other complex systems that are cable bound, they need to be programmed and so forth. So just by having us as a supplier of lighting control, they can handle all these cases that they could not handle before. So the next slide. So this shows that with our products, the electrician gets many benefits, easy configuration, wireless cabling, can meet the future demands of smart lighting, happier customer, increased sales. And as well, the end user in form of residential, they can create scenarios and schedule lighting that they could not do before. They can control the lights now with the voice and the switch and the app. They can expand the system whenever they want. They can integrate with their future smart home. And the wireless cabling creates many benefits for them, because they can move a light switch from one side of the room to the other side of the room super easy, and also have much more choices during the actual renovations. And in the commercial side, they have the scenarios and scheduling lighting, which increases efficiency in their business. They can save a lot of costs due to having wireless cabling in renovations. They can expand when they need to. And they can also increase comfort and also efficiency with new types of human-centric lighting, when you actually control the light color depending on the usage. And this should be compared to traditional lighting control, which offers no value to no one except for basically turning on and off the lights. So tremendous value, and we hope that in the future people should work with smart lighting as a standard instead of traditional lighting control. And the next slide. So this is what we have been seeing in Sweden since we launched our products roughly 4 years ago. We have had very strong growth during the last 4 years. The compounded average growth rate have been 19% for these last 4 years. And except for 1 year where we increased our R&D capacity to be able to develop new future product categories, we have been profitable also during this during this strong growth. And all of this growth have been organic from day one, and we should continue to be that going forward also. And also we have very high built-in profitability in the business model. So we have strong gross margins already of 55% plus, and we see that steady state growth margins can increase. And when we decide to focus more on the profitability and not so much on the growth, we already can see very nice bottom lines, and profit margins of 20% plus is definitely reachable when we reach a more steady state. And the next slide. This next slide just looks at our future potential. How much growth do we have left? We are just getting started, we would say. So we have launched, or we are the market leaders in Sweden within this segment. And we have launched in Norway and in Finland, and we are scaling in Norway. So we're seeing a rapid increase in installations in Norway. And in Finland, Finland was launched a couple of months behind Norway, so we are seeing the same development happening there also. We're also entering the Netherlands as our next market outside of the Nordics, and we're just setting that market up, so it's not up and running yet. And besides that, we have a couple of interesting markets in the near term: Germany, Spain, Belgium, Switzerland, and so forth. There are many more markets to enter going forward. And the multidimensional growth also comes from us expanding our product portfolio with currently 3 new product categories that are in the making, which is not the same as the puck that we have today. 3 completely new categories that will come in the years to come, and that will increase our potential in all of our current market as well as all of the markets that we have not entered yet. So this creates this matrix of potential, and we can see that we have just got started. So if we have the same development in new markets, and if our product categories that are coming are as successful as the pucks that we have today, we have years of strong multi-dimensional growth left. So that was a brief presentation from us.
Thank you, Babak, for the presentation. And this last slide is a good segue into my first question.
Yes.
You just released a new dimmer and announced in the last report that another product is going into launch mode. And your portfolio of product has evolved in recent years. How will it evolve going forward?
What we've said in the latest release is that we are releasing a puck geared for the commercial sector. It's controlling a very popular standard within the commercial sector called DALI. And we also said that puck will sort of round off the puck series, which has grown from 1 product to 10 plus products currently. So we are looking forward to completely new product categories that will not be more pucks, so to say. And we are also going down the future looking at also product categories outside of lighting. But in the near term, in the near future, lighting related products will still be our main focus. But we have more categories coming that will be the main difference from what we have done so far, which has been mainly in 1 category, the pucks.
Okay, great. My next question is about emerging technologies in this market. And what kind of technologies do you think that the market, as well as your core customers, need looking ahead?
I would say if we look at lighting, where we are focused currently, connected lighting is of course what is happening now. All and most lighting are getting connected in some way. So looking down the line, I don't think that you would be able to. I think all lighting will be connected in one way or the other. One thing that is coming more strong, and especially in the commercial sector, would be the actual lighting color. Because now that you can control lighting with these types of technology better than you could before, you could actually manipulate the light, and that has an effect on people, on their energy levels and so forth. And that will also be technology that will be refined going forward. That lighting control enables us to actually use light in new ways, which could gain efficiency benefits in companies. People just feel better. So those are technologies that are still emerging. We will see how they will pan out, but those are potential benefits of actually having more advanced lighting control. Other than that, it would be integrating with the smart home, with voice control and other types of appliances, and making lighting a part of that ecosystem. So that I would say would be what we are looking forward to when it comes to lighting.
Great, that's very interesting. Could you maybe go through with us your plans for entering new markets? How do you expect to build a relationship with installers in new markets? Does the market environment differ in the countries you are targeting compared to Sweden?
Very good question. And one thing with our expansion internationally, which is both a good thing and a bad thing, is that in many countries it could differ how you actually install electrical components, how you pull the cables, and different types of way of doing stuff. That leads to barriers to entry for us to some market, but it also creates very high barriers for others to enter in markets that we are currently established in. So we choose our markets very carefully, trying to prioritize them in markets that are very close to main markets, Sweden and the Nordics, and there are many of them just like us, and the ones you see on the list are the first ones, so to say. But from there, it's usually kind of similar. You have the wholesalers, usually quite few of them, that sell to electricians and that sell to end users. So the pipeline is pretty much the same. So you start with building the relationships with the wholesalers, so they take the product in, and from there you work together with them to reach the electrician. So in Sweden, we have our sales force that works together with our wholesalers, our partners, and they reach the electricians through meeting them in the stores, breakfast, lunches, and so forth, but also meeting the electricians directly. So the sales process would be similar in all of these countries at least. And we deployed the same model in Norway and in Finland, and we are seeing great traction and similar behavior that we saw in Sweden. And we think that it will be similar in those markets that are similar to Sweden, and those are the ones that we have chosen.
Okay, thank you. My next question revolves funding. Will you be able to finance the expansion plans internally, or do you need external capital?
We did a share issue, a smaller one compared to our market cap in December, so quite recently. When we did that share issue, we said that we already have capital in the bank to handle our planned profitable expansion. Since we are profitable, we don't burn cash as much. So we said that we could continue executing our plan. However, we see some ways of accelerating. We have some product lines that are getting closer to market, and those we could accelerate. And we also could see some markets that are gaining some traction, and we could accelerate a little bit more there. So the share issue that we did had the purpose of giving us a little bit more acceleration. So the money we had before, or the capital we had before, was enough to keep the high profitable growth going. The capital that we raised in the share issue gives us a little bit more acceleration on top of that. But so far, we definitely have the capital needed to grow our current plan going forward.
Okay. Fundamentally, what kind of guidance are you giving the market? You mentioned 20% margins in a steady state scenario. When is that reachable, and is it possible for you to continue grow at this current rate, you think?
We don't have any official guidance on these things for the market. We have discussed our profit margins loosely, as we have done also here. So what we say is that there's a very good profitability within our business model that we could see. So if we were today to optimize for profits and not expand our product portfolio and expand our market reach, we could reach well above 20% in profit margins. So there is a very good profitability within the business, and that's why we communicate these steady state numbers. But when we reach them, I would say it's we will continue. I think that we will continue to increase the profitability year by year while still having this strong growth. But I cannot really give a guidance of when we will reach those exact numbers, because we don't have any clear plan of reaching a steady state yet. As you can see on this last slide, there's a lot of potential left, and we prioritize growth and taking market shares and establishing ourselves in new markets firstly, since we believe that there is a window that is open now in this technological shift from traditional to smart lighting, and we want to establish ourselves in as many markets as possible before that window starts to close. So no official guidance, just more rough numbers of the inherent potential in the business.
Okay, I understand. So one last question. On a more broad level, what's your most important competitive advantage, according to you?
In the long term, I would say definitely that we do everything in-house. So we have control of all facets of our technology, everything from plastics to electronics to app to cloud, and that gives us a the core competence and the full control of the experience to continue innovating at a fast pace, and also be able to control everything to create the best possible product going forward. Besides that, of course, that we have a good head start in this business or in this segment. And also, I would say another is that we don't have any baggage, so we don't have any other types of product portfolio or legacy products or traditional product lighting control. So we focus on only smart lighting, and we believe that to be the future. So that's also a benefit. So having everything in-house, no baggage, and also being in a good position to begin with.
Okay, I think that's all we had time for. Thank you so much, Babak. Take care. Goodbye.
Thank you. Take care. Bye-bye.